Hello champions, if you are somebody who has decent knowledge in law concepts but is struggling with presenting answers in the examination, then this is for you. So I am bringing here for you 12 hours of law writing practice where we will not be just discussing questions, we will actually be writing the answers together to 30 important questions. See, there's a difference, okay? Everybody will tell you how to present. Everybody will discuss with you how to present, but very few people show you how to present. So what you will be doing with me is, we will not be just discussing the questions here. We will take a question. In that question, whatever are the concepts involved, we will first quickly revise those concepts, and then we will actually write the answers down, pen, paper and practice. Line by line, structure by structure, exactly how you should be writing the answer in your examination as well. This way guys, you will be able to build that presentation muscle of yours well before the examination. And see, I'll tell you something very important, okay, which I'm very sure will make sense to all of you watching this. When it comes to a practical paper, how do you study? You sit with your pen, paper, calculator, you actually sit and solve, right? So you have that sort of practice of writing when it comes to practical papers. But when it comes to theory, how do you study theory papers? How do you study law, audit, SM? How do you study? You're either watching something or you are sitting on your own and you're saying and seeing and you're studying on your own that way. You're not writing anything major. So when it comes to theory papers, if you expect yourself to directly go into the examination hall and to be able to, write answers in a flow and finish the whole answer paper in 3 hours, it might get a little difficult. So in an ideal scenario, in an ideal situation, you should be doing some writing practice every day in the last 1 month especially. I'm not saying 1 hour or 2 hours of writing practice every day. I'm saying one question every day you should be writing, guys. But however, you do not have that patience to sit and write on your own, nor do you have the time and energy to first look for a question, then write the answer, then get the presentation checked from somebody. That's too much time and energy that we are spending on presentation in the last 1 month. So that is why I've brought this for you absolutely for free, a very structured and meaningful method of presentation. Alright, trust me when I say this, you will benefit from this immensely. Now there are 30 questions. How, when and where you want to do it, it's up to you. But I'll tell you, if I were in your place, what I would have done. Towards the end of the day, when I have absolutely no energy left to learn something new, towards the end of the day, when it's the least productive time of my day, that is when I would spend on doing some writing practice. That way, writing practice is also getting done and my non-productive time is also getting utilized. And not too many questions in a day, guys. Maybe 1 or 2 questions in a day and we get done. In these 12 hours, in these 30 questions, I've touched upon each chapter. So from each chapter, you will find 2 or 3 questions from each chapter, from company law also, from other laws also. So through these 12 hours, through these 30 questions, 3 things will happen. Number 1, you will get this writing practice that I'm talking to you about, some writing before you go into the examination hall. Number 2, the second thing is, guys, see, understand that knowing concepts is one thing and communicating it to the examiner is a totally another thing. They are 2 totally different ball games altogether. So no matter how nicely you know the concepts, unless you know how to present it and communicate it to the examiner, it may not really work out. So the presentation part will nicely get taken care of through these 30 questions. You will get to know exactly how much to write, what to write and how to present, both for case study based questions also and for direct theory questions also. And number 3, of course, you will end up getting a revision of the concepts which are involved in those questions. Alright. Now, in case you want to get a proper concept revision, the marathon video I have already uploaded on my YouTube channel. I'll put the link of that as well in the description below. We already have around 45,000 views to that video. Now this video, yes, this marathon session, you will be finding it very different from everything else which is available out there, because even though it's a marathon session, even though it's a revision session, trust me, you will definitely find in each chapter, in each topic, some concept which you had not known before. Because even though it's a revision session, I have ensured I do it in as much depth as possible, and I have not covered just the important topics or the difficult topics. I've covered every single concept in that particular chapter in the marathon video itself. Now, yes, some chapters are still pending over here, like FEMA. Then your LLP Act and your foreign companies, this is still pending. This I will upload probably in 7 to 8 days. I'll try uploading this as well. Alright everybody, so that's it. This is it about the introduction I wanted to give you all before I let you start the writing practice. Now you can begin. Alright, so let's begin everybody. Let's start. We are starting off with our writing practice sessions for your corporate and other laws paper. We are not going to be just discussing, we're going to be actually writing the answers together. Alright. How are we going to write? Are we going to write leisurely, like it's a walk in the park, slowly, aram se, okay, like this? No. Last 5 minutes of the exam, how fast you will expect yourself to write? Last 5 minutes, that speed we will write, because we're going to build that pace. We're going to train ourselves to build that pace. Hands will hurt. Hands will hurt. But you tell me, in those 3 hours in the exam, even if hands are hurting, you will still write or not? Will you say, hands are hurting, balance paper, I will come tomorrow? Will you say, no, right? So same way, even here, hands will hurt, but you got to persist. You're going to imagine that you're sitting in the examination hall, those 3 hours. What do you expect from yourself over there? That same thing you will be doing with me. You tell me, let's say there are 2 students, okay? Both the students have amazing conceptual clarity. Both have learned from the same faculty. Both have amazing conceptual clarity. Both know all the concepts. But still, why is one student getting 4 out of 5 and another student is getting 1.5 out of 5? They both have conceptual clarity, but why is one student getting 4 and the other student is getting 1.5? Where is the gap? The gap is in the way in which you write. What kind of language are you supposed to use? What kind of legal keywords are you supposed to use? All of that makes a huge discussion. It makes a huge difference, and that is what we are going to be doing across these 12 hours. And whatever writing I'm going to make you do, guys, it's not random writing from my mind. It's not like that. What I have done is I have sat and analyzed the rank holders' certified copies. There is something that is working out for them, right? There is some style which they are following which is working out for them. That same style, if we try to incorporate in our answer paper, then even we get that same score. Because trust me, everybody has amazing conceptual clarity. When it comes to law, at least, conceptual clarity is at the peak for everybody. Everybody has a knowledge. But there is something that the rank holders are doing different, because of which they are able to score in 80s, but we are getting stuck in 40s. So that is what our whole objective is, that what is their style. We're going to sort of try to replicate their style. What works for them, if we try to replicate, even we will be able to push our score higher. That's the whole objective. You understood, everybody? Because see, I'm very sure you will agree with what I'm telling you now. If I do amazing preparation, but okay presentation in the exam, then what will my score be? Somewhere in 40s and 50s I will land. But if I do good preparation and I also do good presentation, I will reach the 80s. Is an 80 possible in law? It is possible in law. The last batch only we had a student who had 82 in law. So 80s are possible in law. In fact, I am not even exaggerating when I say this. In your group 1, your most scoring paper is the law paper, provided you know exactly how to write. If you don't know how to write, even if you have good preparation, you will land only in 40s and 50s. So that gap between conceptual clarity and communication of that concept, that gap is what we're going to fill together. You're understanding? See, in the examination, I tell you about, I keep telling you this even in the DT workout batch now. I keep telling you that, you got to show off your knowledge to the examiner. Show off to the examiner that how much you know, right? But then don't you think I also have to strike a balance? Because I have only 3 hours at the end of the day. So yes, I have to show off my knowledge, but I also need to know how much to show off. So that is that balance, how to strike, all that you will understand as I, discuss these questions with you one after the other. So ensure that these 30 questions you consider as top questions, because concepts involved in these questions are highly probable in your examination, either as a full-fledged question or as MCQ. Somewhere or the other, these are like important questions. Okay, guys. So on that note, let's begin. Let's start off. My very first, one second. Yeah, so my very first discussion that I'm going to be having with you now is from this question. My very first discussion with you is from this basic concepts chapter. In basic concepts chapter, you have these different kinds of companies, right? Now, when I talk about the different kinds of companies, there are some really important ones. Like, for example, 1% company, then you have the Section 8 company, then you have small company, then you have holding subsidiary company, and then you have this listed, unlisted company. This is like the list of the most important different types of companies. companies. Out of these different types of companies, it is highly probable that you will be getting at least one question in the exam. Every exam, if you see, out of the different types of companies, they do ask at least one question. Okay, so targeting that, I brought this question over here. This is actually a May 2022 RTP question. Okay, but this question I do every time in writing practice, because through this one question, a holding subsidiary concept gets revised, listed unlisted concept gets revised, public private concept gets revised, a lot of concepts get revised to this one question. Okay, so we'll start with this question. This one question will take quite a lot of time, okay, because it's a nice big question. We will be writing the answer for this question, assuming it has come in the exam for 5 marks. Okay, so come on everybody, can we discuss the concepts first? Yes, are you ready? Yes, come on everybody, sit up straight, learning time. Let's do this the best that we can. Listen to me. My very first concept that I'm going to be discussing with you now is about listed and unlisted companies. Listed and unlisted companies. First of all, tell me, what do you mean by a listed company? A listed company is a company whose securities are listed where? A listed company is a company whose securities are listed in a recognized stock exchange. I'm not saying stock exchange. I'm saying recognized stock exchange. It makes a difference. Okay, so listed company means what? A company whose securities are listed on a recognized stock exchange. So similarly, what is unlisted company then? An unlisted company will be a company whose securities are not listed on a recognized stock exchange. Okay, now this is something which you would have learned in your CA foundation also. But about unlisted company, there are a lot more rules which we have to learn. Listen carefully. There are some 5 cases. In these 5 cases, even though the company has listed something on the recognized stock exchange, still that company is considered, deemed as if it is an unlisted company. How many situations? 5 situations. Situation number 1, I am a public company and I have not listed equity shares, but I have listed non-convertible debentures, and these non-convertible debentures, when I issued them how? On private placement basis. So in my first exception, I'm a public company. I have not listed equity shares. I have listed non-convertible debentures on a recognized stock exchange. And when I issued these non-convertible debentures, I issued them on private placement basis. Come on everybody, what kind of a company? Public company. I have not listed what? Equity shares. What have I listed? I have listed non-convertible debentures. And where have I listed the non-convertible debentures? On a recognized stock exchange. When I issued the non-convertible debentures, how did I issue them? I issued them on private placement basis. Guys, are you noticing something I have listed on the stock exchange? Are you noticing something I have listed, but still I will be considered as if I am an unlisted company? This is my first situation. Now comes my second situation. In the second situation, again, I am a public company. Again, I have not listed equity shares. This time, I have listed non-convertible preference shares. Where have I listed? On a recognized stock exchange. When I issued them, how did I issue them? I issued them on private placement basis. Again, same thing over here. I have listed something, guys. In my first situation, I listed non-convertible debentures. Now I listed non-convertible preference shares. Something I have listed, but still I will be treated as if I am an unlisted company. Are you understanding? Yes, guys, now come to the third subdivision. In the third subdivision, this time again I am a public company. Again, I have not listed my equity shares. This time I have listed both, guys. I have listed non-convertible debentures also. I have listed non-convertible preference shares also. Both I have listed. And where have I listed, guys? On a recognized stock exchange. And when I issued them, how did I issue them? When I issued them on private placement basis. In my third situation also, something I have listed, but still I will be considered as an unlisted company. Then comes the fourth part. In the fourth part, what happens is, This time I am a private company. This time I am a private company, and again I have not listed my equity shares, but I have listed non-convertible debentures on recognized stock exchange, which I had issued on private placement basis. This point will not get digested for you. You will think, ma'am, private company. How can private company list something? As per Companies Act, private company can't list. But as per SEBI rules, a private company can list securities only if some conditions are fulfilled. So private company, even if it has listed non-convertible debentures on a recognized stock exchange, even though something is listed, I will still treat it as if it is an unlisted company. Then comes the fifth situation, the last situation, guys. This time I am a public company. This time I have not listed equity shares on a recognized stock exchange, but this time I have listed equity shares where? In a foreign stock exchange. Foreign stock exchange means what? Section 23(3) stock exchange. There I have listed the securities. I have not listed in recognized stock exchange in India. Like for example, best example I can give you for this is Make My Trip. Make My Trip securities are not listed in India Stock Exchange, but they are listed in US. In US Nasdaq Stock Exchange, Make My Trip equity shares are listed. So Make My Trip will be considered as what kind of a company, guys? It will be considered as if it is an unlisted company. Why unlisted company? Because tell me, has it listed anything in India? Has it listed anything in recognized stock exchange? No. Where has it listed equity shares? It has listed equity shares only in a foreign stock exchange. This company will be considered as if it is an unlisted company. Foreign stock exchange is section 23(3) stock exchange. Are you following, everybody? Yes, so I have 5 situations. In these 5 situations, even though something is listed, the company is still considered as if it is an unlisted company. What are the 5 situations, guys? Come on, one last time. Are you ready, everybody? One last time. My first situation, I am a public company. I have not listed my equity shares on a recognized stock exchange, but I have listed non-convertible debentures on a recognized stock exchange, which were issued on private placement basis. In my second situation, I am again a public company. I have not listed my equity shares on any recognized stock exchange, but I have listed my non-convertible preference shares in a recognized stock exchange, and I had issued them on private placement basis. Third situation, I am a public company. I have not listed equity shares, but I have listed both non-convertible debentures also, non-convertible preference shares also, which were issued on private placement basis. In the fourth situation, I'm a private company. I have not listed my equity shares on a recognized stock exchange, but I have listed my non-convertible debentures on a recognized stock exchange issued on private placement basis. In my last situation, I am a public company. I have not listed my equity shares in India, but I have listed my equity shares in some foreign stock exchange. In section 23(3) stock exchange I have listed. In all of these cases, something is listed somewhere, but still the company will be considered as if it is unlisted company. So if any of these situations are fulfilled, we will treat the company as if it is unlisted company. Guys, is my first concept still clear? My first concept about listed and unlisted company? Yes, guys, can I take you forward to the second concept now, which is involved in this question? The second concept which is involved in this question, this is going to be about holding subsidiary company. Now, holding subsidiary relationship, the holding subsidiary relationship is created between two companies in how many ways? There are how many ways in which a holding subsidiary relationship is created? There are 3 ways in which a holding subsidiary relationship is created. In the first method, what happens is there is a company and then there is another company. This company, the first company, is controlling what? The first company is controlling the composition of board of directors of the other company. One company is controlling what? The composition of board of directors of the other company. Controlling the composition means what? Controlling the composition means this company can appoint, or this company can remove. Appoint or remove what? This company can appoint appoint or remove majority of directors of the other company. One company is having the power to appoint or remove majority of directors of the other company. For example, this company, holding company's directors will automatically become subsidiary company's directors, or holding company only will appoint who will be the directors in subsidiary company. In all these cases, this company is controlling what? Controlling the composition of board of directors. Controlling the composition does not mean you can appoint one or two directors. Controlling composition means you're controlling the majority of the directors of the other company. This is the first method. Then comes the second method. In the second method, again, I have two companies. This time the company is controlling how much voting power, guys. This time the company is controlling more than half of the total voting power in the other company. Now, more than half means what? Should I write it as more than 50%? Should I write it as at least 50%? Should I write it as at least 51%? Which of these is right? Multiple answers may be right. Which of them is right, guys? 1, 2, 3. Which of them is right? Only the first one, guys. Only the first one. More than 50%. See, why is at least 51% not right? Why is at least 51% not right? Because it should be more than 50. More than 50 can be 50.2 also. More than 50 can be 50.5 also. So even this will be considered in holding subsidiary relationship. Are you understanding? Yes, so in the second situation, one company should control more than half, more than 50% of the total voting power of the other company. Now, how are you controlling? You have two options. Either you can control more than half of the total voting power in the other company on your own. H Limited by itself, it's holding more than 50% in S Limited. Or it can also be through subsidiaries. It can also be through subsidiaries. Understanding, everybody? So point number two, company is controlling more than half of the total voting power in another company, either on its own or it is owning more than half together with its subsidiary. So along with the subsidiaries put together, company plus subsidiaries put together controlling more than half of the total voting power. What is the number over here? More than half of the total voting power. More than half means what? More than half means more than 50%. However, there is one small catch over here, which I'm hoping you guys know. If this company is holding shares in fiduciary capacity, will you consider it in checking the holding subsidiary relationship, guys? Fiduciary capacity, like a trustee. If one company is holding shares in another company in the capacity of a trustee, in fiduciary capacity, it will not be included when you're checking the holding subsidiary relationship. It will be ignored. Shares held in fiduciary capacity will be ignored while checking holding subsidiary relationship. Now comes my third method. Now comes my final method of creating holding subsidiary relationship. The third method, the final method, is very simple. A Limited is holding company of B Limited. B Limited is holding company of C Limited. Now, I'm asking A Limited, what is the relationship between you and C Limited? What will A Limited say? Oh, I have a subsidiary B Limited. My subsidiary is C Limited. You're agreeing with me? For A Limited, who is C Limited? For A Limited, C Limited is subsidiary, guys. Now, will subsidiary will also become the holding company subsidiary. In simple words, C is subsidiary of whom? C is not only subsidiary of B, C will also automatically become subsidiary of A. Now you understood? Subsidiary is also holding company subsidiary. Getting my point, everybody? Yes, Ravina, this is the deemed subsidiary concept. Subsidiary will be deemed to be the holding company subsidiary. So I have three methods in which holding subsidiary relationship can be formed. What are the three methods? Everybody tell me one last time. In the first method, one company is controlling the composition of board of directors of the other company. In the second method, one company is controlling more than half of the total voting power in the other company. In the third third method, the subsidiary's subsidiary. The subsidiary's subsidiary will also become the holding company's subsidiary. Everybody's crystal clear with all my three methods? So two concepts I've discussed with you. My first concept was about listed, unlisted company, and my second method was about a holding subsidiary company. Now listen everybody, let's proceed. Let's go to the third part. Let's go to the third discussion. The third conceptual clarity that you need to know to be able to handle the first question is about deemed public company. We have a concept called as deemed public company. Now, what do you mean by a deemed public company? First of all, the word deemed means what? Deemed means I'm going to assume. Deemed means it is actually not public company. I'm going to assume it to be public company. What did I say? Actually it is. Actually it is not a public company. So actually if it is not a public company, then actually what it is? If actually it is not a public company, then actually what it is a private company, guys. So I have a private company, and this private company happens to be a subsidiary of a public company, let us say. I have a private company which is a subsidiary of a public company. So this public company is the holding company and this private company is the subsidiary company. This public company is the holding company, private company is subsidiary company. Now every private company which is a subsidiary of a public company, this private company will be deemed to be a public company. Deemed to be public company means what? Even though in reality it is a private company, I will apply all rules and regulations to the company as if it is a public company. This company will have the word private in its name, but still I will apply rules and regulations. I will apply the whole Companies Act on that company as if it is a public company. Getting my point, everybody? This is the concept of deemed public company. Actually, it is not a public company. Actually, it is a private company. It is a subsidiary of a public company. I will treat it as if it is a public company, deemed public company. Got it, guys? Three concepts I've discussed with you. With these three concepts, you are now ready to take on my questions. Are you ready? Can we begin, guys? Yes. So first we discussed about holding subsidiary, then we discussed about listed, unlisted, and now we've learned about deemed public company. Now see, we'll next take up the question. We will read the question and then we will write the answer. When we write the answer, your answer should be having totally 4 parts. Your answer should be having totally 4 parts. You will first start with the provisions. All right. Even before the provisions, it is suggested that you should be writing a heading to tell the examiner that what is this question all about. So after the heading, you write the provisions. After the provisions, you write about the facts of the case. Then you write about the analysis. And finally, you write about the conclusion. The same 4 parts were spoken about in the webinar as well. We start with the provisions. Then we write the facts of the case, then we write the analysis, and then we write the conclusion. They gave one more alternative method, which is a secondary method of presentation where we write facts of the case first, then provisions, then analysis, and then conclusion. In both the methods, the difference is only in the sequence, but all the 4 things will be there in your answer. We will do the provisions, we will write the facts of the case, we will write the analysis, and then we will write the conclusion. Till here, did you understand? Now listen, do we have to write the headings? Do we have to write the headings, provisions, facts of the case, analysis? Do we have to write the headings? No. It is not necessary. They said it is not necessary to write the headings, which means we may write, we may not write. Both options we have. If we have both options, we will choose whichever is more convenient for us. Which is more convenient for us? Not writing the headings is more convenient for us because don't you think we will save at least some time? Otherwise, imagine in every question, provisions, facts of the case, analysis, conclusion. In every question, if we have to write, it will take time. So therefore, we will not write these headings. They've clearly mentioned it's up to the student whether the student wants to write the headings or not. They themselves pointed out that writing these headings will consume time. So it is preferable not to write the heading. Without writing the heading itself, I will show you how to communicate to the examiner. This is provisions, this is facts, this is analysis. How to communicate it to the examiner, that I will show you. Point number 1. Point number 2. In provisions, do I have to write the section number? In the provisions, do I have to write the section number? Do I have to write the rule number? No. They have very clearly mentioned. If you don't trust me, go and watch the webinar as well. It is available in the Board of Studies knowledge portal. They very clearly said if you write the section number, you're not going to get any extra marks. Not even half a mark extra you're going to get. But if you write the wrong section number, good number of marks are going to be deducted. So in the provisions, it's up to you whether you want to write section numbers or not. Had I been in your place, I would not have written section numbers. Because if I write the wrong section number by chance, silly mistake also, if I write a wrong section number, my entire answer will be struck off. My marks will be lost for that particular question. So should you write the section number? Very clearly they've mentioned that section numbers do not carry absolutely any marks, no marks at all. Then one student asked, so if it is, for example, if it is section 13 clause, if it's section 13 subsection 3, should I write the subsection number also? They said not necessary. If you write just section 13, even that is okay. But should you write section 13? If you don't write, that is also okay. Writing section numbers will not make any difference to your answer paper. But if you write the wrong section number, it will make a significant difference to your answer paper. Okay, and one more thing that you got to remember, especially when it comes to your law paper, if you're thinking that, ma'am, I want to write section numbers because then I will create a good impression on the examiner. Know that if you have to spend extra time to learn section numbers, then don't learn. Understanding, if you're able to learn the section numbers in the process of learning itself, then it is fine. But don't spend extra time to learn the section numbers, because know that are section numbers the only way in which we can create an impression on the examiner? Is section number the only way to create an impression? No. I will write good language. I will do proper presentation. That is how I will create a good impression on the examiner. You agree with me? Whether I write section number or not, there are other ways also to create a good impression on him. No, I will give him proper answers with proper language. That's how I will create an impression on him. It's a safer method to create impression on him. So therefore, section numbers, clearly they've said it is not required at all. And then one more thing, should you write the facts of the case? Facts of the case, they have not stressed upon it. They have said provisions have to be there, analysis has to be there, conclusion has to be there. Facts of the case, up to the student, may write, may not write, up to the student, but it is an ideal practice to write the facts of the case. But will the facts of the case carry marks? Facts of the case will not carry marks. So should you spend too much time here? No. For good presentation, we will write facts of the case, but max to max 2 sentences, guys, and that too wherever it is required. Apart from that, wherever we think it is not required, we will not write the facts of the case because it will not carry marks. But just for the sake of our presentation protocol, we will write the facts of the case wherever it is required. But how many sentences? Max to max 2 sentences. Clear? So with this, I've given you the small brief about how your answers are going to be. Now come on, let's read the question and then we will start writing. So the question says, following are some of the securities issued by different companies related with each other as follows. First of all, we have this company, Kleshrahit Limited. Looking at the name of the company itself, what are you able to conclude? What kind of a company is it? Kleshrahit Limited. Looking at the name of the company itself, you can conclude it is a private company, guys. It's a public company, guys, because it has the word limited in its name. It doesn't have the word private in its name, so it's a public company. Now it has listed non-convertible redeemable preference shares. It has listed non-convertible preference shares issued on a private placement basis in terms of SEBI regulations. So it's a public company. It has not listed equity shares, but it has listed non-convertible preference shares issued on a private placement basis. So how will you treat this company? You will treat this as if it is an unlisted company, everybody. Yes, then the question says it has the power to appoint 2/3 directors of Indirect Limited, which means what is the relationship between K Limited and Indirect Limited? Guys, K Limited can appoint 2/3 of the directors. 2/3 of the directors means K Limited can appoint majority of the directors. So what's the key word? K Limited is having what? Control over what? K Limited is having control over the composition of board of directors of I Limited. So therefore, K Limited will become the holding company. I Limited will become subsidiary company. Yes, no, yes, no. Yes, guys. Now come to Interim Unlimited. Looking at the name of the company, what are you able to conclude? Again, this is a public company, guys. It has listed non-convertible debentures issued on a private placement basis in terms of relevant SEBI regulations. It has not listed equity shares. It has listed non-convertible debentures. I will treat this company also as if it is an unlisted company, guys. Now, this company is holding 60% voting power in Sajakta Private Limited. So, this company is controlling more than 50%, more than half of the total voting power of Sajakta Private Limited. So, I Limited will become the holding company of Sajakta Private Limited, everybody. So, I Limited is a holding company. Sajakta Private Limited is subsidiary company. Now tell me, what about Sajakta Private Limited? Looking at the name of the company, what are you able to conclude? Looking at the name of the company, you will conclude it is a private company. But this private company is a subsidiary of a holding company. So even though it is a subsidiary, even though it's a private company, I will treat it as if it is a public company. This is going to be a deemed public company. Everybody agrees? We will apply all rules to it as if it is a public company. Now, this company has listed non-convertible debentures issued on a private placement basis in terms of SEBI regulations. It has not listed equity shares. It has listed non-convertible debentures on a private placement basis. So, even this company will be treated as if it is an unlisted company. Now comes the most interesting part of this question. This company holds 52%, which means more than half equity shares in Pratibodh Limited as an investment on behalf of another company in capacity of a trustee. Sajakta Private Limited is having 52% shares in Pratibodh Limited, but this 52% is only as a trustee. What's your key word over here? Sajakta Private Limited is holding shares in Pratibodh Limited in what capacity? In fiduciary capacity. Will you even consider this in thinking about holding subsidiary relationship? No. Is Sajakta Private Limited holding company of Pratibodh Limited? No. No. Why no? There is more than half of total voting power. But is Sajakta Private Limited owning more than half of total voting power on its own or through subsidiaries for itself? No, it's only holding this as a trustee in fiduciary capacity. This will not be considered when you're checking the holding subsidiary relationship. Okay, everybody. Then the question says equity shares issued by Klesh Rahit Limited and Indirect Limited are not listed in any of the recognized stock exchanges. So equity shares are not listed. Only these securities are listed. In the context of aforesaid facts, answer the following questions: whether the aforesaid companies can be considered as listed companies or not. We've already done that discussion. All of them are unlisted companies. And explain the relationship between aforesaid companies. Even that we have discussed already. K Limited is holding company of I Limited. I Limited is holding company of S Private Limited. But S Private Limited is not the holding company of P Limited. All clear? Now guys, listen. Are you noticing two subdivisions? Two questions. So even our answer has to be in two parts. Okay, can we start writing, everybody? Come on, come to your notebooks. Listen, let's begin. Let's write the answer. First of all, I'll write the question number. Where will I write the question number? Will I write in the margin or will I write here? We always write the question number here, not in the margin, because when we tie the answer paper, the margin gets hidden when we tie the answer paper. So therefore, to make it comfortable for the examiner, write the question number in the middle of the line. So what will we write here? Question number, question 1A. Okay, then how do we start the answer? I told you we'll start with the heading. So what is this first subdivision all about? Listed and unlisted companies. So let's give the heading listed and unlisted companies. Now no taking scale and all. In that same pen freehand, draw 2 lines. Now continue writing. Now start writing. What will I write first? I'll first write the provisions, right? So write down under this provisions, but will I write this heading? Is it necessary for me to write this heading? It is not necessary. So if I don't want to write the heading, then how will I write the answer? I will simply write as per the provisions of Companies Act 2013. As soon as I write this, what am I telling the examiner? That here comes the provisions. So without writing the heading provisions, I can simply write this. Whether I write the heading or not, this I anyways have to write, guys. Whether I write the heading or not. So I will not write the heading. I will just write this. That will itself indicate to the examiner that these are the provisions. Now, what are the provisions? Will we write as one big para or will we write in points? We will write in points. Let's orally discuss first. What are we going to write about? What are the provisions we're going to write about? What is involved over here? We will basically write about all these 5 points over here. We say listed companies, companies or securities are listed in a recognized stock exchange. Unlisted company, not listed, but 5 cases were deemed to be unlisted company. Let's begin. Write down as I call out. First point, listed companies are those, dash of which are listed in a dash. Can you fill in the blanks, please? Listed companies are those, securities of which are listed in a recognized stock exchange. Then next line, unlisted companies are those securities of which are not listed in a recognized stock exchange. Not listed in a recognized stock exchange. Done writing, everybody? Then after this, what else? What is the next provision I should write about? The deemed unlisted company, those 5 points. So write down the next line item. The following companies, prescribed in consultation with dash. The following companies prescribed in consultation with dash shall not be considered as listed companies. In consultation with whom? That list of 5 points is given in consultation with whom? In consultation with SEBI. Shall not, so underline, shall not be considered as listed companies. Now we'll write the points one by one. Under this first point, write down public companies which have not listed dash shares but have listed under this point 1, but have listed non-convertible debt securities issued in dash basis issued in dash basis. Fill in the blanks. Non-convertible debt securities issued in private placement basis. So, and what about this blank, guys? Public companies which have not listed equity shares but have listed non-convertible debt securities issued in private placement basis. Next line item, non-convertible dash issued in dash basis. Non-convertible what? This time, first point is non-convertible debt securities. Second point is non-convertible preference shares issued in what basis? Issued in private placement basis. Now, as you keep writing itself, keep underlining your key points which you want the examiner to see. Getting my point? Will you have the time to come back later? No, like debt securities, preference shares, your key points, keep underlining them then and there. Wherever I'm giving you blanks, they are all key points. Then come to your third point. Third point, both of the above. Both of the above. Then write down the second point. So first point was all about public company. So with this, we have completed our first 3 exceptions, guys. Now we have 2 more. Private company which has listed non-convertible debentures and public company which has listed equity shares in a foreign stock exchange. So let's write down the remaining 2 now. So second point, write down public companies which have not listed equity shares on a recognized stock exchange but have listed equity shares on a stock exchange in a jurisdiction specified in section 23 subsection 3. If you know the section number, write it, underline it, put it in a box. Don't let the examiner miss it. If you know the section number. If you don't know the section number, what will you write over here? You will simply write foreign stock exchange. Getting my point? Will this make any difference to your marks? It will not make a difference. If you know the section number, you write it. If you don't know the section number, you just write foreign stock exchange. So even the second point is done. Now only the last point is what we are left with. So write down the third point now. What's the third last point now? Private companies. This time we're talking about private companies which have listed non-convertible debt securities, issued on dash basis in a recognized stock exchange. Fill in the blanks, guys. Issued on what basis? Issued on private placement basis. So make sure you underline all your keywords. Public companies, not listed equity shares, but have listed non-convertible debt securities issued on a private placement basis. Non-convertible preference shares issued in private placement basis, both of the above. The next point is also about public companies which have not listed equity shares on a recognized stock exchange but have listed equity shares on a stock exchange in a jurisdiction specified in section 23 subsection 3, which means a foreign stock exchange. And the last part is for private companies which have listed non-convertible debt securities on private placement basis in a recognized stock exchange. So I'm done with the provision part, guys. They asked us whether the companies are listed or unlisted. I have written the entire provision about listed, unlisted companies. Now, after provisions, what comes next? Facts of the case. Here, tell me, is it possible for me to write facts of the case? What facts will I write? Don't you think here, if I write the facts of the case, I'll have to write the whole thing over here all over again? That this company has listed, has not listed, this company has listed this, has not listed this. That will become too much facts of the case. And will facts of the case even carry marks? No. So in this question, facts are not even possible to be written. So therefore, I'll straight away go to the analysis. Now, how do I tell the examiner that this is analysis? I will write applying the above provisions, applying the above provisions. As soon as I write this, I'm telling the examiner that this is the analysis part. This is the correlation of the provisions with the facts of the case. Okay. So how did I indicate to the examiner that these are provisions as per the provisions of Companies Act or as per the relevant provisions of the Companies Act? If you know the section number, you can write it over here as per section this of Companies Act. You can do that. In the second part, how will we indicate it as analysis? By saying applying the above provision. Now, in this question, analysis can be written in two ways. Okay, you can either write it as a sentence or you can write it as a table. I will show both to you. Three companies we have to talk about. No, first company I'll write it as a paragraph and show you. These two companies I will write it as a table form and show you. Whichever of the two you're more comfortable with, you can follow accordingly. So under this, write down the first point. Let's talk about the first company, Klesh Rahit Limited. Write down Klesh Rahit Limited, double underline. So we are first writing about this company. Under this write down, it is a public company. It is a public company. It has not listed its equity shares. It has not listed its equity shares, but it has listed what? Non-convertible preference shares, guys. So it has listed non-convertible preference shares, non-convertible preference shares on a recognized stock exchange, comma, issued on private placement basis. Thus, it is an unlisted company. Put unlisted company in a box. Thus, it is an unlisted company. Then write down the next point. The remaining two companies I will show you in the form of a table, okay? So what you do is you leave a line and you draw a table. The table will have three columns. Your first column will have the heading company. Your next column will be the broad column, heading analysis. And your last column will be the conclusion. Okay, so have a broad analysis column, guys. So under company, what's the next company's name? Ejusdem Limited. Write down Ejusdem Limited. In the analysis part, write down it is a public company. Same thing, guys. It has not listed equity shares but has listed what? Non-convertible debt securities, but has listed non-convertible debt securities on a recognized stock exchange, comma, issued on private placement basis. Issued on private placement basis. So what is our conclusion now? Thus, it is an unlisted company. Put the word unlisted company in a box. You understood the second method of presentation? First method, same thing I did. I wrote it as a sentence. Second method, I did it as columns. You can do either way. Both are fine, whatever you're comfortable with. Then write down one more company we have to write about, guys. Sajakta Private Limited. I am writing just whatever I've discussed with you. Together, you and I, together we concluded all this. So whatever discussion we did while concluding this, same thing only I'm making you write. Write the last part. The last part is Sajakta Private Limited. Sajakta Private Limited. In analysis, write down. It is a private company. It is a private company which is a dash of a public company. Hence, it is a dash. Fill in the blanks, please. Whenever I ask you to put a dash, you also just put a dash. I'll give you time to fill it. It is a private company which is a subsidiary of a public company. Hence, it is a deemed public company. Hence, it is a deemed public company. Continue writing. It has not listed equity shares, but has listed non-convertible debt securities issued on a private placement basis. It has listed non-convertible debt securities issued on a private placement basis. So what's your conclusion now? Again, it's a company. It has not listed equity shares. It has listed only non-convertible debentures. So even this is going to be an unlisted company. Thus, it is an unlisted company. That's it, guys. With this, our first subdivision is over. Yes, so first subdivision, any possibility of writing conclusion once again? That will be a waste of time. I've done it here itself, guys. I've put it in boxes as well. So when the examiner looks at my answer, it's going to be so easy for him to give me marks. I've put everything over here itself. I've written it in such a way that it catches his eye. Put the main points in boxes, underline your keywords, main points which you definitely want him to see, put them in boxes. All right, everybody. So with this, can we close the first subdivision? Can we go to the second subdivision? Everybody has understood? Listed, unlisted, you're fine? Come to the second subdivision. Explain the relationship between aforesaid companies. Remember, we concluded K Limited is holding company of I Limited because K Limited is having more than, K Limited is controlling the composition of board of directors of the other company, guys. So that is why K Limited was the holding company of I Limited. Then if you look at I Limited and S Private Limited, I Limited was holding more than half of the total voting power of S Private Limited. Because of that reason, this company became the holding of S Private Limited. But between S Private Limited and Pratibodh Limited, if you see, the S Private Limited was holding shares only in the capacity of a trustee. That is why it will not be considered as holding subsidiary relationship. So let's write that. Now, should I write the question number again? Or should I just write B? I should write the whole question number, guys. I should write whole thing question 1B. I should write it fully again by. If I write just B, examiner will have to go back. Oh, first question B. He'll have to come back. Don't make him do hard work. Understanding? Make the paper correction an easy job for him. Don't irritate him. Don't frustrate him. So therefore, write question 1B. Don't just write B. Don't make him go back. Understanding? Come to a fresh page. Come to a new page. Even if you have a lot of space in the earlier page, come to the new page, write question 1B. Okay, come on, let's write down the answer now. First of all, we'll write the heading. What heading will we write? What kind of relationship are we talking about? We're talking about holding subsidiary relationship. So give that as heading, holding subsidiary relationship. You can write in capital letters or in small letters, doesn't matter, guys. Just write it in the center of your line, double underline, that itself will indicate it's a heading. Okay, now under this we'll write the provisions. Again, same way like what I told you in the last question as well. I'll just write the, instead of writing the heading, I'll just write as per the applicable provisions. So write down the following are the applicable provisions of Companies Act 2013 and corresponding rules. The following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, what are the provisions we're going to write? The whole holding subsidiary relationship, we're going to talk about that. So write down now. A subsidiary company is a company in which the holding company under this, write down under this first point, guys, controls dash. I'm going to give you a lot of fill in the blanks. Be prepared. One company controls dash of dash, that is the holding company can dash or dash of its directors. Fill in the blanks, please. Holding company controls composition of board of directors. That is, holding company can appoint or remove majority of its directors. Then write down the next point under this. Controls more than dash of dash either on its dash or together with dash. However, shares held in dash capacity are not counted for this purpose. In brackets, write down trustee. Fill in the blanks, please. Controls more than half of total voting power either on its own or together with subsidiaries. However, shares held in fiduciary capacity are not covered for this purpose. Last point, write down. Also, a subsidiary also a subsidiary is deemed to be a subsidiary of the holding company. Underline the word deemed to be. Deemed to be subsidiary of the holding company. Yeah. Listen, guys, have we reconnected? Fine. So continue writing. You've written basically what we've written over here is about the holding subsidiary relationship. Now, what are we going to do after this? This is about the provisions part. Now, we are going to write about each relationship one by one. First, we will talk about K Limited and I Limited. Then we will write about I Limited and S Private Limited. Then don't you think between K Limited and S Private Limited also there will be a holding subsidiary relationship, guys? Because S Private Limited will become subsidiary of subsidiary. So deemed subsidiary. Then finally we will write about S Private Limited and Pratibodh Limited. So each relationship one by one we will write. So how will we indicate it is analysis? Guys, 1 minute. I am very sure many of you will have this doubt. Guys, if I am going to write this answer tomorrow, my language will be different. If two people are writing the answer, the language is going to be different. Students think, oh, I did not get marks in law, I did not get marks in auditing. Same thing in auditing also, because my language was not fine, I did not write keywords. You tell me, what does it mean by writing keywords? Does it mean I have to copy paste the whole book? Is it even possible? That's not possible. Keywords does not mean you have to write word to word. It is not, that is not required. Keyword means what? You tell me. Fiduciary capacity. Can you change this word? Can you write something else over here? Composition of board of directors. Can you write anything else over here? These are called keywords. These keywords have to be there in your answer paper. Now, how are you connecting the keywords? That you write your own English. You're getting my point, that you write your own English. Here I wrote not counted for this purpose. Is not counted for this purpose. Is this language written in the law? No. But is it possible for me to mug up the entire law? It's not possible. Here in this sentence, they are expecting the word fiduciary capacity. That word fiduciary capacity is there, I get a tick. The examiner, you know how he corrects your law paper, guys? He audits your law paper. You know what is the meaning of auditing? He is not reading your entire answer paper. He is auditing your answer paper, which means what? In the answer key, answer is written. If this is written, give half a mark. If this is written, give 1 mark. If this is written, give half a mark. Like that, breakup is given. It's not like school. In school, if you've written one essay, you wrote for 2 pages. Okay. At the end, you will get 8. Now, how did you get 8? Did you ever go and ask your teacher? Teacher will say like this only, like this only. This is how it will be. But did you ever ask what is the breakup of this 8? Where did I lose the balance 2 marks? Did she explain it to you? No. In CA, it's not like that. In your intermediate exam, if you got 3.5 out of 5, this 3.5 breakup will be there. 0.5, you wrote this, you got 0.5. You wrote this, you got 0.5. You wrote this, you got 0.5. That total of 0.5, 0.5, 0.5 put together, you got 3.5. That is how it's going to be. So when I say examiner is going to audit your answer paper, what I mean is, if you write extra, even if it is relevant, will he give you marks? It is not written in the answer key. You wrote extra points. Big answer you wrote, but none of that points in the answer are there in the answer key. But sort of relevant only. Will he give you marks? No. What will he do? He will audit your answer paper, which means he is looking at something in the answer key. He is looking for this word fiduciary capacity in this answer key. He will search in your answer paper. Have you written the word fiduciary capacity somewhere? He will see where have you written. What is that sentence? Is it making sense? Making sense, he'll give you marks. You're getting my point. That is how your answer paper correction happens. He doesn't read your answer paper first and then the answer key. He reads the answer key first and then looks for the answer key in your answer paper. So that keyword is there, he will get the mark. If the keyword is there, what sentence you have written around that keyword, that sentence should make correct sense, that's all. But that sentence language has to be your own words. You tell me, can you change this word composition of board of directors? No. Can you change the word fiduciary? No. Controls more than half. Instead of more than half, can you write more than 50%? Yes, it will mean the same thing only. All these are fine. I mean, your main points, your keywords have to be there. Connecting the keywords will be done in your own language. You got my point? So don't overly stress yourself about the language. Keywords have to be there. English can be broken English. It doesn't matter. All right, everybody. So don't be underconfident just because you're thinking your language is not great. Don't be overconfident because of that. If the keywords are there, even if you write in not so great English, it doesn't matter. You get the marks. Come on, let's continue writing. So we've written about all the provisions. We'll do the analysis now. Write down under this. Applying the above provisions. Again, make a table. One column for company, broad column for analysis, last column for conclusion. Under company, write down. First, we will write about these two companies. So write down Kleshrahit Limited and Indriya Daman Limited. Names itself are so big names in this question. That itself takes so much time. Come to the analysis, enemies. Come to the analysis. What will we write over here? Controlling composition of board of directors. Come to the analysis and write down as Kleshrahit Limited has the power to appoint two-third of directors of Indriya Daman Limited, that is power to appoint dash of directors, comma, it controls the dash of board of directors of Indriya Daman Limited. Fill in the blanks, guys. Power to appoint majority of directors. It controls the composition of board of directors of Indriya Daman Limited. In the conclusion part, write down, thus Kleshrahit Limited is the holding company of Indriya Daman Limited. Kleshrahit Limited is a holding company of Indriya Daman Limited. Got it? Same thing, you can also write it as a sentence, just like how I showed you in the earlier part. Then come to the second part, guys. After this, we'll write about Indriya Daman Limited and Sajakta Private Limited. So in the company column, write down Ejusdem Limited and Sajakta Private Limited. In the analysis column, write down Ejusdem Limited holds 60% voting power in Sajakta Private Limited. That is more than half of total voting power. In the conclusion part, come and write down there. Thus, Ejusdem Limited is the holding company of Sajakta Private Limited. Finished writing? Now come to the last part, guys. We will write about before we go to Sajakta Private Limited and Pratibodh Limited, can we write about these two companies first? That deemed subsidiary point. Let's finish off that first. So under your company heading, write down Klesh Rahit Limited and Sajakta Private Limited. In the analysis column, write down Klesh Rahit Limited is the holding company. Klesh Rahit Limited is a holding company of Ejusdem Limited and sorry. Klesh Rahit Limited is a holding company of Ejusdem Limited, which is the holding company of Sajakta Private Limited. That is Sajakta Private Limited is Klesh Rahit Limited's subsidiary. Now come to the conclusion column and write down. Thus, Sajakta Private Limited is deemed to be subsidiary of Klesh Rahit Limited. Deemed to be subsidiary of Klesh Rahit Limited. Then comes your last part, guys, which is Sajakta Private Limited and Pratibodh Limited. Write down. Sajakta Private Limited and Pratibodh Limited. Under analysis column, write down Sajakta Private Limited holds 52% equity shares in Pratibodh Limited as a trustee, that is in dash capacity. Shares held in dash capacity are not considered for determining holding subsidiary relationship. Fill in the blanks. That is in fiduciary capacity. Shares held in fiduciary capacity are not considered. So what is our conclusion? Our conclusion is, thus, there is no holding subsidiary relationship. There is no holding subsidiary relationship between Sajakta Private Limited and Pratibodh Limited. That's all, guys. One question would have taken quite a lot of time. I'm not saying that the same question is going to come in your exam, but any part of these two parts which we have written, they'll come as two independent questions. They will not put both the parts in the same question. Okay, so I hope you understood. I hope you got an idea. Yes, so you can do it in the form of a table like this, yes, or you can also do it as a para, like how I told you. Okay, that's it, guys. That's it with this question. Can we go to the next question? If you look at the questions, you will be having totally, you will be having questions of 14 marks each. Each question is going to be of 14 marks. 5 questions you have to write, each question of 14 marks. Now, inside each question, there will be subparts. Today's webinar, they said, a question will not be for more than 5 marks. Max to max, it's going to be for 5 marks, not more than 5 marks. Now, this question, can it come in your examination for 5 marks? No. If this question comes in your exam, what will happen is, either they will ask you just the first subdivision for 3 marks, or they will ask you just the last subdivision for 4 marks. So both the subdivisions together in the same question, highly unlikely in the examination because it's too much to write. Okay, so that is it with this question, guys. Can we proceed? Can we go to the next question? Yes, come on, everybody. Let's come to question number 2. Question number 2 is an interesting question. It's an examination question. This question was asked for 4 marks in the examination. It is from the share capital chapter. A small point about preference shares, which generally students tend to overlook. So I'll discuss the concept involved first with you, and then we will go to the question. Are you ready, everybody? First question, everybody is clear, I'm hoping. Can I have a quick yes, please? Come on. All right. Listen to the second subdivision now. Very simple point, guys. You tell me, there are 2 people in the story. We have company and the preference shareholders. We have the company and we have the preference shareholders. Now, what happened is, how does the whole preference shares concept work, guys? Tell me. See, the preference shareholders will give money to the company. Now, in return, the company will give preference shares to the preference shareholders. Now, we all know, right? Preference shareholders have to be redeemed. We can't issue irredeemable preference shares. They have to be redeemed. When the company redeems the preference shares, what does the company do? The company will give money to preference shareholders. Company will return the money to the preference shareholders. And what happens to the preference shares then? The preference shares are redeemed, right? They are over. They come to an end. This is the general process. I'm very sure everybody knows. But what if the company does not have money to repay, guys? Company will be able to redeem like this only if the company has money. No. What if the company doesn't have money to redeem the preference shares? In that case, company has an option. Instead of giving money to the preference shareholders, company can give further preference shares. What's the key word here? The key word here is further. Company can give further preference shares to the preference shareholders. Instead of giving money, company can give further preference shares to the preference shareholders. When the company does this, the preference shares will be deemed to be redeemed. The company did not redeem them by giving money. Company redeemed them by giving further preference shares. When the company does this, the original preference shares will be deemed to be redeemed. Only difference is, guys, instead of giving money, I gave you more shares. Alright, but to do this, don't you think we need preference shareholders approval, guys? Because they were hoping that they will get money. But what are they getting? They are getting more shares only. So to do this, company requires approval. Company requires approval of preference shareholders who are holding at least 3/4 of the preference shares. Am I saying that we need approval of 3/4 preference shareholders? No. If there are 1,000 preference shareholders, do I need approval of 750 shareholders? No. I need approval of preference shareholders who are holding 3/4 of the preference shares. Which means what? Let us say there are total 1,000 shares, 1,000 preference shares in the company. And these 1,000 preference shares are held by multiple shareholders. Let's say there are totally 10 preference shareholders. These 10 shareholders put together are holding 1,000 shares. Out of these 10 shareholders, there are 3 shareholders who are holding 800 preference shares. If they said, okay, is this condition fulfilled? 3 shareholders are holding 800 preference shares. Is this condition fulfilled? They said yes. Is this condition fulfilled? Yes. Because tell me, the shareholders who said yes, are they holding 3/4 of the shares? Are they holding at least 750 shares? Yes, they're holding more than 750 shares. You're understanding, everybody? I'm not saying that I need permission of 3/4 of preference shareholders. I'm saying I need permission of preference shareholders who are holding at least 3/4 of preference shares. And not just their approval, guys. I also need the approval of NCLT. Now listen to me. In my example, there were totally 1,000 preference shares. I had 10 preference shareholders. Out of this, 3 preference shareholders were holding 800 shares and they voted yes. The remaining 7 preference shareholders, they voted no. But still this condition is fulfilled. Company will go ahead and do this. Company will not give money. Company will give this further preference shares company will give. Which means, does it mean that these 7 preference shareholders, they are forced to take further preference shares? Don't you think it will be unfair against them? They voted no. They are not okay with further preference shares. They are saying no. Original terms and conditions was what? You will give money. No. Give money. What will I do with more preference shares? I don't want more preference shares. The 7 preference shareholders who voted no, first of all, what are they called? They are called dissenting. Nisma, look at the spelling. They are called as dissenting preference shareholders. These dissenting preference shareholders, they have to be redeemed forthwith. They have to be redeemed forthwith. What's the key word here? The key word is forthwith. In law, we don't say immediately. In law, we use the word forthwith. Forthwith means what? Forthwith means immediately. They have to be redeemed forthwith means what? Company beg, borrow, steal, do whatever. Give them money only. Don't force them to take more preferences. Don't have money, go do something. Beg, borrow, steal, do whatever. But pay them how? Pay them in money only. Don't force them to take more preferences. You have to pay them in the form of money and money only. Tell me, is this clear? Yes, guys. Yes. So this is the provision. The provision is company, if you don't have money to redeem preference shares, you can redeem the preference shareholders by giving them further preference shares. To do this, you need permission of 3/4 of the preference shares. You need permission of preference shareholders who are holding 3/4 of the preference shares, and you also need NCLT approval. If you do this, the preference shares are deemed to be redeemed. But however, if you have dissenting shareholders, don't force them to accept more shares. Instead, redeem them forthwith by giving them money. Last point in this concept, guys, last point, when the company is giving further preference shares, these further preference shares, company should know how many further preference shares to give. Company should know how many further preference shares to give. No, these preference shares should be of what value? These preference shares should be of what value? Whatever is the redemption amount due, whatever is the redemption amount due. If the company is redeeming the preference shares, how much the company has to pay to redeem the preference shares? What's the redemption value of the preference shares? That plus all these years there might be some preference dividend due, guys. There might be some arrears of preference dividend. For this much amount, the company will have to give further preference shares. So further preference shares have to be of what value? Whatever value is due on redemption plus preference dividend due. Understood, guys? That's all the concept is. Can we read the question and write the answer? Are you ready? Yes, come on, let's have a look at the question. How many times will we read the question? Once. One reading itself, entire question we should understand. Come on. SKS Limited issued 8% 1,50,000 rupees redeemable preference shares of 100 rupees each in the month of May 2010. So company is what kind of a company? Company is a public company. It has issued 8% 1,50,000 rupees redeemable preference shares of 100 rupees each. So how many preference shares company has issued now? 1,50,000 rupees. Each preference share is 100 rupees. Company has issued 1,500 preference shares in the month of May 2010, which are liable to be redeemed within 10 years. So yes, of course, they have to be redeemable debentures or redeemable preference shares only. They can't be irredeemable preference shares redeemed within 10 years. Okay. Due to COVID-19 pandemic, company is neither in a position to redeem the preference shares nor to pay the dividend. So how many defaults? Two defaults. Company is not able to redeem the preference shares also. Company is not able to pay dividend also. Company, with the consent of redeemable preference shareholders of 70% in value, made a petition to NCLT to accord approval to issue further redeemable preference shares equal to the amount due. Will NCLT give approval? Company, you don't have money. You want to give further redeemable preference shares. How many preference shareholders have to agree? What did we learn over here? How many preference shareholders have to agree? 3/4. 3/4 means what? 75% have to agree, guys. How many agreed over here? Only 70% agreed over here, which is within 70, which is less than 75%, guys. So will NCLT give approval? NCLT will not give approval. Will the petition be approved by NCLT? No. Can the company include dividend unpaid in the above issue of redeemable preference shares? What is your answer for this? When the company is issuing further redeemable preference shares, can the company include unpaid dividend also? Yes, of course, company, no choice. You don't have a choice. When you are issuing further preference shares, the further preference shares have to be for redemption value due and for preference dividend due. Okay, everybody. So can we begin? There are two questions that they're asking us over here. Let's start one by one and let's do this. Okay, come on. Will I put question 2A, question 2B? No, they did not put AB. We will also not put AB. We will write as one answer. At the end, we will give two conclusions. You will understand. Write down with me. First of all, I'll put my question number, guys, in the middle of my line. Question 2. Then I will give my heading, redemption of preference shares. Now, what do I write first? Provisions. But you know how to write. I will not write the heading. Instead, I will write the following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, write down the first point. We'll write the provisions one by one. Under this, write down if a company is unable to redeem preference shares, it can issue dash dash dash, equal to amount due on dash along with dash dash due with the consent of, under this write down in 2 points, with the consent of dash shareholders holding dash of preference shares. Next line write down and. Next line write down dash. I'll give you a moment. Can you fill in all the blanks, please? Lot of blanks I've given you. Are you ready, guys? Can you give me the answers? Have you completed filling the blanks? Tell me. If a company is unable to redeem preference shares, it can issue further preference shares equal to amount due on redemption along with preference dividend due with the consent of preference shareholders holding more than 3/4 of preference shares and National Company Law Tribunal. Can you identify the mistake, please? I've made a mistake in the answer. Can you identify the mistake? Good, guys. Will it make a difference? Yes, it will make a difference. You got to be careful. It is with permission of preference shareholders holding at least 3/4 of preference shares and National Company Law Tribunal. But don't you think again and again, if I write National Company Law Tribunal, it will take too much time in my answer again and again if I have to write the full thing. So what I'll do is in brackets, I will write tribunal. So hereafter in this answer, whenever I want to write about NCLT, I will just write tribunal. Okay. So this is my first point. And guys, did you notice what I did over here? Did you notice I wrote and in another line and then I wrote the second point? By doing this, what happened? Two things happened. Thing number one, I'm able to very clearly communicate the point to the examiner. The examiner, it becomes so easy for him to correct my answer paper. I am literally spoon feeding the examiner. Thing number one. And thing number two, don't you think indirectly I added volume to my answer paper? I'm not saying that, the length of your answer paper makes a huge difference. But psychologically, if I think, it should make some impact somewhere or the other. It might. So therefore, I did not do any malpractice also of writing irrelevant information over here. But at the same time, I was able to add some volume to my answer paper. All right, little things like these may make a small difference. Now come to the next point. Upon doing so, the preference shares shall be deemed to be redeemed. Underline the word deemed. Next line, write down the dash shareholders shall be redeemed dash. Fill in the blanks, please. The dissenting shareholders shall be redeemed forthwith. Now see, if you look at the provisions which I have written, I'm very sure you will agree with me that the provisions only will carry the most number of marks, guys. Obviously, provisions will carry the most number of marks. Now, if you notice, I've written everything over here. I've used the word further preference shares. I'll get my marks over here. Further preference shares for how much amount due on redemption plus preference dividend due. I'll get marks for this. With whose approval, at least 3/4 I've written. I'll get my marks over here. NCLT, I'll get my marks over here. Then deemed to be redeemed. This is going to be the key part. I'll get my marks over here. Dissenting shareholders, keyword, I'll get my marks over here. Redeemed forthwith, I'll get my marks over here. If you notice the concept when I discussed with you, everything I put in the concept, everything has come over here, guys. Yes, if I write my answer like this, the examiner doesn't have an option but to give me marks. He doesn't have an option but to give me marks. But will he give me full 5 out of 5? If it's a 5 marks question, will he give me full 5 out of 5? No. In theory, in law paper, in some direct questions, you can get full marks. But in case study based questions, you cannot get full marks. If you get a 4 out of 5 or if you get a 4.5 out of 5, it is awesome. A minimum of half a mark, they will by default deduct in case study based questions. Direct questions, they will give you full marks. But if you've written everything properly, but even if I've written all of these points over here, they will not give me full marks. That is understood, guys. That's how it is in theory paper. We've seen it from school. Theory papers, half a mark is always deducted. Right, guys? That is why, even in today's webinar, they mentioned this point. They said that when it comes to accounts, you can say, oh, 80 marks I wrote and came, I will definitely get 75 out of it. I've written 80 marks correctly. You can say that in accounts. You can say that in tax. You can say that in costing. But you can't say that in law. In law, even if you've written 80 marks, pakka if you've written, it is not necessary you will get 70. Because marks will by default be deducted in some case study based questions. In case study based questions, if it's a 5 marks question, half a mark will definitely be deducted. That is why they said in other papers, whether you're able to complete the paper or not, it doesn't really matter. Accuracy matters. But in law, it does matter that are you able to complete your paper or not. You need to complete your paper. That is why law paper is never as lengthy as other papers. Because law paper, it's more important for you to write answers to all questions. Only when you write answers to all questions do you get a good 80 plus score. That's what we're targeting. So if we want an 80 plus score, we have to write all the answers. We should be able to time ourselves properly and write answers to all the questions to be able to score well. Okay, so this was my provisions part, guys. Now after this, what will I write? The facts of the case. So I can write the facts over here, guys. But do you think it's required? This question was asked for 3 marks. So anyways, I'll show the facts of the case for you. Write down under this. I've written the provisions. Under this, write down In the given case, leave a line and write down in the given case. Under this first point, the company SKS Limited SKS Limited wants to redeem preference shares by issuing further preference shares. For this, it obtained approval of preference shareholders. For this, it obtained approval of preference shareholders of 70% in value. I've written the facts of the case. I just summarized what they've told me in the question. Whatever they've told me, I've just written it in the form of 2 sentences. Is it worth it to write beyond this? No. If I feel I don't have enough time, will I write this? No, because it doesn't carry marks. It's just a part of presentation protocol. So I've written the facts of the case. Now what comes next? Analysis. So after this, write down, leave a line and write down, applying the above provisions, comma, next line write down, company obtained consent of preference shareholders holding only 70% in value, comma, instead of 75%, in brackets write down 3/4. That is, company should have obtained consent of preference shareholders holding at least, show the calculation, 1,500 shares into 3/4 is how much? 1125 shares. Next line write down. Guys, this is one mistake which the company did, that the company took the permission of only 70%. Is there any other mistake that the company did, guys? There's actually one more mistake. Company was going to issue further preference shares only for amount due on redemption. But company should issue further preference shares not only for the amount due on redemption, also for the unpaid dividend. That also let's write down. Next line write down. Also, the company is issuing further preference shares. Also, the company is issuing further preference shares only for the amount due on redemption. It should also issue for preference dividend due. Next line, write down, hence, company has not complied with the provisions. Company has not complied with the provisions. Now, stop writing for a minute and listen to me. Provisions will have keywords. Analysis will be fully in my own words. Analysis, did you listen to what I said? Analysis will be fully in my own words. Now, after analysis, what comes next? Conclusion. How will I tell the examiner I am writing provisions? By writing the following are the applicable provisions. By writing this, I will indicate to the examiner I am writing provisions. How will I tell the examiner I am writing facts of the case? By writing in the given case. This itself will indicate to him this is facts of the case. How will I communicate to him that I am writing analysis? I will say applying the above provisions. Every question, this consistency we will maintain. How will I tell the examiner I am writing conclusion? I will write the word thus. This will indicate to him I am writing conclusion. Before I write the conclusion, I'll come to the question. I'll see what exactly is the examiner asking me. Will the petition be approved by NCLT? I will answer to the point. What will I answer over here? No. No. The petition will not be approved by the tribunal. Am I writing reasons here? Am I going to write why it will not be approved? All that I have written. Conclusion will be to the point. Same language which they have used in the question, same language, yes, no, to the point I will write and I will close. Underline the word no. Then second point, what are they asking us? Can the company include dividend unpaid in the above issue of redeemable preference shares? What will you say? Yes. Company should include unpaid preference dividend. Guys, I'm using the exact same words which they used in the question. Yes, company should include unpaid dividend in the above issue of preference shares. I'm using the exact same language. No writing extra over here. Conclusion has to be one sentence, to the point, yes or no, valid, invalid, true, false, to the point, one sentence. Getting it, guys? So this was my second question. This question would have given you a little better clarity about how exactly your answer has to be. All right. So can we close this question here? One more question we will write, guys. Then you take your dinner break. One more question we will try to squeeze in. I'm hoping everybody has understood. Yes. So I will. You got the headings. You understood the headings. I will say the following are the applicable provisions, and that is how I wrote the provisions. Then I wrote in the given case. This will indicate facts of the case. Applying the above provision will indicate this is analysis, and finally I wrote the conclusion. All right. Come on, everybody. Let's go to the third question now. My first question was all about holding subsidiary, listed, unlisted. My second question was all about redeeming preference shares. My third question is from the deposits chapter. Now, guys, listen to me. Everybody, Stop what you're doing and listen to me. Deposits. I keep telling you this over and over again. Deposits, charges, dividend, foreign company. The chapters which you compromise the most on, the chapters which you think are unimportant, the chapters where you don't spend time, the chapters which you don't do before the day of your exam, 5 marks, 5 marks, 5 marks, 5 marks, 20 marks. The chapter on which you spend all your time and energy, management and administration, your meetings chapter, minimum 4 marks, maximum 12 marks, can be as low as 4 marks also. Students do the biggest blunder, spend all their time and energy on this chapter and the share capital chapter. These two chapters, they income tax, PGBP, capital gains all the time. In costing, marginal costing all the time. In law, management and administration and share capital chapter all the time. Rest of the syllabus, Govinda. And what happens? Twisted questions come from here. Even after spending so much time not able to answer questions here, easy questions from these 4 chapters, but did not even touch these 4 chapters. Happens every time. You're understanding, guys? I'm very sure many of you will be resonating that yes, this is what I do. Know that this is the worst strategy for law. I'm not saying that these 2 chapters are not important. I'm not saying don't do these 2 chapters. What I'm saying is don't do these 2 chapters first. Always start with deposits, charges, dividend, and foreign company. Before the examination, before every examination, every attempt, I give a 1.5-day strategy. In that 1.5-day strategy, I always say that evening when you come back from your accounts exam, that evening itself, you finish these 4 chapters. You first do these 4 chapters, guys, because do you agree these 4 are all small chapters? Put together also, you have to study lesser than what you have to study in management and administration. Management and administration, how much time it will take you to study? But these 4 chapters put together also will take much lesser time than management and administration, and good number of marks. And one more thing, these 4 chapters, if you study properly, even if they want to twist it in the exam, they can't twist it in the exam, guys. They can't complicate in these 4 chapters. There is nothing in these 4 chapters to complicate. You're getting my point? And take any question paper and see, you will have this. Either in MCQs or in descriptive part, these 4 chapters put together will come for 20 marks. Make these 4 chapters your category A chapters. Every faculty says these 4 chapters are category C chapters. You might be finding it absurd that I am saying make this category A chapters. But guys, examination point of view, I have been giving this advice to students since the time I started teaching, and this advice has worked every single time, guys. You treat these 4 chapters as your category A chapters. Do these 4 chapters really well. First, you do these 4 chapters. Then you come to other laws. In other laws, you do FEMA and you do GC Act. IOS and all later. You finish these 4 chapters, then come to FEMA, then come to GC Act. 10 marks, 10 marks. You have already completed 40 marks of your question paper. You have not even learnt 40% of the syllabus, but you have completed 40 marks of the question paper. These 4 chapters and these 4 chapters, 40 marks done. Understanding, law is a paper, if you study with some strategy, it becomes very easy to score. So don't unnecessarily spend too much time on management and administration and share capital chapter. Always do these chapters towards the end. First finish other chapters, then come to these 2 chapters. All right, everybody, day after tomorrow, when I'm closing the session, I will tell you the sequence, in which sequence you should revise. When you're revising the day before the exam, when you're revising in this last 1 month, in what sequence you should revise, I will tell you that also before we close. Remind me. Okay. Anyways, come to the next question, everybody. One small question only. This question is relating to deposits. This question talks about one particular point, a simple point only. Answer my question, everybody. Can a public company accept deposits? Can a public company accept deposits? Can a private company accept deposits? Yes. A public company can accept deposits from whom? From public also, From members also. A private company can accept from whom? Can private company accept from public? No. Private company can accept only from members. So point number 1, public company can accept deposit from public and members. Point number 2, private company can accept deposit only from members. Alright. Now listen. Deposits. Whether you're a public company, whether you're a private company, deposits may either be secured deposits or deposits will be unsecured deposits. Just like loans, deposit will be secured or unsecured. If they are secured, you have to give some asset as security. No, that asset which you are giving as security, that asset should be enough to meet not only the amount which is due on deposit, it should also be enough to meet the interest amount. The asset which you give as security should be enough to meet the deposit amount and the interest amount. And also, can you give intangible asset as security? You cannot give intangible asset as security. Generally, to borrow loans, you can give intangible asset as security, but for deposits, you cannot give intangible asset as security. Let's take an example now. Let's say that the deposits due are 1000 rupees and interest due is 200 rupees. Total amount due is 1200 rupees. My company gave some land as security for these deposits, guys. Now this land, if you see, it has a value of 1115. 1115, this is a value of the land. Now my question to you is, are these deposits secured deposits? Are they unsecured deposits? Or are they partially secured deposits? Which is the best answer? Are they secured deposits? Are they unsecured deposits? Are they partially secured deposits? Terrible answers, guys. These are going to be considered as unsecured deposit. Know that there are only two types of deposits, secured and unsecured. Do you have partially secured? Partially secured is not even a category, guys. So you can either have secured or it can be unsecured. Tell me, did I give security which is enough for deposit and interest? No. I did not give security which was enough for deposit and interest. It was not enough for deposit and interest put together. So therefore, can I consider them as secured deposit? Secured means the security should be enough for deposit plus interest. Here it is not enough for deposit plus interest. So I will treat it as if it is unsecured deposit. And if I am giving securities, if I'm giving asset as security for deposit, I cannot give intangible asset as security. I can give only tangible asset as security. Is this point crystal clear for everybody? Yes, you've understood this point. Now can we have a quick look at the question? Come on, let's discuss the question. Perfect Limited Company raised secured deposit of 100 crores. Perfect Limited Company, what kind of a company? It's a public company. Public company, it raised secured deposit. Can it raise secured deposit? Yes. 100 crore rupees deposit on 13th June 21 from the public. Can public company accept deposits from public? Yes, public company can raise from members also, from public also. On interest at 12% repayable after 3 years. So what's the total amount due on deposit plus interest? Calculate and tell me. Deposit 100 crores, 12% interest. Tell me total deposit and interest amount is how much? Total amount due will be how much? Deposits 100 crores. Interest will be very good, guys. 100 crores into 12% into 3 years. 36 crores. So total amount which is due on deposit plus interest is 136 crores. The charge has been created within prescribed time in favor of trustee of depositors against a deposit taking following assets of the company as security. Land and building was given as security. Is it okay? Yes. Plant and machinery was given as security. Is it okay? Yes. Factory shed was given as security. Is it okay? Yes. Trademark was given as security. Is it okay? No. Why? Because trademark is intangible. Goodwill was given as security. Is it okay? No. So total amount given as security is how much? 100 crores, which is equal to the deposit amount. So therefore, these deposits are what kind of deposits? Secured, unsecured? they will be considered as unsecured deposits because is 100 crore enough to meet 136 crores? No. So therefore, these will be treated as unsecured deposits. Clear, guys? That's all with the concept. Understood? So explain the validity of the charge created. What will be our final answer? It's invalid. It will be considered as unsecured deposit because it has to be equal to the amount due on deposits and interest thereon. All right, and we will also stress upon the point that it should not be created on intangible assets. Intangible assets, it should not be created. Now, one small point. Did you understand this point? Charge has been created in favor of trustee of depositors. What does this mean? See, company will have many debenture holders, right? Let's talk about debenture holders. Company will have, let's say, thousands and thousands of debenture holders. They are secured debentures. So when the company is creating charge on its assets, why company is creating charge on its assets? You know what is charge? Company is giving asset as security to debenture holders, no? So that is called as creating charge. When you give a security, you call it as charge. So when the company is creating a charge on its assets, can the company create the charge in the name of thousands and thousands of debenture holders? Can the company say charge holder is equal to 1,000 debenture holders? Doesn't make sense. So when the company has debenture holders, when the company is creating a charge on the asset, the charge will be in whose name? In the name of debenture trustee. A debenture trustee, he is like the class leader of debenture holders. He is like the representative of debenture holders. So the company will create the charge in the name of debenture trustee. Same way, if the company has accepted deposits, if they are secured deposits, now company has to create a charge on the deposits, guys, charge on the assets. When the company is creating a charge on the asset, company will not create the charge in the name of each deposit holder. Instead, there will be a deposit trustee. The deposit trustee will be a representative of all the deposit holders. Company will create a charge in the name of that deposit trustee. You're understanding? Now, will you remember one small point I'll tell you? Make a note if you want to. Debentures. You have disqualifications, no, that who cannot be debenture trustee? Any person who beneficially holds shares of the company, any creditor of the company, you have that list, no, in debentures that who cannot be debenture trustee. Yes, same way you have in deposits also disqualifications. Who cannot be deposit trustee? Same way you have disqualifications in auditors chapter also. Who cannot be auditor? In your syllabus, you have 3 sets of disqualifications. Debenture trustee disqualification, deposit trustee disqualification, auditor's disqualification. Out of these 3 disqualifications, one at least will come in the exam. So all the 3 disqualifications you should be doing very nicely. Did you understand? Did you make a note? Debenture trustee disqualification, deposit trustee disqualification, and auditor's disqualification. Learn all the 3 really well. Don't skip these 3. Okay? Fine. So that is it about the discussion part. Let's start writing, everybody. Just 5 minutes. Small answer only. Give the heading. Question 3. Under this, write down the heading. Secured deposits. First, we'll write the provisions. The following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, write down point number 1. See, what are the points we're going to focus on? First of all, public company has accepted deposits from public. Let's write about that. When a public company desires to accept deposits, when a public company desires to accept deposits, it can accept deposits from both public and members. So this was the first provision, guys. Then second provision, if they are secured deposit, company has to create the charge within how many days? Are you aware of it? If they are secured deposit, company has to create the charge on the asset within 30 days, within 30 days of accepting the deposit. And then the charge has to be in whose name? In the deposit trustee's name. Let's write about that now. Next point, write down. If the deposits are secured deposits, comma, charge shall be created on the company's dash assets within dash days from accepting the deposit, within 30 days. On which assets? Tangible assets. Then write down the next point. The charge shall be created in the favor of dash dash. In whose favor? Deposit trustee. Okay. Then apart from this, what else provision do we have to write? Value of the charge, it should be equal to deposit plus interest. And we'll also stress one more time that only on tangible assets, not on intangible assets. So write down the next point now. The value of the charged asset should be at least amount of deposits plus interest thereon. And the last point, write down. Charge shall be created only on dash assets and not on dash assets. Only on tangible assets and not on intangible assets. Okay. Now after the provisions, now after this, is it possible to write facts of the case over here? What facts will I write over here? Company raised deposits from public. It gave so much security. It gave all these assets as security. All this, no point of writing facts of the case over here because it will automatically get covered in the analysis part. I anyways have to show all this computation in the analysis part. So no need of facts of the case. I'll straight away write the analysis, leave a line and then write down applying the above provisions in the given case, comma, next line write down. The company, in brackets write down, public company, accepted deposits from the public. accepted deposits from the public. Next line, write down. Amount of deposits accepted is equal to 100 crores. Next line, write down. Interest thereon, please show the calculation in brackets. 100 crores into 12% into 3 years, 36 crores. Total amount is how much? 136 crores. 136 crores. Next line, write down. Value of charged asset. Value of charged assets. Under this, write down one by one. First is land and building, 60 crores. They've said L and B. I'll also write L and B. 60 crores. Then plant and machinery, 20 crores. Then factory shed. Factory shed, 20 crores. Will I consider trademark and goodwill? No. Total is 100 crores. Next line, write down. Trademark and goodwill are not considered as they are intangible assets. Are not considered as they are intangible assets. So this is it with my analysis part. Now conclusion, write down thus. Now can you tell me what will the conclusion be, guys? I will answer to the point. They are asking us explain the validity of the charge created. What will I say? Invalid, guys. Charge created is not valid. Yes. So write down thus. Under this, as the value of charged assets, in brackets 100 crores is less than deposits plus interest thereon, in brackets write down 136 crores, comma, the charge is not valid. And guys, what will the deposits be? Secured, unsecured, or partially secured? Hence, the deposits shall be considered as unsecured deposits. So underline not valid, underline unsecured deposit. That's all. So that was it about this question. This was a 3 marks question, an answer to a 3 marks question. All right, everybody's clear with the provisions. Deposit charge to be created within 30 days in the name of the deposit trustee. Tangible assets only considered, intangible assets not considered. And then if the security is not enough, I will not call it partially secured, I'll call it unsecured. Okay. All right, so let's begin, guys. Let's go to the next question. We have done the writing for the first 3 questions. Our first question was from Basic Concepts chapter. Second question was from the Share Capital chapter. Third question was from Deposits. Now I'm straight away taking you to the fourth question, which is from your Auditors chapter. I'll explain to you what this question is about, and then we will start writing the answer to the question. So understand that in Companies Act, we have section 144. Section 144 gives us the list of services which the auditor is prohibited from rendering. That is why section 144 is also called the section of prohibited services. Prohibited services means that whatever services are given in this section, the auditor cannot render these services. Now, when I say that auditor cannot render these services, auditor should not render to whom? Auditor should not render these services to the company. Auditor should not render these services to the subsidiary of the company, and also auditor should not render these services to the holding company of the company. Generally, if you see in auditor's chapter, wherever you have disqualifications, you talk about 4 companies and then one more company. I'm hoping you understand what I'm telling you. I'll repeat again. In auditor's chapter, whenever you talk about disqualifications, you say, like, for example, auditor should not be holding shares in the company, associate company, subsidiary of holding company, and the holding company, and any other subsidiary of the holding company. Company, associate, subsidiary, holding, and subsidiary of holding company. You say that auditor should not, be holding shares in any of these companies. Like this, all disqualifications, you talk about cash and subsidiary of holding company. Whereas in section 144, I am talking not about cash. I'm not talking about subsidiary of holding company, first of all. And I am also not talking about associate company. We're talking only about CSH, company, subsidiary, and holding company. So auditor should not be rendering section 144 services to whom? Auditor should not be rendering section 144 services to the company, the subsidiary company, and the holding company. If the auditor is rendering any of these services to these companies, the auditor will be disqualified. Now you tell me, let us say there is a person, let's call this person as Mr. Blue. This Mr. Blue is appointed as auditor of Reliance Industries Limited. Now, let us say this Mr. Blue starts rendering one of the prohibited services to, let's say, a subsidiary of Reliance Industries Limited. Now, what happens? Point number 1, prohibited services means services which are written in section 144. You are not allowed to render prohibited services to whom? To company. But then Blue is not rendering to the company. You are also not allowed to render prohibited services to the subsidiary of the company and to the holding company of the company. If the auditor renders prohibited services to the company, to the subsidiary company, or to the holding company, if he renders any of the prohibited services, then the auditor will be disqualified. Disqualified means what? Disqualified means he cannot continue as auditor now. He will have to vacate the office and he cannot continue as auditor of the company. This is the provision involved under section 144. Now the question arises that what are these prohibited services? Prohibited service number 1, accounting and bookkeeping. You cannot make the accounts of that company for which you are auditing the financials. You must have learned in auditing syllabus as well about independence. Your auditor has to be independent. The auditor's work is review work. It is review in nature. You can't review your own work. You're understanding what I'm telling you. The auditor cannot be the auditor cannot review his own work. He cannot make the books of accounts and also check the books of accounts. So he cannot render accounting and bookkeeping. So if he is rendering accounting or bookkeeping service to the company, to the subsidiary company, or to the holding company, if he is rendering the service to any of these companies, then he will attract a disqualification. Then number 2, internal audit. The auditor of the company, the statutory auditor of the company and the internal auditor have to be 2 separate persons. Then third one, designing and implementing financial information system. Financial information system is nothing but the ERP software, what we call as ERP, enterprise resource planning. Like for example, Tally is an ERP, SAP is an ERP. These are the financial information systems. Basically, this is a software through which the company is keeping its books. So if the auditor is involved in designing and implementing the accounting software, then that same person cannot be auditor in the company, subsidiary company, and holding company. Then comes my next point. The next prohibited service is actuarial service. Now, actuary is the person who is generally involved in the insurance business. He is also involved in, giving provisions. Basically, he makes judgments. He'll tell you how much provision to make. Using statistics, he will calculate the probability of the loss occurring and he will tell you how much provision to create. So if you are rendering actuarial services to the company or subsidiary company or holding company, then you cannot be an auditor of the company. Similarly, if you are rendering investment advisory services or investment banking services, investment advisory, investment banking means if you are telling the company that where should the company park its surplus funds, company, oh, you are having extra money, you can buy this company's shares, you can invest your money in US, you can invest your money in this business. If you're going to render investment advisory services to the company, subsidiary company or holding company, then you cannot be an auditor of the company. Or if you're rendering management services, if you're helping in the management of the company, all of these are prohibited services. The auditor is not allowed to render these prohibited services. Now, will you answer my questions one by one, everybody? Question number 1. What are these services called? The services are called as prohibited services. Question number 2. The auditor should not render prohibited services to whom? The auditor should not render prohibited services to whom? To how many companies? To 3 companies. To number 1, the company, to the subsidiary company, and to the holding company. Now answer question number 3. Let us say that the auditor is rendering prohibited services, either in the holding company or in the subsidiary company or in the company. Let's say he is rendering prohibited services. Now he will be disqualified from being appointed as an auditor where? If he is rendering prohibited services in the company, he will be disqualified. In the company, he cannot be appointed as an auditor. Understanding, everybody? Here, will I use the word vacation of office? I will not use the word vacation. I will say he can't even be appointed. Understand, a very important point is coming up. I am saying if auditor is already rendering services in any of these 3 companies, then can you appoint him as auditor? No, he is disqualified. Because he is disqualified, I will say I can't even appoint him as auditor. I can't appoint him as auditor. So you tell me, if I can't even appoint him as auditor, does vacancy concept arise? Does casual vacancy concept arise? No casual vacancy. Guys, casual vacancy means what? You were first auditor of the company. Before term got over, you had to leave the office. That is casual vacancy. But here I did not even appoint you as auditor. So there is no question of vacancy. Now listen to my next point. My 4th question. Question number 4. The auditor was appointed in this company. He was not rendering section 144 service anywhere. He was appointed as an auditor of the company. Perfect only. Then what happened is, later this auditor started providing section 144 prohibited services. He started rendering to the company or to the subsidiary or to the holding company. Now tell me, do you agree that this auditor is now attracting a disqualification? He is attracting a disqualification, guys. He is auditor of the company. To this company or to the subsidiary of this company or to the holding of this company, he is rendering 144 services. He is attracting a disqualification. Can he continue as auditor? Can he continue as auditor? He is an auditor of the company. Can he continue as auditor? No. So what will he have to do? He will have to vacate his office. He will have to vacate his office. Now, do you agree vacation happened even before term got over? So what will you call this vacation? You will call this vacation as casual vacancy. Now, did you understand that when you can use the concept of casual vacancy? Yes, guys, when can you use the concept of casual vacancy? If you are already appointed as an auditor, and after that, if you attract a disqualification, you cannot continue as auditor. You will have to vacate your office. This is where I will use the casual vacancy concept. But when you You are already rendering service. You are already attracting a disqualification. You can't even be appointed as an auditor. There I will not talk about casual vacancy. Tiny point, guys, pure concept, pure logic. Okay, if we are talking about casual vacancy, tell me what are the situations in which casual vacancy arises? Four situations, guys. DDRR. D for death. D for disqualification. R for resignation, and R for removal. In these four situations, casual vacancy arises. When the auditor dies, even before his term is over, he died. Even before his term is over, he attracted a disqualification. Even before his term is over, he resigned. Even before the term is over, he was removed from office. In all these cases, even before his term is over, there is a vacancy in his office. This is called as casual vacancy. Whenever any concept, under any concept, if you have casual vacancy, you can write same four reasons. Whether it is casual vacancy of deposit trustee, casual vacancy of debenture trustee, casual vacancy of auditor, whenever casual vacancy question comes, you can write about DDRR, death, disqualification, resignation, removal. Did you understand this entire discussion, guys? The question is not about so much. Question is only about basic point about section 144. I just wanted to, help you understand that when should you use the term casual vacancy and when you cannot use the word casual vacancy. Basically, you use the word casual vacancy, you use this concept only if auditor has been appointed and before his term is over, he had to leave. Even before his term is over, there is a vacancy. That is when you apply the concept of casual vacancy. Okay, everybody, come on now. Let's continue. Let's read the question and then we will write down the answer. Look at the question. The Board of Directors of A Limited requested statutory auditor to accept the assignment of designing and implementing suitable financial information system to strengthen the internal control mechanism of the company. Guys, we are asking the auditor to design and implement the financial information system. This is going to come under section 144, prohibited service. You remember just now in this list we had put one point, designing and implementing financial information system. This is a prohibited service. You cannot render this service to the company, to the subsidiary of the company and to the holding company. You can't render. How will you approach to this proposal as a statutory auditor of A Limited, taking into account the consequences, if any, of accepting this proposal? Tell me, should the statutory auditor accept this proposal? How will you approach this proposal? Should he accept this proposal? He should not accept the proposal. Guys, listen. They're asking us what are the consequences if he accepts a proposal. Can I write about casual vacancy? Can I say that there will be vacancy? Read the question again. Question says, Board of Directors requested its statutory auditor to accept the assignment of designing and implementing suitable financial information system, which means you are already the auditor of the company. Company is asking you, please do my financial information system designing also. So if you accept, you will attract a disqualification. You are already auditor of the company, you will attract a disqualification. You cannot continue as auditor, leave. If you have to leave before your term is over, casual vacancy, DDRR, D for disqualification. Understood? Now, this is when I say good morning. Can we start writing the answer? Yes, come on everybody. Give the heading. You put the question number first. Question 4. Give the heading. Auditor shall not render certain services. Auditor shall not render certain services. Under this, let's write down the provisions first. Write down the following are the applicable provisions of Companies Act 2013, and corresponding rules. Under this, write down point 1. Now guys, we know the section number. Section 144 is a very common section number. Generally, students know the section number. So if you know the section number, flaunt it. Show it off nicely. I'll write down section 144. I'll double underline it. I'll put a box around it. Examiner should not miss it. If I know the section number, show it off. Write down under this. There are some services enlisted in section 144 which the statutory auditor cannot render to the dash, its dash, and its dash. Next line, write down. One of such prohibited services is dash and dash of financial information systems. Dash and dash of financial information systems. Next line, write down. Next point. If the auditor renders a prohibited service, covered under section 144, then a dash is attracted. Hence, he cannot continue as auditor and has to dash his office as a consequence. That is dash dash of auditor's office is attracted. That is dash dash of auditor's office is attracted. Guys, see, this question is only for 3 marks. Should I write all the section 144 services? No. To the point. Be precise. Always be precise. Talk about exactly what the question is asking you. Don't unnecessarily elaborate. Don't try to fool the examiner. Getting my point? Don't write unnecessary information not required. Hit the point always. Come on, fill in the blanks, guys. There are some services enlisted in section 144 which the statutory auditor cannot render to whom? To the company, its associate, and its subsidiary and holding. Could you please correct the mistake? Company cannot render service to whom? CSH. Generally, it is cash. Generally, we talk about cash together, but here we're talking about only CSH. So, company, its subsidiary, and its holding company. One of such prohibited services is designing and implementing financial information systems. If the auditor renders a prohibited service covered under section 144, then what is attracted? Disqualification is attracted. Hence, he cannot continue as an auditor and has to vacate his office as a consequence. that is casual vacancy of auditor's office is attracted. Now tell me, will I write about casual vacancy, death, disqualification, resignation, removal? Will I write all that? All that will become unnecessary information, guys, not required. So I've written, see, I've been very precise. I said that there are some services in section 144 which auditor cannot render. Main point over here is what? That auditor cannot render to whom? Company, subsidiary, and holding company. I've written that, I got marks. Then I said that designing and implementing of financial information services is one of these section 144 services. I got marks. Then I said that what is the consequence? It will result in casual vacancy. I will get marks. Alright, so these were the provisions. Now I will not write facts of the case over here because there's no story as such over here to write about, because the point is only that board of directors is asking the statutory auditor to design the financial information system. But if it was a 4 marks question, I would have still written facts of the case. I'll tell you what I would have written. Write down next line. In the given case, under this write down, in the given case, the statutory auditor of A Limited is being requested to design and implement the financial information system of the company. That's it about the facts of the case, guys. This is all what happened. One sentence only. Company is asking him to design and implement the financial information system. Now I'll straight away write the analysis. Write down in the next line. Applying the above provisions, comma, if the statutory auditor accepts the assignment of designing and implementing the financial information system of the company, comma, it will result in a disqualification. It will result in a disqualification as it is a prohibited service under section 144. Next line, write down. If accepted, he will have to vacate his office. That's all. We've written the analysis. Now we'll come to the question. We'll see exactly what the question is asking us, and that is what I will write in as conclusion. They're asking us, how will you approach to this proposal as statutory auditor of A Limited, taking into account the consequences, if any, of accepting the proposal? So what will my conclusion be? How will you approach to the proposal as statutory auditor? As statutory auditor of A Limited, he should not accept the proposal as the what is the consequence? Consequence if the proposal is accepted is disqualification and casual vacancy. Alright, so how will you approach to this proposal as a statutory auditor of A Limited, taking into account the consequences, if any, of accepting the proposal? So write down, thus, the statutory auditor should not accept the proposal, should not accept the proposal. Then they also asked you the consequence. So next line, write down, consequence of accepting the proposal is equal to disqualification and vacation of office. Disqualification and vacation of office. Done? Can we go to the next question? Come on, everybody. This was a very interesting discussion. I hope everybody understood when to use the word casual vacancy. You have to think twice before you use that concept of casual vacancy. Okay. Now come to the next discussion. We'll take up question number 5. Question number 5 is a straightforward, direct question only. I'm doing this question for you because at least one direct question I wanted to write for you. And number 2, it's a very important concept, highly expected for the upcoming exam. The board of directors of ABC Limited are proposing to raise funds from the public through the issue of equity shares. Due to volatile financial markets, price per share and the number of shares to be issued are left open to be decided post closure of the issue. What would you suggest to the board in this regard as per the provisions of Companies Act? Which concept are they talking about? Due to volatile financial market, price per share and number of shares are to be left open to be decided post closure of the issue. Obviously, they're talking about red herring prospectus. Very good, guys. I'll quickly give you a quick revision of red herring prospectus. So, red herring prospectus, the most special point about this is that this is an incomplete prospectus. What information is incomplete over here? I will not put about the quantum of securities. I will also not put about the price of securities, which means when the company, see, listen, whenever the company is making a public offer, the company will issue a prospectus, right? So in that prospectus, if the company does not write how many securities is the company going to issue, what will be the price per security? If this information company is keeping incomplete, then that prospectus is called red herring prospectus. So quantum and price will be decided when? Quantum and price will be decided only post closure of the issue. So why does the company do this? See, company knows I want 1 lakh rupees, let's say. Company knows that this is the amount of money which the company needs. Now, should this be 10,000 shares of 10 rupees each? Or should this be 1,000 shares of 100 rupees each? That company doesn't know. So company will say, I want 1 lakh rupees, but this 1 lakh will be how many shares? What will be the price per share? I don't know right now. Company will issue the prospectus with incomplete information like this. Company will see what is the demand of the public. Normal, usual economics now. If demand is high, what will the company do to the price? Price also company will keep high. But if the demand is low, company will keep the price also low. On that basis, company will decide the quantum of securities. So quantum and price will be decided post closure of the issue depending upon the demand of the security. Now listen, some more points about red herring prospectus. Red herring prospectus has to be filed with ROC. See, whenever there is red herring prospectus, the company will end up preparing 2 prospectus, guys. First, company is preparing red herring prospectus with incomplete information. But after the closure of the issue, now the company will decide what the price will be, what the quantum will be. Once the issue is closed, company will decide all this. So once a company decides all this, now the company will issue a final prospectus. Are you listening, everybody? This one has incomplete details. So once a company makes all these decisions, the company will now issue a final prospectus. Now red herring prospectus has to be filed with ROC. When should it be filed with ROC? We will see what is the date of opening of subscription list. Before that, leave 3 days. 3 days before that itself, company should file the red herring prospectus with the ROC. What do you mean by date of opening of subscription list? This is nothing but once a company issues red herring prospectus, now public can start subscribing to the shares. No, that is the date of opening of subscription list. When is the public allowed to start subscribing to the shares? So before that date, leave 3 days. Before 3 days itself, company has to file a copy of the red herring prospectus with the ROC. Then, when will the company prepare the final prospectus, guys, with the complete information? When will the company will prepare this? Company will prepare this only after the closure of the issue only. Company will decide what will the price and what will the quantum be. Then only company will decide final prospectus. Final prospectus also has to be filed with ROC. It also has to be filed with SEBI. Okay, now listen one small point. Between red herring prospectus and final prospectus, what should be the only difference? Between these two, they should technically be the same document. What should be the difference between these two documents? Whatever was incomplete earlier, all that has to be completed in the final prospectus. That should be the only difference, guys. So apart from this, if there is any other variation between the two, that variation has to be highlighted. Because the reason is pretty logical. What do you think? Is a prospectus a 2-page document? It runs into hundreds and hundreds of pages. So do you think people will sit and read this once again? No, you just tell me what is the difference between these two. Where and all you have made changes, you tell me, that alone I will read. That's the whole logic behind this. Wherever there is a variation, that variation has to be highlighted. Did you understand, everybody? Simple point, small simple point only. Yes, guys, are we all crystal clear? Can we start writing the answer? This was about red herring prospectus, incomplete prospectus. It does not mention the quantum and the price of securities. This is decided post closure of the issue. This prospectus has to be filed with ROC 3 days before, at least 3 days before opening the subscription list. Once the issue is closed, we will make decision about all this. We will prepare final prospectus. This also has to be filed with ROC and SEBI. Between these two, whatever is a variation has to be highlighted. That's all, guys. Come to the question now. What is the question telling us? What would you suggest to the board in this regard as per the provisions of Companies Act? The question, did you read the question carefully? Question says board is proposing to raise funds from the public, which means board is trying to do a public offer, guys. Raise funds from the public means public offer. For public offer, you have to issue a prospectus. You have various options. But the board's objective is price per share and number of shares we want to decide later. To meet this objective, only one prospectus will work. Which prospectus? The red herring prospectus. So what would you suggest to the board in this regard? Let's start writing the answer, everybody. Give your question number first. Question number 5. Under this, give the heading first. Red herring prospectus. Red herring prospectus. Under this, we'll write the provisions. Is this a direct question or is this a case study based question? It's a direct question. They are just asking us that what will we suggest to the board. We have to write a little bit about the story also, but more or less it's going to be direct question. You'll understand. Write down. The objective of the board of directors, the objective of board of directors of ABC Limited is to raise funds from the public in such a manner that the price per share and number of shares can be decided post closure of the issue. Post closure of the issue. Next line, write down. To achieve this objective, the board is suggested to issue a red herring prospectus. The board is suggested to issue a red herring prospectus. Now we will write the whole theory about red herring prospectus. See, listen, in this question, did our usual steps work out? Analysis, provisions, facts of the case, conclusion. It's not working out over here. It's not possible for me to write it that way. So do not be rigid that every answer has to be in that process. It's not possible. There will be some unique questions where that will not work out. When that doesn't work out, you see what would be the best possible way in which you can answer and you write it according to that. Now here you tell me, how will I write provisions first? Provisions means I'll write everything about red herring prospectus. Then after I do that, analysis will be that same thing again. Conclusion will be red herring prospectus. So the same thing I will end up writing in provisions and in analysis 2 times. So to avoid that, what did I do over here? I wrote facts of the case first. Did you notice? If you're noticing, this is facts of the case, that what the board wants to do. This is the conclusion, that issue red herring prospectus. Now only after this only I will write all the provisions. Don't you think this is what I've done over here? I've written the facts here that the board wants to issue a prospectus in such a manner that price per share and number of shares we will decide later. Then straight away I've given the conclusion to do this issue a red herring prospectus. Now I will write all the provisions relating to red herring prospectus. So give the subheading now. Provisions of Companies Act 2013 relating to red herring prospectus. Now write down the points one by one. Whatever theory you've learned and gone, see whatever law you're learning, whatever time you're spending at home to learn law, all that time that you're spending will help you write which part of your answer? The provisions part. You're doing all the learning so that you can write the provisions part properly. This is where all your keywords will come. And if you're noticing, in the provisions part, do we write about the company's name, director's name? Do we write the facts? No. Provisions are just legal language, what the law says. Whatever are the applicable points, whatever law you have learned and gone, in that syllabus, whatever point is relevant to the case, you're just writing those points in provisions. You're not writing about the company and all over here. Okay, so write on the provisions one by one as I call out. First point. Red herring prospectus. Red herring prospectus means a prospectus which does not include complete particulars of dash of securities and dash per security. Fill in the blanks. Does not contain complete particulars of quantum of securities and price per security. Then write down the next line item, next point. A company proposing to make a public offer may issue a red herring prospectus prior to the issue of dash prospectus. This blank fill in. Let's see how attentive you are. Let's see how sleepy you are or how attentive you are. Tell me. Company proposing to make a public offer may issue red herring prospectus prior to issue of final prospectus. Thank you. Why are we saying this? Because whenever a company is issuing red herring prospectus, how many prospectus will be there totally? 2. One red herring and one final. Then write down the next line item. Such red herring prospectus shall be filed with the ROC at least dash days prior to the opening of dash list. At least how many days prior? At least 3 days prior to the opening of subscription list. Next line write down. Once the offer is closed, the final prospectus stating total dash raised, closing dash of securities and other details not included in red herring prospectus shall be filed with dash and dash. Fill in the blanks, please. Once the offer is closed, final prospectus stating total capital raised, closing price of securities, and other details not included in red herring prospectus shall be filed with ROC and SEBI. All clear till here? Just 2 more points, guys. Next line, write down. Red herring prospectus carries the same obligations as applicable to prospectus. What does this mean? In prospectus, you should not have any misstatement. If there's a misstatement, there will be civil liability, criminal liability. All that concept will apply to red herring prospectus also. Same obligations, same responsibilities here also. Last point, write down. Any dash between red herring prospectus and final prospectus shall be dash as variation in prospectus. Any variation between red herring prospectus and final prospectus shall be highlighted as variation in prospectus. That's all, guys. So this was our entire answer to red herring prospectus question number 5. Simple. Can we proceed? Come on, let's not slow down. Let's keep up with the pace. I'm hoping you're following. I'm hoping good concept revision is also happening along with writing practice. If the hand is hurting, don't bother. Continue writing. Listen to me. Come to the next discussion, guys. Come to question number 6, everybody. Oh yes, question 6 is a very interesting question. It's again a question from share capital. From share capital, we've already written the answer to the preference shares question. Now this is one question I wanted to do for you regarding computation. We will be doing 2 questions on computation, okay? This is the first question on computation where you have to compute how many bonus shares company can issue. This question is about that, okay? That how many bonus shares can the company issue? You know this very well. It's a very easy concept only. You tell me, when the company wants to issue bonus shares, first of all, what journal entry? Think from accounts point of view. What journal entry will the company pass? Company will credit share capital because total share capital will increase. But is money coming in? When the company issues bonus shares, does money come in? No. So what do we debit, guys? What do we debit? We first preference we debit CRR. Second preference, we debit securities premium account. Third difference, we debit our free reserves, guys. So first of all, company can issue bonus shares out of what? Company can take money from where? CRR, securities premium and free reserves. Point number 1. So don't you think what the company is doing over here is company is capitalizing its profits, guys. Whatever money was there in the reserve, company is taking money from there and putting it into capital account. So this is nothing but capitalization of reserves. So we know that when the company wants to issue bonus shares, company will debit its reserves and will take the money from here and will put the money into share capital. So this is called as capitalization of reserves, we know. Now listen, there are other points, other rules relating to bonus shares. You must be aware of it, that if the company wants to issue bonus shares, it must be authorized by Articles of Association. In the Articles of Association, it must be written that this company can issue bonus shares. Bonus shares can be issued only out of CRR, securities premium and free reserves. Then if the company wants to issue bonus shares, who takes initiative? The board of directors. So it should be recommended by the board of directors and it should be approved by the shareholders. Same like dividend. Even dividend, if you see, it is recommended by the board and approved by the shareholders in the general meeting, no, by passing ordinary resolution. Same way, even for bonus shares, it is recommended by the board and then it has to be approved or authorized by the shareholders in the general meeting by passing ordinary resolution. Then, however, there are some conditions. If the company has made any default in repayment of debentures or in repayment of deposits, if the company is making any default, then company first rectify the default, only then you can issue bonus shares. Also, one more point is there, yes, if the company makes any default in making payment of statutory dues to employees, like the law is saying company you have to pay bonus to employees. Law is saying company you have to pay gratuity to employees. The law is saying company you have to pay compensation to employees. So whatever statutory dues towards employees you have, if the company is defaulting in that, company first rectify all that, then only you can issue bonus shares. And one more thing, existing equity shares of the company are partly paid. Can the company issue bonus shares? No, company you have to make the existing shares fully paid up first, only then you can issue bonus shares. That is why in accounts also you have to remember this. In accounts, before you pass bonus shares entry, You always have to pass the share call entry first, make the shares fully paid up, then only you can pass bonus share capital entry. And lastly, tell me, can the company declare dividend, and instead of paying the dividend in cash, can the company give off shares in return instead? No, bonus shares and dividend, they're two different things. Dividend has to be in money. Bonus shares will be in the form of shares. Bonus shares and dividend, they cannot be interchanged. Bonus shares cannot be issued in lieu of dividend. Okay, guys. Now, so with this, I've given you a revision of the entire bonus share capital concept. Now, let's read the question. ABC Limited has the following balances in their balance sheet as on 31st March 2018. Equity share capital 3 lakh equity shares of 10 rupees each, total 30 lakhs. Free reserves 5 lakhs. Securities premium 3 lakhs. Capital redemption reserve 4 lakhs. Revaluation reserve 3 lakhs. So tell me, can the company use free reserves to issue bonus shares? Can the company use 5 lakhs? Yes. Securities premium? Yes. Capital redemption reserve? Yes. But can the company use revaluation reserve? No. So total how much reserves are available for being capitalized? Total 12 lakh reserve is available for being capitalized. Now whether the company can give bonus shares in the ratio 1:3. 1:3 means if you are holding how many shares? If you're holding 3 shares, company will give you 1 bonus share. That's the meaning of 1:3. If you're holding 3 shares, company will give you 1 bonus share. Totally how many shares in the company? 3 lakh shares. Which means how many bonus shares company will issue? Company will be issuing 3 lakh into 1/3. Company will be issuing 1 lakh shares. To issue 1 lakh shares, how much will you credit in share capital account? 1 lakh shares into 10 rupees each, guys. So total how much you will credit to share capital account? 10 lakh rupees. Now that much reserves also you need. No, do you have 10 lakh rupees worth of reserves? Yes, you have. So 1:3 can the company issue? Yes, the company can issue. Then they're asking about 1:2. If the company issues bonus shares in the ratio 1:2 means if you're holding 2 shares, company will give you 1 bonus share. So the total 3 lakh shares in the company, how many shares, how many bonus shares will be issued? 3 lakh into 1/2, 1,50,000 shares, guys. 1,50,000 bonus shares means how much will you credit in share capital account? 15 lakh rupees, because 1,50,000 shares into 10 rupees per share. 15 lakh is what you will credit. Now, do you have that much reserves to debit? Do you have 15 lakh worth of reserve? No, you have only 12 lakh. So is 1:2 possible? Sorry, company, not possible. You understood, guys? This is the entire concept. Now, can we write down the answer? Yes. Now, see, in this question, actually, is it required to write about all the conditions of bonus issue? AOA should authorize, board should recommend, shareholders should pass ordinary resolution, there should not be any default, bonus cannot be issued in lieu of dividend. Is all that even required? No. To answer this question, what is required? Company, if you want to issue bonus shares, you can only use these 3 things. That is, you can't use revaluation reserve. That provision only is relevant, guys. And then computation is relevant. And then conclusion is relevant. That only is relevant. But still, can I give you all the conditions to write once, please? Because bonus shares is very important concept. Once, let us write the entire list of conditions, because I genuinely believe that when we write something, we remember it for a very long time. So even though it's not relevant for this question, let me give you the entire set of conditions. That way it will be there in your memory for a very long time. Once I do all that, I will then highlight for you that for this question, how much written would have been enough. I will explain that also to you. First, let's write down the whole bonus shares conditions. Write down with me. Answer to question number 6. Give the heading bonus issue. Under this, write down the following are applicable provisions of Companies Act 2013 and corresponding rules. Yeah, write down under this, guys, point number 1. If authorized by dash, comma, company can issue fully dash bonus shares to dash shareholders on a dash basis. Fill in the blanks, please. If authorized by articles of association, company can issue fully paid bonus shares to existing shareholders on a proportionate basis. Guys, what does proportionate basis indicate? Can the company decide to give bonus shares to one shareholder and not give to other shareholders? No, it has to be given to all the shareholders on a proportionate basis. Then write down the next point. Bonus shares may be issued out of, under this write down point 1, capital redemption reserve, point 2, securities premium account, and last point, free reserves. Free reserves. Then write down the next point. Issue of bonus shares shall be recommended by dash and authorized by dash in a dash by passing dash. Fill in the blanks. Shall be recommended by board of directors and authorized by shareholders in a general meeting by passing ordinary resolution. Then write down the next point. Company should not have defaulted in payment of interest or principal relating to dash and dash. Relating to what? Debentures and deposits. Comma. Continue writing comma. Payment of dash dues to dash. Payment of statutory dues to employees. Then write down the next point. Outstanding partly paid shares have to be made dash before bonus issue. Outstanding partly paid shares have to be made fully paid up before bonus issue. Next point, write down the last point. Bonus shares cannot be issued in lieu of dividend. Bonus shares cannot be issued in lieu of dividend. Are we done? Yes. So what I've made you write over here, these 6 points are the entire provision, the theoretical provision relating to bonus shares. But in this question, out of all these points, which point was required, guys? Only this point. What I'm highlighting over here. You got it? No confusion, right? In the exam, if this question comes, no need to write fully. This is the only relevant point. Excuse me. Yeah, listen. So in the exam, if the question comes, out of all of these provisions, the only relevant provision is this one, that bonus shares can be issued out of CRR, securities premium, and free reserves. All right. Can I take you to the provisions are over. Can I take you to the facts of the case now? Now, in this question, what are the facts of the case that I will write? Have a look at the question and tell me. I will just say that the company is proposing to issue bonus shares. That's the only facts of the case to write, guys. So write down. Next point. In the given case, next line write down. Directors of ABC Limited seek advice to issue bonus shares. Seek advice to issue bonus shares in the ratio 1:3 or 1:2. That's it about the facts of the case. Now comes my analysis. Write down. Applying the above provisions, comma. Guys, listen to me. Tell me, in the provisions part, did I do any calculations and show? No. In the facts of the case, did I write any calculations and show? No. Do you remember, before the dinner break, we had taken the deposits question? This one. Even in this deposits question, where did we do all the computation? We did all the computation in the analysis part, guys. So whenever your question is a computation based question, all the computation should happen in the analysis part only. The provisions will still contain only the provisions, only what the law says, no computation. Okay. So applying the above provision, write down under this. ABC Limited can utilize the following for issue of bonus shares. Under this, write down. What are the points one by one? Free reserves can be utilized? Yes. So free reserves. How much is a free reserves? 5 lakhs. Then we have securities premium account. So securities premium account. How much is it? 3 lakhs. Then, can we use capital redemption reserve? Yes. Capital redemption reserve. How much is it? 4 lakhs. Lastly, revaluation reserve. Can we use this? No. So write down ineligible. So total how much? 12 lakhs. Total 12 lakhs. Till here, got it? Till here, understood, guys? Applying the above provisions, ABC Limited can utilize the following for issue of bonus shares: free reserve, securities premium account, capital redemption reserve, and revaluation reserve. Then next line, write down. Now we'll show the calculation, guys. Give the heading, particulars, 1:3, 1:2. You know why I'm doing it like this? They've asked me 2 subdivisions. But do you think it will make sense for me to do the first one fully? Then again repeat the same thing over here. It will take too much time. So that's why in one table itself, I'm putting 2 columns and I will do it side by side and I will finish it off. Under particulars, write down total number of outstanding shares. How many shares are outstanding, guys? 3 lakh shares. So put 3 lakh shares under both. Then next line, write down bonus shares to be issued. In 1:3, how many bonus shares are we issuing? Show the calculation. 3 lakh into 1/3, how many shares? 1 lakh shares. Then write down 3 lakh into 1/2 here. 1,50,000 shares. Next line, write down reserves to be utilized. Reserves to be utilized for issue of bonus shares. How much reserves? See, if I want to issue 1 lakh shares, how much reserves I need? I need 10 lakh rupees of reserve. If I want to issue 1,50,000 bonus shares, I need 15 lakh rupees of reserves because one share is for 10 rupees. Calculation I've shown you earlier itself. Now, after this, so this is my analysis. Now, straight away, I'll go to the conclusion. Write down next line. Thus, under this point 1, look at the question. Directors seek your advice whether company can give bonus in the ratio 1:3. Whether company can give bonus in the ratio 1:3, what is your answer? Yes or no? Whether company can give bonus in the ratio 1:3? Yes. So write down thus, yes, company can issue bonus shares in the ratio 1:3 as reserves utilized rupees 10 lakhs does not exceed rupees 12 lakhs. Second point, write down no, company cannot issue bonus shares in the ratio 1:2 as reserves required as reserves required rupees 15 lakhs exceeds rupees 12 lakhs. Underline can issue here and cannot issue here. That's all. Understood, everybody? Computation based question. See, there are alternate ways of doing it. I am not saying that this is the only correct method of writing the answer. You can write all this, what I've written for you, in this table itself over here. That 10 lakhs is within 12 lakhs, hence 1:3 allowed. 15 lakhs exceeds 12 lakhs, hence 1:2 not possible. And then conclusion will just be yes and no. You can do that way also. This is what I'm showing you is one of the methods in which you can do it. But of course, there can be alternate methods as well. All right. So this was question number 6. All right. So with this, I think we can close this question. Let's go ahead. So 6 solid questions we've done, touching upon various chapters. Question number 7 is from CSR. So with respect to CSR, I have brought for you over here a 6 marks question. You know, there's something very interesting about this question. So what happened is, in May 23 exam, this question came for 6 marks, okay. So naturally, what students think that can the same question come in September, in next exam, November 23? No, right. That's the most common assumption that this came in May 23. So same question cannot come again in November 23. Guys, same question, just different names, just one extra sentence, one extra adjustment came in November 23. 6 marks, 6 marks. That was the fate of this question. And the same question I'm going to, write the answer for you as well, because this one question covers major part of CSR. Look at the size of the question. It's a nice, big, huge question. And under this question, there are 3 subdivisions. It's a nice, interesting question on CSR. But this question I don't want to take up right now, because you would be pretty tired right now. This is how we will start tomorrow's session. Tomorrow, we will start with this question. Okay. So can you come to question number 8 for now? Let's take up some other smaller questions. Let's come to question number 8 for now. Here. Question number 8 is again a question from deposits, guys. Let me discuss the concept with you, and then I will start discussing the answer. See, when it comes to deposits, we know that we will get a question from deposits for sure for 5 marks, right? Now that question that we are going to get, 90% that question is going to be from the exclusions. In deposits, you have that list of exclusions. No, what and all is excluded from deposits? That huge list of exclusions that you have. That is the most important concepts in your deposits chapter. All right. So I wanted to definitely do at least one question from there. That is what question number 8 is about. So I'll explain the concept to you. Listen to me, everybody. This question touches upon 2 of those exclusions. I'll discuss those 2 exclusions with you first. See, if the company is issuing debentures, or if the company is issuing bonds, against debentures and bonds, company is going to receive money, right? Now, if the debentures happen to be secured debentures, or if the debentures happen to be compulsorily convertible debentures, or if the debentures happen to be listed in any recognized stock exchange. So out of these 3, if the debentures fall under any of these 3 categories, then against debentures, whatever money the company has received, that money will not be considered as deposit. whenever the company receives money, that receipt of money we consider as deposit. No, company is receiving money, that money company has to return after a certain period. Such kind of money is received by the company, we consider as deposit. But however, if that money is received against secured debentures, or if it is received against compulsorily convertible debentures, or if it is received against listed debentures, then that money will not be considered as deposit. And if it is not considered as deposit, then there will be no, then deposits provisions will not apply on the transaction. But there is a small catch over here. The catch is that these, when I say convertible, they have to be compulsorily convertible and not optionally convertible. Second catch is that when I say secured, they have to be secured with a first charge. I'll tell you what first charge means. Listen to me. Let's say I have a piece of land. This piece of land is worth 100 crores, okay? Now I took loan from bank 1. I took a loan of, let's say, 10 crore rupees. For this loan of 10 crore rupees, can I give this land as security? Can I mortgage this land? Yes, guys, I can mortgage this land. Then I went to bank number 2. From bank number 2, I took one more loan. I took loan of 25 crores, let's say. To that bank also, the same asset can I mortgage as security. I have already mortgaged this to bank 1. Can I mortgage this to bank 2 also? What do you think? Yes or no? Think logically. My land is worth 100 crores. Can I mortgage the same land to bank 1 and to bank 2? The answer is yes. Why yes? Because this land is worth 100 crores, guys. This land is enough to meet this loan also. It is enough to meet this also, guys. Total put together is how much? 35 crore only. No, the land is sufficient to meet both the loans put together. So that is why, yes, I can give this same land as security to two lenders, because the security is valuable enough to handle both the loans. Now listen, let's say I am not able to repay any loan. So both the lenders will attack this land. But which lender will have first right over the land? Which lender will have first right over the land? Bank 1. Bank 1 will have the first right. Bank 2 will have the second right. This is called as first charge. First charge, I'll tell you when it will be significant. In this question, it doesn't really make much of a difference. But let us change the question a little bit. Let us say what happened is, this land, next to this land, let's say there was a huge forest area. And in that forest area, let's say some major accidents happened. So nobody wants to buy this land now, because everybody is thinking that this land is a very risky land. Animals keep attacking this land. People are not willing to buy this land only. So because there is more demand for this land, economics, what will happen to the price of this land? The value of this land, it will fall. Earlier, its value was 100 crore, guys. And let's say the value fell to, let's say, 7 crores. Okay, or let's say the value fell to 15 crores. The value of the land is 15 crores. Now, I am not able to repay any loan. So, who will attack this land first? Bank 1. Bank 1 will take how much from this land? Bank 1, they have to take 10 crore. No, full 10 crore they will take from the land. How much balance? 5 crore. Only bank 2 will get only 5 crore. Now, did you understand that what's the benefit of first charge? First charge means I will get the first right over the asset. So if the value of the asset falls, I am still protected. I will only get the first right over the asset. So when I say debentures have to be secured debentures, they must have the first charge. First charge means they must have the first right over the asset. Now, talking from Companies Act point of view. Companies Act point of view, who will have the first charge? Who will have the first right? The person from whom I borrow loan first, that person, or the person in whose favor I register the charge first, that person. In whose, who will have the first right over the, it's not connected to this concept. I'm asking you a question from the charges chapter, that who will have the first right over the asset? The person whose loan I borrowed first, or the person who's charged, the person in whose name the charge I registered first. The person in whose name I registered the charge first, that person only will get priority. Okay, so in whoever's name I registered the charge first, charge is chapter guys, in whoever's name I registered the charge first, that person only will get priority. So anyways, coming back to this discussion, the company received money against debentures if they are secured debentures, or if they are compulsory convertible debentures, or if they are listed in the recognized stock exchange. I will put the word or in between. Out of these, if any of these three criteria are fulfilled, then the money received against debentures will not be considered as deposit. Now coming to bonds. For bonds, I will put only 2 points. Either they should be secured or they should be compulsorily convertible. Either they should be secured or they should be compulsorily convertible. If they are secured, same thing even over here, they must be secured with a first charge. So if they are secured or if they are compulsorily convertible, out of these two, if any of these two criteria is fulfilled, against bonds, whatever money the company is receiving, that money will not be considered as deposit. Basically, all these are exclusions from deposit. All this will not be included in deposit. Are we understanding? Yes. So against debentures, when the company receives money, if the debentures are secured debentures or compulsorily convertible debentures or listed on a recognized stock exchange, any of the three criteria fulfilled, that money will be excluded from deposit. It will not be considered as deposit. Bonds, only 2 points we have. Either they must be secured or they must be compulsorily convertible. Out of the two, any of the two criteria fulfilled, those bonds will not be considered as deposits. This is one exclusion. Now listen to another exclusion, the second exclusion. This time employee gave some security deposit to the employer. This security deposit will not be considered as deposit. The deposit rules and regulations will not apply if three conditions are fulfilled. Condition number 1, the security deposit should not exceed the annual salary. The security deposit should be within the annual salary. Condition number 1, whose annual salary? Employee salary. Employee is giving security deposit, right? It should be within his annual salary. Then the security deposit should not carry any interest. It should not carry any interest. Basically, employer should not give interest on deposit to the employee. And lastly, this should be as per the contract of employment. In the contract of employment, it should be written that employee, you have to give so much security deposit, and that is why employee is giving this deposit. Are you understanding how many conditions you're having? You're having totally 3 conditions. Condition number 1, the deposit has to be within the annual salary. Condition number 2, this deposit should not carry interest, and condition 3, it should be as per the contract of employment. If all these 3 conditions are fulfilled, then whatever money company received from employee as security deposit, it will not be considered as a deposit, and your deposits chapter will not apply to those transactions. Okay, with this in your mind, come on, let's have a look at question number 8. Comment whether the following amounts received by a company, will it be considered as deposit or not? Let's discuss orally first. 5 lakhs raised by Rishi Limited through issue of non-convertible debentures, not constituting a charge on the assets of the company. They are non-convertible, guys. Not constituting a charge on the asset means what? It means they are unsecured deposits, but they are listed. They are listed on a recognized stock exchange. Tell me, will it be considered as deposit or excluded from deposit? They are not convertible, they are unsecured, but they are listed. Will I consider them as deposit? No, they will be excluded from deposits. Just now I told you, in 3 situations it will be excluded from deposit. Number 1, if it is secured or compulsorily convertible or listed. Here it is not secured. It's not convertible, but it is listed. Anyone, guys, anyone. It's listed, therefore it will not be considered as deposit. Then 2 lakhs received from Mr. T, an employee of the company, who's drawing annual salary 1,50,000. His salary is 1,50,000. We received 2 lakhs from him under a contract of employment in the nature of non-interest bearing security deposit. Okay, it is as per contract of employment, condition 3 fulfilled. Okay, it is non-interest bearing, no interest, condition 2 fulfilled. But deposit amount is how much? 2 lakhs. Annual salary is how much? 1,50,000. 2 lakhs is more. The deposit is more than the annual salary. Therefore, it will be considered as deposit. But tell me, will it be fully considered as deposit or only the excess will be considered as deposit? What do you think? it will be fully considered as deposit or only the excess will be considered as deposit? Come on, everybody, participate. I need you to answer. It will be fully considered as deposit, guys. Understanding? If it exceeds 1,50,000, you will treat it as if it is fully a deposit. Okay, so can we write down the answer? Now, in this question, they have not asked for definition of deposit. Generally, what I've noticed is whenever they ask you the exclusions, they also say define deposits. So the answer which I give you, I will define deposits and then talk about these 2 points. Okay, write down the answer. That way, you will get some practice on deposits definition as well. Question number 8. Under this, write down the definition. Give the subheading definition. Under this, write down deposit includes any receipt of dash by way of deposits or loan or in any other form by a company but does not include such categories of amount as may be prescribed in consultation with dash. So deposit includes any receipt of money in consultation with RBI or SEBI? In consultation with RBI, guys. Listed, unlisted company, that is SEBI, here RBI. Okay, now we'll write the exclusions. Give the heading. Exclusions from deposits. Now I've taught you the provision. Will you try writing the first subdivision on your own? 2 marks only, remember, keep in mind it's only 2 marks. Don't write too much. Max to max 5 lines. Answer should get completed 5 lines maximum. Okay, I want you to write just the first subdivision on your own. Just the first subdivision. Can we start discussing, guys? Have you finished the answer? Can I show you the answer as well? Then we'll compare your answer and my answer and you can assess them. Yes, I'll also show you how the answer can be. Point number 1, rupees 5 lakhs raised by Rishi Limited. Rishi Limited only, no? Yeah, rupees 5 lakhs raised by Rishi Limited against non-convertible unsecured deposits, non-convertible unsecured deposits listed on a recognized stock exchange will not be considered as deposit. I'll underline will not be considered as deposit. Then I'll write the reason that why is it not considered as deposit. Reason. What's the reason? Is it because it's unsecured? Is it because it's non-convertible? What's the reason? The reason is because it is listed. So the reason I will write amount raised by issue of debentures listed on a recognized stock exchange is not considered as deposit. So first I wrote that it will not be considered as deposit. Then I gave my reason. What was the reason? The reason was because it is listed on, because it is listed. So if it is listed debentures, money raised against listed debentures, not considered as deposit. Now what about the second subdivision? Second subdivision also have you written? In case you've written, check. Otherwise write with me anyways. Write down rupees 2 lakhs received from Mr. T, an employee, as non-interest bearing security deposit, under a contract of employment is considered as a deposit. Underline is considered as a deposit. Then give the reason why. What is the reason? Write down amount received from Mr. T is equal to rupees 2 lakhs. Next line, write down annual salary is equal to rupees 1,50,000. Next line, write down as the amount received exceeds the annual salary of the employee, it will be considered as deposit. Underline exceeds annual salary. That's your reason. Alright. So when it comes to deposits exclusions, this is what I generally suggest. First, give your answer. First mention that is it a deposit or is it not a deposit. First mention that and then give your reason. Exclusions, very, very common question in the exam. Whenever you get a question from exclusions, you understood what to do. First you write, is it a deposit or is it not a deposit? Then you give your reason. Alright everybody, yes, it's almost time, I know, but can we take up one small tiny question which will not take us more than 10 minutes to discuss also and write also, so that it's a little less burdened for us tomorrow. Alright, let's take up a small question. This question over here, guys, on General Clauses Act, it's a small question. Let's read it and then we will write down the answer. A confusion regarding the meaning of financial year arose among the financial executive and accountant of the company. Both were having different arguments regarding the meaning of financial year and calendar year. What is the correct meaning of financial year under General Clauses Act? How is it different from calendar year? Financial year, calendar year, different, guys. We all know. What's the difference? Financial year is going to be April to March. Calendar year will be as per which calendar? As per British calendar, Jan to December. And month also is month as per British calendar. And guys, what if it just says year? Year means what? Just year means what? Year always refers to calendar year. If just the word year is written, it refers to calendar year. Otherwise, if it is financial year, it will be mentioned. If nothing is mentioned, if just year is mentioned, year refers to calendar year. Okay. Let's write down the answer to this question, guys. They are asking us what is the correct meaning of financial year? How is it different from calendar year? Tell me, is this a case study based question? No. They have given one small story around it, but it is not a case study based question. It's actually a direct question. So let's write down the answer to question number 10. Write down question 10. Write down the answer. Give the heading calendar year and financial year. Under this, write down the difference. The following are the applicable provisions the following are the applicable provisions of dash. Fill in the blanks. What are you writing? Anybody who wrote Companies Act? Don't do all that blunder, guys. It will become terrible only. Following are the applicable provisions of General Clauses Act. And what is the year of General Clauses Act? Tell me that also. 1897. Now write down the points under this one by one. First point. Year means calendar year. Year means calendar year. Next line, write down. Calendar year is year as per British calendar. That is a period of 12 months starting on Jan 1 and ending on December 31. Next line, write down. Financial year is a period of 12 months starting on April 1 and ending on 31st March of the next year. Next line, write down. Thus, it can be concluded that calendar year and financial year are different. That's all. So year means year as per year means calendar year. Calendar year means as per British calendar. And financial year is 1st April to 31st March. Calendar year is 1st Jan to 31st December. And month is month as per calendar year as per British calendar. Alright. So here underline British calendar, please. Calendar year is year as per British calendar. Alright. So let's begin our second session, guys, on writing practice. Yesterday we had completed till question number 6 and then we skipped question number 7 and 9 and then we wrote till question number 10. So let's finish off question 7 and 9 first and then we will go on to the next set of questions. Question number 7 is what I'm starting for you now. Yesterday, whatever we've written, I'm hoping you're perfectly clear. Now coming to question number 7. Now see, this question, like how I told you even in yesterday's class, is all about CSR. And before you get too tired, I want to finish off this question for you first. Before I start this question, can I quickly give you a revision of the concepts which are involved in this question, and then we will straight away start off with the writing part. All right. So first of all, CSR is covered by section number 135. Now under CSR, point number 1, which companies require CSR committee? Which companies require CSR committee? Those companies whose net worth is at least 500 crores or their turnover is at least 1000 crores, or if their net profit is at least 5 crore. We have three criteria. Out of the three criteria, if any of the three criteria is fulfilled. Now this criteria has to be fulfilled in which year? Current year or preceding financial year? This has to be fulfilled in the preceding financial year. So in the preceding financial year, if the company fulfills any one out of the three conditions, then for that company CSR committee is required. Now section 135 says that which company has to spend money on CSR. Does every company have to spend money on CSR? No. Which company has to spend money on CSR? Only those companies which fulfill any out of these three criteria, only those companies have to spend money on CSR. So indirectly, I can conclude that does every company require to spend money on CSR? No. Only those companies who fulfill one out of these three criteria, those companies only require CSR committee. Those companies only have to spend money on CSR also. Till here, did we understand that which companies require CSR? CSR is not applicable to every company. What do you think? Is a small 1% company spending money on CSR? Definitely not. A small private companies spending money on CSR, practically if you see, no, they are not spending because it is not required for them to spend. Every company does not spend money on CSR. Guys, come on, keep the participation nice and high. Which companies have to spend money on CSR? Only those companies which fulfill any out of these three criteria. What are the criteria? Net worth at least 500 crore, turnover at least 1000 crore, net profit at least 5 crore. Section 135 very clearly says that if the company is fulfilling any out of these three criteria which is applicable for CSR committee, if the company fulfills any out of these three criteria, then those companies have to spend money on CSR. Also tell me this now. When the company is spending money on CSR, is there any minimum requirement? If CSR is applicable for the company, how much minimum the company has to spend on CSR? Tell me. Minimum the company has to spend 2%. 2% of what? 2% of net profits. 2% of average net profit. Average net profit of how many years, guys? Average net profit of 3 preceding financial years. So last 3 years, we will see how much net profit the company has made. Those last 3 years net profit, in a simple average, we will find 2% of that is what the company has to spend on CSR. This is the minimum amount which the company has to spend on CSR. Alright guys, so point number 1, does every company require CSR committee? No, only that company which fulfills any out of these three criteria requires CSR committee. These criteria are applicable to the current financial year or the preceding financial year, guys. These criteria are applicable to the preceding financial year. Then after this, we learned, does every company have to spend money on CSR? No, only those companies which fulfill any out of these three criteria, only those companies have to spend money on CSR. If they have to spend money on CSR, how much do they have to spend? Minimum, they have to spend 2% of the average net profits of 3 preceding financial years. Okay, guys. Now listen to the third point. The third point under CSR, when we say net worth will include what? Net worth will include paid up share capital of the company, free reserves of the company, securities premium of the company. From this, I will subtract the accumulated losses of the company. Accumulated losses means what? Accumulated losses means P&L account debit balance. I will subtract. I will also subtract deferred expenses of the company. And finally, I will also subtract miscellaneous expenses not written off. So how many things, how many elements, guys? I am starting with paid up share capital. I am adding free reserves. I am adding securities premium. I am subtracting accumulated losses, which is nothing but your P&L debit balance. I am subtracting deferred expenses. I am subtracting miscellaneous expenses not written off. The balance number that I get, this is called as your net worth number. So net worth computation, I've given you a revision: paid up share capital, free reserve, securities premium, minus P&L debit balance, minus deferred expenses, and minus miscellaneous expenses not written off. Now comes my fourth point in my CSR discussion. Let's talk about net profit now. Net profit has to be at least 5 crore. No, net profit means what? You tell me, am I talking about net profit before tax or net profit after tax? Net profit before tax or after tax? We are talking about net profit number which is before tax. And then tell me, am I talking about net profit after setting off of losses or before setting off of losses? I am talking about net profit which is considered before setting off of losses. Before we set off losses, before tax, our current year net profit before tax, before set off of losses, that is the net profit number we are supposed to consider. Till here also, did you understand? Yes, everybody. Now comes the question, when I'm calculating net profit, will I also include the profit of my foreign branches? Will I also include the profit of my overseas branches? Or am I supposed to look only at my Indian net profit? Look at only Indian net profit. You should not include profits of overseas branches. Logic is simple. The logic is, tell me, through CSR, you are supposed to do good for Indian society or foreign society. Through CSR, you are supposed to do good for the Indian society, So you are supposed to use Indian profits only. You're getting the logic, guys? You are supposed to use Indian profits to do good for Indian society. No using foreign profits. So when I say net profit, I'm talking only about Indian profit. If my company has a foreign branch, from the foreign branch, if the company has made any profit, will I consider that profit? No, I will not. Then listen to the next point. When I'm computing net profit, there is one more thing which I will not include. There's one more thing which I will not include. If the company has earned any dividend, guys, any dividend from an Indian company, if the company has earned dividend from another Indian company which has properly complied with CSR, then the dividend also will not be included in the company's net profit. I'll give you one small example to help you understand this. Will you promise to listen attentively? One explanation, you have to understand this point. Sit up straight and listen to me, everybody. Very easy point. Let's say I have two companies. Okay, guys. I have A Limited. I have B Limited. I have two companies. Okay. Now, B Limited is a shareholder of A Limited. Okay, so when A Limited is declaring dividend, A Limited will give dividend to B Limited also. Till here, do you agree? B Limited is a shareholder of A Limited. When A Limited declares dividend, A Limited will give dividend to all shareholders. One of the shareholders is B Limited. So B Limited will also get dividend. Now this dividend will go and sit in B Limited's P&L account, guys. For B Limited, this dividend is going to be an income. Do you agree? For B Limited, dividend is an income. Okay. Now, when I dig a little deeper, I realize that this A Limited happens to be an Indian company, guys. And this A Limited has complied with Section 135, which means this A Limited has already spent money on CSR. This A Limited has already spent money on CSR. This A Limited is distributing dividend to B Limited. Now, when B Limited is computing its net profits, in B Limited's net profit, will you include this dividend income? In B Limited's net profit, this dividend income will not be included. Why? Because this dividend, you understand the logic, listen to the logic, this dividend has come from profits which have already been taken care of under 135. This dividend have come from those profits from which CSR is already done. So therefore, on this income, I don't want CSR again. So when you're computing net profit, come on everybody, tell me, net profit before tax, net profit after tax. Before tax. Net profit before losses, net profit after losses. Net profit before losses. Then tell me, will you include the profit of foreign branches or will you not include the profit of foreign branches? You will not include. Will you include dividend of other Indian companies who are following CSR? You will not include. You understood the logic also? Yes, I will not include the dividend of other Indian companies which are properly following CSR. Guys, can I close my fourth concept also? Yes, just giving you a revision, not of the whole CSR. I'm just giving you revision of those points which are relevant for our question. So point number 1, CSR committee is required for those companies which fulfill any one out of these 3 criteria. These companies have to spend minimum 2% of the average net profit on 3 preceding financial years. Then what is net profit? We have given the entire formula. Paid up share capital plus free reserves plus securities premium minus accumulated losses minus deferred expenses minus miscellaneous expenses not written off. Then what is net profit? Net profit is net profit before tax, before setting off of losses. You will also not include overseas branches profit. You will also not include dividend of other Indian companies. Okay. Now listen, what if the company has received dividend from A Limited on which section 135 is not even applicable? Then also will you exclude this dividend income from net profit? No. Then you will include. You listened to me. You will exclude which dividend? Only that dividend income which we have earned from that Indian company which has complied with the CSR. Only if A Limited has complied with 135, has already contributed towards CSR, only then that dividend income I will ignore. Okay, everybody. So this was my fourth point. Now listen to my fifth discussion. My next discussion under CSR is about the CSR committee's composition. What is the composition of the CSR committee? Who and all has to be there in the CSR committee? It all depends upon what kind of the company is it. See, first of all, we will check, does the company have independent directors? See, which company will have independent directors, guys? All listed companies will have independent directors. Also, some public companies which fulfill some criteria, they will also have independent directors. So if the company has independent directors, then in that company, in the CSR committee, we need minimum how many directors? Come on guys, tell me. You would have revised and come. Minimum how many directors? Minimum 3 directors I need. Out of these 3 directors, minimum one director has to be an independent director. But however, what if the company does not have independent directors? Now, which company will not have independent directors, guys? See, some public companies will have independent directors, some public companies will not have independent directors, but private companies will never have independent directors. So, which companies will not have independent directors now? Private companies and leftover public companies, guys. So, if the company is not having independent directors, in these companies, minimum 2 directors will be in the CSR committee. How many? Minimum 2 directors will be there in the CSR committee. And lastly, what if my company happens to be a foreign company? If I am a foreign company, then in that case, number one, an authorized person, I will tell you about this, one authorized person will be there in the CSR committee. Apart from this, we will also have a nominee. Basically, the foreign company will appoint one nominee. The nominee appointed by the foreign company will also be there in the CSR committee of the foreign company. See, this nominee appointed by foreign company is fine. But I need you to understand this authorized person point properly. You have the chapter Companies Incorporated Outside India in your syllabus, guys. The last chapter in Companies Act. Yes, guys. Now, in that chapter, there is a concept in section 380. The concept is that if your company is a foreign company, that foreign company has to appoint one authorized person. Who is this authorized person? He has to be some Indian resident. And what is the work of this authorized person? His work is that he has to receive notices on behalf of the foreign company. If anybody sends notices to the foreign company, this authorized person, he is the one who will receive notices on behalf of the foreign company. So that same person in section 380 which we talk about as authorized person, that same authorized person will automatically be a part of the CSR committee. I'm hoping you know this. If you have learned that chapter, Companies Incorporated Outside India, then you must have learned about section 380. In section 380, it is very clearly written that when a foreign company, when there's a foreign company, this foreign company has to file a lot of details and particulars with ROC. When they are filing the details and particulars with ROC of Delhi, they have to file with ROC of Delhi. When these companies are filing particulars with ROC of Delhi, they in that list of particulars, they have to put the details of this authorized person. Who is this authorized person? He has to be an Indian resident only. And what is his work? His work is that he will receive notices on behalf of the foreign company. Now, this authorized person will automatically become a part of the CSR committee. So, if the CSR committee of a foreign company will have how many people now? It will have two people, guys. Number one, the authorized person, and number two, this authorized person is called as authorized representative. Authorized representative. So, this authorized representative and also a nominee. Foreign company will appoint one nominee. That nominee will also be a part of the CSR committee. So in the CSR committee, who are all the members? It depends upon, does the company have independent directors or it doesn't have independent directors. If it has independent directors, then at least 3 directors will be the members. If it doesn't have independent directors, at least 2 directors will be the members. Now comes my last set of points relating to CSR. You tell me, if the company does any activity, are you listening to me? If the company does any activity and the activity is for the benefit of employees of the company, or if the activity is for the benefit of the family members of the company, basically who is getting benefited? Only the employees of the company or the family members of the employees of the company, only they are getting benefited. Will this be considered as CSR, guys? This will not be considered as CSR. Why, guys? Why? Because through CSR, who has to get benefited? The general society has to get benefited and not just the employees of the company. Then tell me, if the company is making a contribution to political party, will it be considered as CSR? No. Then tell me, if the company is making a contribution to PM Cares Fund, Prime Minister Cares Fund, Prime Minister Citizenship Assistance Fund. Now here tell me, Prime Minister Citizenship Assistance and Relief in Emergency Situations Fund. Full form is Prime Minister Citizen Assistance in Relief and Prime Minister Citizen Assistance and Relief in Emergency Situations Fund. Will this also come under CSR? Yes, this will come under CSR. Tell me this now. What if your assessee in Income Tax Act donates money to PM Cares Fund? What will you do with that donation? What will you do with that donation? Section 80G. In Section 80G, category A, B, C, D. 100%, 50%, which category? 100%. In what mode should the company make the payment? In non-cash mode, irrespective of the amount. More than 2,000, company has to pay in non-cash mode. Remember. Now tell me, if company is making contribution to political party in Income Tax Act, which section? 80GGB. Company is contributing 80GGB. Others are contributing 80GGC. Right, guys? So with this, guys, 6 points I wanted to discuss with you with respect to CSR. So points are all clear. Which companies require CSR committee? Companies which fulfill any out of these 3 criteria. The companies which fulfill any out of these 3 criteria, those companies only have to spend money on CSR also. How much they have to spend? Minimum 2% of average net profit of 3 preceding financial years. What is net worth? Also we have checked. Net worth is paid up share capital plus free reserves plus securities premium minus accumulated losses minus deferred expenses minus miscellaneous expenses not written off. Net profit is nothing but net profit before tax, before setting off of losses. Do not include profit of overseas branches. Do not include dividend from other Indian companies which have complied with CSR. Then after this, we also learned CSR committee composition. It depends upon, does the company have independent directors or not. If it is a foreign company, in the CSR committee, we will have authorized representative to whom notices are served on behalf of the foreign company and nominee of the foreign company. Okay, guys. Now listen, with this much information, can you come to the question? Yes, can you give me the numbers? The most important concept in CSR are the 3 numbers. Net worth, how much? Tell me without seeing. Net worth should be how much? 500 crores. Okay. Turnover has to be how much? 1,000 crores. Okay. Net profit has to be how much? 5 crores. What sign should I put? Greater than or less than? Greater than. Okay. Should I put greater than or equal to? Yes, it should be at least 500 crore, at least 1,000 crore, at least 5 crore. Then tell me, do all the 3 criteria have to be fulfilled? Not necessary. Anyone fulfilled is enough. And last question, this anyone has to be fulfilled when? Current year, last year. It has to be fulfilled in the preceding financial year. Okay, everybody. Now, are you ready to read the question with me? It's a nice, big, huge question, but will the size of the question scare us? No. What will we do? How many times will we read? One reading itself, we will do the entire thinking. Okay, come on, sit up straight and read with me. The company Herbal Wellness Products Limited, which means what kind of a company is my company? It is a public company. It was registered in 6th April 2018. Long back it was registered with an authorized share capital of 300 crores divided into 30 crore equity shares of 10 rupees each. Okay. It has registered office at Trivandrum. It is a listed company, guys. So my company happens to be a listed company. Then the question says, listed in Bombay Stock Exchange, company was in compliance of all legal requirements on time. Okay. Company was producing health products. I don't care. Aggregate value of paid up share capital was 200 crores. So the paid up share capital of the company was 200 crores divided into 20 crore equity shares of 10 rupees each at the end of financial year 22-23. Extract of the balance sheet as on 31st March 23 showed the following figures. What is our current financial year, guys, for our examination? Our current financial year will be 23-24. So what will the preceding financial year be? Preceding financial year will be 22-23. So 22-23, all information they have given to us. In 22-23, what was a paid up share capital? The paid up share capital was 200 crores. Free reserves, securities premium, credit balance of P&L, reserves created out of revaluation profits, miscellaneous expenditure not written off. With this much information, we can find the net worth. Net worth means what? Tell me the formula. Paid up share capital plus free reserves plus securities premium minus, come on, tell me, minus P&L debit balance minus deferred expenses minus miscellaneous expenses not written off. Now, what is a paid up share capital? 200 crores. Do we have any free reserves, guys? Free reserves created out of profits, 200 crores. Any other free reserve do I have? Credit balance of P&L account, guys. This is also a free reserve. So free reserve, I have 60 crore over here. Securities premium is how much? 70 crore. Do we have P&L debit balance? No. Do we have any deferred expenses? No. Do we have miscellaneous expenses not written off? Yes. So minus 20. So what is going to be our net worth? It's going to be 510 crores, guys. And this 510 crores is more than how much? It is more than or equal to 500 crores. So therefore, can I conclude that CSR committee is required? Because CSR committee criteria is fulfilled, therefore I'll conclude that CSR is also applicable. Guys, I'll have to take a small pause. 1 minute. Listen, guys, continuing. So I was telling you that in this case, the net worth is how much? 510 crores. So the net worth is at least 500 crores. So therefore, yes, CSR will apply. We can conclude CSR committee company requires, and because company is fulfilling one out of these criteria, CSR is applicable for the company. Now the company says turnover of the company during 22-23 was 700 crores, which means turnover was how much? Turnover was less than 1000 crores. And what about the net profit? The net profit was 4 crores. So the net profit was within 5 crores. So out of my 3 criteria, how many criteria is fulfilled? Only 1 criteria is fulfilled. So will CSR apply for this company, guys? Yes, out of the 3 criteria, any 1 criteria fulfilled is enough for us. Then the question says that board of directors of the company consists of the following directors. R.C. Goyal is a managing director. Rudra, Mittal and Pragya are independent directors. Varun, Prabodh, Disha and Reshma are executive directors. So how many independent directors companies having? Rudra, Mittal and Pragya. They are the independent directors, and companies having other directors, Varun, Prabodh, Disha and Reshma, they are other directors. Now, with this much information, keeping in mind company is a listed company, tell me, in this company's CSR committee, how many people will be required, guys? It's a listed company. So listed company means it will definitely have independent directors. And yes, it is having independent directors. So if there are independent directors, we need minimum 3 directors, guys. And out of these minimum 3 directors, minimum 1 has to be an independent director. Okay. Then the question says that Vineet, who is a chief compliance officer of the company, he informed the board that company attracts the provisions of section 135. All formalities have to be complied. Is Vineet right? He is saying CSR is applicable. Is Vineet right? Yes, he is right. Company's net worth is 510 crores. Company's net worth is at least 500 crores. So yes, CSR committee is also required, and because CSR committee criteria is fulfilled, CSR provisions will also apply. Then the question says, CSR committee was formed consisting of R.C. Goel. Who is R.C. Goel? Managing Director. Varun, Prabodh and Vineet. Varun, Prabodh and Vineet to act and comply with the provisions of CSR. Yes, in the CSR committee, 1, 2, 3, 4, we have 4 people. Yes, we have minimum 3 people. But what is the problem? None of the independent directors, Rudra and Pragya, out of them at least one has to be there, but no independent director is there. So has the company complied with section 135? No, company, there is a violation. At least one independent director has to be in a CSR committee. Then the question says, company proposed a list of activities to spend 4% of average net profit. Is it okay? Company minimum requirement is 2%. If you spend more than 2%, up to you. But minimum 2% you have to spend. Yes, you are spending minimum 2%, which is fine. Then the question says 4% of average net profits made during immediately preceding 3 years. Is that correct? Should we take 2% of average net profit of last 3 years, or should we consider the current year also? No, what they're doing is correct only. We are supposed to see 3 preceding financial years only. Then the question says, CSR project for the benefit of employees and their family. Will this be considered as CSR? No. 50,000 to political party. Will this be considered as CSR? No. Contribution to PM Cares Fund. Will this be considered as CSR? Yes. Local activities like promotion of child and women education. Will this be considered as CSR? Yes. Why am I saying yes? What is the basis of my yes? Where is it written? It is written in schedule number 7. Schedule number 7. In your syllabus, what are the relevant schedules, guys? You have schedule 1, which talks about the format of MOA and format of AOA. You have schedule number 3, which talks about your financial statements format. Then you have schedule number 7, which talks about CSR. Okay. Now, do you have to mug up schedule 7? Do you have to learn the list in schedule 7? No. You just have to be aware that what and all is there in schedule 7. You just need to be aware what and all is there. Nobody will ask you to write a note on schedule 7. So you just have to be aware that what and all is there inside schedule 7. Okay, so this is my entire question. What are they asking me? On what basis Vineet, Chief Compliance Officer, arrived at the conclusion that company attracts section 135, turnover was only 700 crores? You tell me, on what basis did he arrive at the conclusion, guys? Net worth. Net worth is at least 500 crores. So therefore, yes, company, CSR is applicable for you. Then they're asking, how many members are eligible to be a part of CSR committee? Minimum 3 directors, out of which at least 1 has to be independent director. Whether CSR committee was in compliance with the provisions of Companies Act? No, CSR committee was not in compliance with the act. What was the problem? Yes, minimum 3 directors were there, but independent director is also required, which was not there. Then they're asking us whether activities proposed by the company were in accordance with the provisions of the Act. What will we say? First two are not as per the Act, the last two are as per the Act. Did you notice what was difficult in the question? Nothing. It was all very straightforward application of concepts. Right, guys? Nothing out of the world or extraordinary. ICAI gives us these kind of questions. Why? So that half of the students, as soon as they look at the size of the question, there itself they will be out. You're getting my point? Do you agree with me? You should always be smarter. You should always be smarter than what ICI thinks you are. Do not see, listen, do not let these kind of things trouble you. Size of the question, then there's mistype in the question. Don't let all that ever trouble you, guys. They are all just tricks of ICI to attack students mentally. This is called mental pressure. All right. And if you look at ICI question papers, the length of the questions, it is still better. If you look at CPA question papers, USCA, it's called CPA. If you look at their question papers, it is worse. If you look at CFA question papers, even worse. Each question will be super lengthy. All right. So that is what they're sort of trying to do over here. But anyways, let's start, guys. They're asking us 3 subdivisions. So we will also write our answers in 3 parts. Yes, are you ready? Can we begin? I'll give you a good number of fill in the blanks so that you don't sleep off in between. Come on, write with me. Give the heading question number 7. We will write the answer in 3 parts. So 7 subdivision 1. Write down under this. We'll first write the provisions, guys. First question is about what? On what basis Vineet concluded? You tell me this time. What and all you think I should write in provisions over here? First, just the first subdivision. They're asking me on what basis Vineet arrived at the conclusion. What and all you think I should write? The 3 conditions, okay. Apart from that, don't you think I should also explain what is net worth? Because net worth, I'll be talking about as one of the 3 criteria. And tell me, when we were computing net worth, did we consider a revaluation reserve? We had revaluation reserve. No, we did not consider it. Don't you think we will put a point on that also? So my provisions will have only 3 points. The 3 conditions, net worth formula, full formula, and revaluation reserve should not be considered. These will be my 3 provisions. Simple, guys. Come on, let's begin. Write down. The following are the, guys, first heading, corporate social responsibility hyphen criteria. Under this, write down, the following are the applicable provisions. The following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, write down the 3 points one by one. First of all, write down corporate social responsibility. In brackets, write down CSR. Provisions are stated in section 135. Put 135 in a box, double underline. The reason why I'm writing this section number, generally all students know CSR section number. So if you know the section number, ensure you write it. Stated in section 135. Same point, continue writing. CSR obligation is applicable. CSR obligation is applicable to those companies CSR obligation is applicable to those companies which fulfill any of the following three criteria for constitution of CSR committee. What are the three criteria, guys? Write down one below the other. First of all, net worth at least dash, or next line, turnover at least dash, or next line, net profit at least dash. Next line in brackets, write down any one of the above to be fulfilled in the dash financial year. Now fill in all the blanks till here. Net worth at least 500 crores, turnover at least 1000 crores, net profit at least 5 crores, and this criteria has to be fulfilled when? In the preceding financial year. This point contains all the keywords. Now come to the next line. We'll write what is net worth. Net worth is calculated as paid up share capital plus free reserves plus securities premium account plus, not plus, minus accumulated losses minus deferred expenses minus miscellaneous expenses not written off. Minus miscellaneous expenses not written off. Guys, I want you to tell me something. Should I write that net profit will include should not include overseas branches profit, should not include dividend from foreign company, from Indian companies which have complied with CSR. I should take net profit before tax. I should take net profit before setting off of losses. Should I write that over here? Is it relevant? I am writing about net worth, so should I write about net profit also? No. Make a conscious decision. Why am I writing net worth also? It was not required. Why am I writing net worth? I am writing net worth because that calculation is involved over here. That provision is involved over here. You're understanding, everybody. So please be wise. Make wise judgments like this. That in this question, is that concept even involved? Only if the concept you're applying in that particular question, only that concept you will apply. I am not doing any application of net profit concept over here. So I will not write about it. Okay, then write down one last point over here in the provisions part. One last point. Revaluation reserves are not included. Revaluation reserves are not included in net worth. Underline revaluation reserves, underline not included. Okay, So this is it with the provisions part. Now I'll come to the facts of the case. Now in facts of the case, what will I write? I'll mention just the main points that this company's net profit is 4 crores, turnover is 700 crores, and net worth computation also I will show. But in fact, over here, it's a computation based question. I don't think facts of the case will make sense over here because there is nothing specific as such that can be written in facts of the case over here, because we are answering on what basis the chief compliance officer arrived that company attract section 135. So my main answer here is going to be net worth computation. I can't show net worth computation in facts of the case. So therefore, I will straight away come to the analysis over here. How do I start analysis? How do I indicate to the examiner I'm writing analysis? Applying the above provisions, under this write down. First, we will show the net worth calculation. Net worth of Herbal Wellness Products Limited for preceding financial year 22-23 is as follows. Under this, write the table one below the other. Make a table, a broad particulars column and amounts column. Under particulars, paid up share capital. How much is the paid up share capital here? 200 crores. Then we will consider free reserves. How much is our free reserves? Inside we have free reserves of 200 crores. We also have credit balance of P&L account. So free reserves 200 crores. P&L credit balance is how much? 60 crores. Then securities premium. How much is that? 70 crores. Then, do I have any P&L debit balance? No. Do I have any deferred expenses? No. Should I still write them here? I won't, because I've already written the whole formula over here. So I've already communicated to the examiner that I know what and all is there inside it. So therefore, I will not write those two extra line items unnecessarily. I will straight away consider miscellaneous expenses not written off. How much is that? 20 crores. You got to subtract this. So what's your net number? 510 crores. Call this as net worth of preceding financial year 22-23. Below this table, in brackets, write down revaluation reserve rupees 25 crores not included in net worth. Not included in net worth. Okay. Then under this next line item, write down net worth computed above is at least rupees 500 crores. Next line, write down as 1 out of the 3 criteria mentioned above in section 135 is fulfilled, comma, the company attracts the CSR obligation. Company attracts the CSR obligation under section 135. Alright guys, so this was my analysis. Then after this, what do I write? The conclusion. To write the conclusion, I've told you even yesterday, I'll go see exactly what the examiner is asking me. On what basis Vineet CCO arrived at this conclusion that the company attracts section 135 as turnover was only 700 crores. So I just have to write on what basis he concluded. So write down, thus, under this write down, Vineet's conclusion that section 135 is applicable to the company, is on the basis of the net worth criterion. On the basis of the net worth criterion. That's all. So this is it about your first subdivision. Alright, simple. I wrote the provisions. Main part of the provisions are the 3 points. Then I showed the net worth computation. This will carry good number of marks. And then I gave my conclusion. Guys, conclusion, always remember, to the point. What are they asking you? Same language, to the point. Okay. So that is it about this question, everybody. Understanding? Now can I go to... See, I'll tell you one thing now. Generally, in a normal answer paper, in an average answer paper, if you see, what conclusion would be written for a question like this? Students will simply conclude thus, CSR is applicable for the company. Would that conclusion be correct? CSR applicable to the company. Would that conclusion be correct? No. The question is asking me on what basis did Vineet conclude? That basis I have to put. You're understanding? So you have to be very careful that what verb are they using in the question. Are they asking you to examine? Are they asking you to recommend? Are they asking you to say whether the provisions are complied or not complied? So you got to see what exactly are they asking you, and that is exactly what your conclusion has to be. So this was your first subdivision, guys. Now let's do the second subdivision. Write down question number 7, subdivision 2. Now what is this question about? Advise the company how many members are eligible to be part of the committee and what is the criterion, whether CSR committee formed was in compliance with the provisions of the Act. Now inside this, how many things are they asking you? They're asking you 2 things. Thing number 1, how many members are eligible to be a part of the CSR committee? What is the criteria? So guys, this is going to be straightforward theory answer, that because it's a listed company, it has independent directors. Minimum 3 directors will be there in the CSR committee, out of which 1 has to be independent director. That's all. Then they're asking me whether the CSR committee formed was in compliance with the provisions of the Act. What will I say? That here this company had 3 directors, but however, one of them is not independent director. So because of that reason, the company's CSR committee is not in compliance with the Companies Act. So in this second criteria, will I have provisions, facts of the case, analysis, conclusion and all? No, they're asking me two things over here. First question is what I highlighted in yellow. Second question is this part, that whether the CSR committee is proper or not. So I will answer just these two things and I will close. Come on, write down answer to the second subdivision. What heading I should give? I'll give the heading CSR committee. I'll answer this in points. Write down point A first. What is my first question? The first question is, what is the criteria? How many members are eligible to be a part of the CSR committee? Under this, write down. According to the provisions of Section 135 of Companies Act 2013 and corresponding rules, the CSR committee committee's composition in a listed company shall be at least dash directors, out of which at least dash shall be an dash director. Fill in the blanks. At least 3 directors, at least one of which shall be an independent director. So this is it about the first question. They were asking me how many members are eligible, what is the criteria. I've mentioned that. Now comes the second part, whether CSR committee was in compliance with the provisions of the Act. Write on second subdivision now. In the given case, Herbal Wellness Limited is a dash company. It is a listed company. Next line, write down. Its CSR committee comprises of, under this, make a table, one column for name, another column for designation. Who and all is there in the CSR committee? Number 1, we have R.C. Goel. Who is R.C. Goel? Managing Director. Then we have Varun, Prabodh and Vineet. Now Varun and Prabodh are, I'm using the same language which they are putting in the question. Varun and Prabodh are executive directors. So these two, I'll write executive directors. And what about Vineet? He is the chief compliance officer. Then write down the next line item. While the CSR committee does comprise of at least 3 directors, comma, none of them is an independent director. None of them is an independent director. Therefore, or thus whatever, therefore or thus whatever. Thus, the CSR committee is not in compliance of the Companies Act 2013 and corresponding rules. It is not in compliance of Companies Act 2013 and corresponding rules. So in the second subdivision, I did not write it like a case study based question. I answered to what they asked me. They asked me what is the criteria. I wrote the criteria here. In CSR committee of a listed company, who and all should be there, I wrote that here. Then they asked me that whether the CSR committee was in compliance of the act and the rules. So I concluded that no, it is not in compliance, underline, not in compliance of the act and the rules. Now, last thing they're asking us, whether activities proposed by the company were in accordance with the provisions of the act and the rules. So we'll have to write about the 4 activities one by one. Give the next heading, question 7, subdivision 3. Give the heading CSR activities. Under this, we'll write down the subdivisions one by one. What was the first activity? Project for the benefit of employees and their families. Write down point A, CSR projects for benefit of employees and their families. Under this, write down no activities that benefit only employees and their families are not included in CSR. Not included, underline. Then subdivision 2 or B, whatever. What's the second activity? Contribution to political party. Write on point B. Contribution to political party. Under this, write down no contributions to a political party are not included in CSR. Underline, not included. Then write down subdivision C. Contribution to, third subdivision is PM Cares Fund, guys. Contribution to PM Cares Fund. Under this, write down yes, as per schedule dash, contribution to PM Cares Fund is an eligible CSR expenditure. Now, I want you all to be careful. Should I write schedule 7 like this? Should I write it as a number like this? No. We write it in Roman numbers, guys. Schedule 7. Be careful. Then last point, point D. Local activities like promotion of child and women education. Give the heading. Local activities for promotion of child and women education. Under this, write down yes, as per Schedule 7, such activities, as per Schedule 7, as per Schedule 7, spending on such activities is an eligible CSR expenditure. It is an eligible CSR expenditure. I'm hoping everybody is done. That's it with this question, guys. A nice, big, lengthy answer you would have written. Can we close this question here? Can we go to the next question? Yes, come on. Let's proceed. Let's go forward. So through this question, good number of points in CSR got revised for us. And also you've understood how exactly to write. We will be doing one more question on CSR a little later. That question will be targeting how to compute at 2%. This question was targeting the 3 criteria. 2% how to calculate that, targeting that also. One more question we will be doing. We'll do that a little later. Can we come to the next question now? Question 8 we finished. Come to question number 9, guys. Question number 9 is a simple question from LLP Act. Let's begin. Let me discuss the provision with you quickly. Provision is very simple, guys. You know it very well. Tell me, everybody, in the LLP there must be how many partners? In the LLP we need how many partners? Minimum 2 partners. Out of these, and can these 2 partners be individuals? Yes. Can these partners be body corporates? Like, can a company be a partner in an LLP? Can an LLP be a partner in another LLP? Yes. Minimum 2 partners. They can be individuals or they can be body corporates. It doesn't matter. Now, out of these partners, whoever are these partners, how many should be designated partners, guys? Minimum 2 out of the partners have to be designated partners. But tell me, can these be companies also? Can even a body corporate be designated partner? No. Out of the partners, we will have at least 2 of them designated partners. These designated partners have to be only individuals. But what if all my partners are companies, guys? If all my partners are companies, these companies will have to nominate individuals. Those nominated individuals will be considered as designated partners. Okay. Out of the designated partners, how many of them have to be a resident? How many of them have to be a resident, guys? Minimum one has to be a resident. Now, resident means you must have stayed in India for how many days? Resident means you must have stayed in India for at least 120 days in the financial year. That's all. Concept is clear. How many partners? Minimum 2 partners. Individuals, body corporates, doesn't matter. Out of the partners, minimum 2 of them will be designated partners. Designated partners, only individuals can be designated partners. If all the partners are company, yes, allowed. But in that case, designated partner still has to be individual only. So the company will have to nominate individuals who will be designated partners. Out of the designated partners, at least one of them has to be a resident. Now, come on, everybody, have a look at this question. This is a mock test paper question. Mohan and Rahul are college friends and they intended to do trading in musical instruments. I don't care. They met Mr. John and Miss Kate, who are non-resident Indian. Who is non-resident? John and Kate, they are non-resident Indians, and they have all decided to form LLP. So totally, how many partners in this LLP, guys? Mohan, Rahul, John, Kate, 4 people. Can 4 people create an LLP? Yes, minimum 2 required, 4 can create LLP. Under the name and style of Mohan John LLP, is the name of the LLP okay? Name of the LLP should have the word LLP in its name, so that everybody who's dealing with the entity knows that okay, this is an LLP. And also the name of the LLP should not be identical or similar to the name of another company, or to the name of another LLP, or to the name of another registered trademark. Then the question says initial capital contribution is 1 lakh. LLP was incorporated in 2020. Okay. LLP intends to appoint John and Kate as designated partners. At least 2 designated partners, which is fine. But out of the 2 designated partners, is at least one of them a resident? No, John and Kate both are non-resident. Consults company secretary. You as company secretary advise the LLP on the appointment of Mr. John and Kate as the only designated partners of the LLP. So you got to advise on the appointment of John and Kate as designated partners. So we'll begin, guys. A typical case study based question. We'll write the provisions, the facts of the case, analysis, conclusion, all the 4 parts we will write. Are you ready? Will you write along with me, please? Give the heading question 9. Give the heading designated partners. Now under this write down, the following are the applicable provisions. The following are the applicable provisions of dash. Be careful. Following are the applicable provisions of LLP Act, which year? 2008. Will you listen to me to one small point? I got reminded of this. Listen to me, everybody. Stop writing and listen. We see this mistake a lot of times in CA Foundation. Foundation students do this. What mistake? 90% of their time they spend on learning Contract Act, guys. That's the biggest chapter for them in CA Foundation. So when they're writing answers, they are so used to writing following are the applicable provisions of Indian Contract Act 1872. And what happens? Every answer they write that, because autopilot mode hand writes that following are the applicable provisions of Indian Contract Act. If it's an LLP question and if you write the name of the law itself wrong, what happens? Do you lose step marks or do you lose the entire marks? You lose the entire marks. Okay, we see this very often in foundation. You are matured enough, you will not make this mistake. Be careful. All right, this is not how you want to lose marks. Okay, so write down the following are the applicable provisions of LLP Act 2008, and under this write down the points one by one. First point, write down every LLP shall have at least dash partners who may be dash or dash. Fill in the blanks, please. Every LLP shall have at least 2 partners who may be individuals or body corporates. Next line, write down. No writing big paras, guys. Since yesterday, if you're noticing, all the answers we're writing in points. Same way you will be writing. Next point, write down out of the partners, at least dash shall be dash partners Next line, write down. Out of the designated partners, comma, at least dash shall be a dash. Next line, write down. Resident refers to a person who has stayed in India for dash dash days in the financial year. Can you fill in all the blanks, please? One by one, fill in all the blanks. Tell me, out of the partners, at least two what? Don't write two partners. Be more specific. At least two individuals shall be designated partners. Out of the designated partners, at least one shall be a resident. Resident means you should have lived in India for at least 120 days or 120 days. More than 120 days or at least 120 days. At least 120 days in the financial year. Okay, so this is it about the provisions, guys. Now I'll write about the facts of the case. Write down here under this, what are the facts of the case? This is LLP, Mohan John LLP. This Mohan John LLP is having 4 partners, and out of them, 2 non-resident partners, John and Kate, they are trying to make them as LLP is intending to appoint them as designated partners. So write down over here. Here, next line. Mohan John LLP comprises of 4 partners. Next line. LLP intends to appoint John and Kate, comma, both non-residents as designated partners. This is my facts of the case. Now I'll write down the analysis. Write down applying the above provisions. Next line, write down. Yes, Mohan John LLP does have at least 2 partners. Next line, write down. Yes, out of the 4 partners, at least 2 individuals John and Kate are intended to be appointed as designated partners. Next line, write down. However, both designated partners, John and Kate, are non-residents. are non-residents. That is, neither of the designated partners is a resident. Now we'll come to the conclusion, guys. Before we write the conclusion, what do we always do? We go and see exactly what the question is asking us. US Company Secretary advised the LLP on the appointment of Mr. John and Kate as the only designated partners. What will your conclusion be? Thus, under this write down, Mohan John LLP is advised that appointment of John and Kate, both non-residents, as designated partners will result in violation of LLP Act 2008. That's all. Anyways, coming back to our discussion now, we're done with question number 9 and 10. Come to question number 11 now. Listen, I'll quickly give you a revision of the concept involved and then we will write down the answer to this. Okay. So what we're going to be discussing now is about these two words, may and shall, important. Now, with respect to may and shall, whatever you want to learn, whatever you have to learn, whatever you have to remember with respect to this concept, I will give you the entire answer, okay? So that you can learn this concept directly from the notes that you're writing. So this is a very important part, a category A concept, a very important concept of interpretation of statutes. This concept you will not skip from interpretation of statutes. What do you have to learn from here? I will give you the answer. You just learn that answer and go. Okay, listen to me. First tell me, what does it mean? Come to this word may first. What does the word may indicate? May indicates that the provision is directory or the provision is enabling. What does the word shall indicate? Shall indicates that the provision is mandatory, that the provision is imperative. Guys, how many words are you seeing on your screen? You are seeing 4 words. These 4 are your key words for a may shall question. May is directory, may is enabling, shall is mandatory, shall is imperative. Are you listening, everybody? May is directory, may is enabling, shall is mandatory, shall is imperative. These 4 words have to be there in your answer. See, this is the general rule, but there are some exceptions. There are some exceptions where even though the word may is written in the act, we will read it as if it is shall. What are those situations? Like, for example, if the law says, example, company, you may file your annual return, and if you don't file your annual return, you will have to pay 1,000 rupees penalty, for example. So yes, the word may is written, but it is coupled with penalty. May coupled with penalty becomes what? An obligation. You will read it as if it is an obligation. You will read it as if it is a mandatory obligation. Even though they've used the word may, you will read it as if it is shall. Getting my point, everybody? So even though they use the word may, sometimes may be read as shall. This was one example. There are totally some 3 to 4 situations. There's another situation where we have to see the intention of the lawmaker. If giving the word may, this meaning is defeating the intention of lawmaker, then we have to read it as if it is shall. Then if it is a beneficial provision, like if the provision is for the benefit of laborers, for the benefit of the poor people, then if giving the word may, if giving this word shall meaning, if that change in meaning will ensure that benefit is provided to laborers, or benefit is provided to children, women, to the poor sections of the society, then that interpretation will be chosen. So if giving the word may mandatory meaning, if that's going to result into more beneficial interpretation, that's what we should interpret it as. So even though the word may is not mandatory, sometimes it is read as shall. Similarly, sometimes even though they use the word shall, if the intention of the lawmaker is otherwise, even though he used the word shall, we will read it as may. So it all depends upon in what context is the word used. It all depends upon what is the intention of the lawmaker. However, when they use the word must will always be what? Must only. Must will always be considered as a command. Must will always be considered as a mandatory provision only. Must will always be must only. Alright, so this is the provision, guys. Now come on, let's go ahead and read the question first. The question says, Ayush and Vipul are confused about the provisions of Section 3 of Companies Act. Section 3 provides a company may be formed for lawful purposes, may be formed for any lawful purpose. So the word may is used. May means what? It is not mandatory, guys. It is directory. It is not mandatory. So does it mean company may be formed for lawful purpose or unlawful purpose? No. Giving the word may, this meaning is defeating the intention of lawmaker. Lawmaker's intention cannot be allowing companies for unlawful purpose. So even though the word may is used over here to meet the intention of lawmaker, we will read it as if it is shall. Ayush and Vipul are in difficulty about the meaning of the word may. Whether it should be taken as mandatory or directory, what will your answer be? It has to be taken as mandatory. Yes, the word may is used. Yes, may is generally directory. But here the intention of the lawmaker cannot be allowing companies for unlawful purpose. It has to be for lawful purpose only. So even though it is directory, may is directory, we will interpret it as if it is mandatory. Okay, are you ready? Can we write down the answer? When you're writing this answer with me for this question, do not write like robots. Try to understand what you're writing, because you're going to be learning this may shall concept from your answer only. So understand what you're writing, involve yourself, put your 200% over here and write with me. Give the heading question number 11. Question 11. Give the heading interpretation of may. Straight away, I will write the concepts, guys. All right. And concepts of which law? Which law? See, may, there's no law called interpretation of statutes. Which act is applicable over here? May and shall. The meaning of may and shall is given in General Clauses Act also. So we have to apply General Clauses Act also here. Interpretation of statutes chapter also over here. I'll tell you how to write. I'll show you. Write down. The following are the applicable provisions of General Clauses Act 1897 and interpretation principles under the rule of exceptional construction. I'll help you understand what you've written. Listen to me. Why have we written General Clauses Act? Because even General Clauses Act talks about the word may and shall. We also have to apply interpretation of statutes chapter, because in interpretation of statutes chapter you have your primary rules of interpretation. One of the primary rules of interpretation is the rule of exceptional construction. The rule of exceptional construction, which talks about the meaning of the word and, it talks about the meaning of the word or. So this rule also talks about may and shall. So when you want to talk about your interpretation chapter, you will say that the following are the applicable interpretation principles. Understanding, when you want to talk about interpretation of statutes chapter, what will you say? The following are the applicable interpretation principles. Here the interpretation principles are from the rule of exceptional construction. That is why I've written the rule of exceptional construction. Otherwise, if you want to talk about interpretation of statutes chapter, you will just write following are the applicable interpretation principles. Okay. Now under this, write down one by one the points. The first point, the word may, let's write about shall first. The word shall used in a provision, the word shall used in a provision indicates the word may used in a provision indicates that the provision is dash or dash. Indicates that the provision is, tell me the keywords for may, directory or enabling. Then write down the next point. However, to give effect to the dash of the legislature, sometimes the word may is interpreted with dash force. Fill in the blanks. To give effect to the intention of the legislature, sometimes the word may is interpreted with mandatory force. What are the four situations? What are the four exceptions? Let's write about them one by one now. Write down the first exception, where a discretion is coupled with an dash. Discretion is coupled with an obligation. I'll tell you what this means. In my example, they use the word may, right? Company may file annual return. May indicates we're giving the company an option at the discretion of the company, at the option of the company. But because I coupled it with a penalty, I'm coupling discretion with obligation. So discretion plus obligation, it will be read as if it is shall. Then comes point B, where the provision confers a dash benefit. Provision confers what benefit? Provision confers a positive benefit. If you remember, I just now told you, if the provision is for the benefit of the poor, for the benefit of the laborers, then we will see which interpretation is going to actually, give the benefit. Whichever interpretation actually results in giving the benefit, that interpretation we will take. If shall makes it more beneficial, we will interpret it as if it is shall. Then comes point C, to advance the dash and suppress the dash. This is common point. This everybody will know. To advance the remedy and suppress the mischief. And the last point, where giving a discretionary meaning, would defeat the object of the statute. Where giving a discretionary meaning would defeat the object of the statute. Done. So these are the 4 situations where I will read the word may as if it is shall. These are the 4 situations where even though the word may is used, I will read it as if it is shall. Now these were the provisions, guys. Now come and see what exactly is the question saying. The confusion is about interpreting the word may. Company may be formed for lawful purpose. So let's write about that now. Next line, write down. Here, next line, write down. While interpreting in quotes, write down, company may be formed for lawful purpose, close quotes, underline the word may. It can be said that the word may shall be interpreted with dash force. Shall be interpreted with mandatory force. Next line, write down, give the reason why. What do you think? Out of these 4 reasons, because of which reason in our case we are interpreting the word may as shall? Out of the 4 reasons, because of which reason? Tell me, is it a discretion coupled with obligation? Is there any penalty? No. Are we talking about any positive benefit for laborers, women, for children, for poor people and all? No. Are we talking about advancing the remedy and suppressing the mischief? Advancing the remedy, suppress the mischief will be, there's a problem. We want to solve the problem. So the provision is giving a solution for the problem. Is the provision talking about any solution for any problem? No. Where giving discretionary meaning would defeat the object of the statute. This is the point. If I read the word may as it is, if I read the word may as may only, that is, if I read the word may as discretionary, then the whole intention of the lawmaker will be defeated, because the intention of the lawmaker cannot be allowing the company for unlawful purposes. That cannot be the intention of the lawmaker. So if I read the word may as may, then the lawmaker's intention will get defeated. So point D will apply. So write down, we have to give the reason. We have said that may will be read as shall, but we have to give the reason now. Write down, this is because the legislative intent cannot be allowing formation of a company. The legislative intent cannot be allowing formation of company for unlawful objects. Hence, giving a discretionary meaning would defeat the objects of the law. Now, conclusion. Before conclusion, we always go and see what exactly the question is asking us. The question is telling us both Ayush and Vipul are in difficulty about the meaning of the word, whether it should be taken as mandatory or directory, whether it should be taken mandatory or directory. What is our conclusion? Mandatory. So write down, thus, in the given case, may is to be interpreted as mandatory. It is a word may, but I will interpret it as if it is mandatory. Okay, so this was it about this question. Now, I know it's almost time, but I want you to give me another 5 to 7 minutes more. I'm not going to start the answer to this question, but I at least want to discuss the provision with you so that when you come back from your dinner break, we can straight away start writing the answer. And guys, please mark this may shall answer which I've written for you. You will learn this concept from here itself. This much is sufficient. We've written all the 4 reasons why, what are the situations in which may will be read as shall. We've written all the 4 situations. You ensure you learn this from here. Definitely do not, even if you're skipping the chapter, at least ensure that this concept you learn from here. Okay, now listen. Question number 12 is our question from the prospectus chapter. First question we're writing from the prospectus chapter, it is this question. It's a very interesting provision. This question is based on a case law. So I wanted to write for you at least some questions with computation. We did that yesterday. I wanted to write for you at least one question which is based on a case law so that you should know that where in your answer the case law has to be written. So that is, for that purpose, I've brought this question. It's a 6 marks question from prospectus chapter relating to civil liability. It's an extremely important question. Peak versus Gurney. This case law was removed from the old syllabus, but in your new syllabus, they have brought this case law back. So it's not going to be too late. I mean, till they ask this question. Anytime now, this question can be asked. So let me tell you what is the provision involved over here. See, we know very well that whenever the company makes a public offer, whether it is IPO, whether it is FPO, company issues a prospectus, guys. Now, in this prospectus, when do you say that the prospectus has a misstatement? When do you say that the prospectus has a misstatement? If the prospectus contains an untrue statement or if the prospectus contains an omission. Now, what do both these words mean? Are they same or are they different? Untrue statement means I've written a lie, I've written a false statement. Omission means what? I have not even written it in the prospectus. Like for example, let us say the company has declared dividend out of capital. Is the company allowed to declare dividend out of capital? No, company is not allowed to declare dividend out of capital, but let's say company has declared dividend out of capital. In the prospectus, the company wrote that we declared dividend out of profits. So is it an untrue statement or is it an omission? It's an untrue statement. Company has written a lie. But what if the company just writes, we declared dividend full stop? It neither said out of profits nor it said out of capital. It just said we declared dividend full stop. This will be an omission. You are trying to hide information. That will be an omission. So prospectus, if it contains an untrue statement or if it contains an omission, then the prospectus has a misstatement. If the prospectus has a misstatement, this prospectus is now called as a misleading prospectus. It becomes a misleading prospectus. Now let's say there is a person, Mr. Blue. This person, Mr. Blue, he read the prospectus. He read the misleading prospectus. He relied upon the misleading prospectus. Relying upon the misleading prospectus, he subscribed to the company's securities and he suffered a loss as a result. For this loss, that he has suffered, the company and 5 more people, who are these people I will tell you, the company and 5 people, they will have to compensate Mr. Blue for this loss. Are you understanding? Are you listening, everybody? Yes, I'll repeat again. The prospectus has a misstatement, because of which the prospectus has become a misleading prospectus. If the prospectus becomes a misleading prospectus, the persons who relied upon this prospectus and relying upon it subscribed to the company securities and suffered a loss. For that loss, the company and some 5 people will have to compensate this person. So they'll have to compensate only which person? The person who subscribed and suffered a loss. Will they compensate everybody? No, only those persons who relied upon the prospectus, subscribed to the securities and suffered a loss. Alright, everybody. Now listen, this concept comes under the provision of civil liability. This is called as civil liability, where these people are liable only to this person who has suffered a loss. These people are not liable to general society. They are liable only to this person who has suffered a loss. Now tell me, can these people say that, can they say that, oh, it was a genuine mistake? Oh, so sorry, it was a genuine mistake. We had no intention of cheating you. Can they say like that? They are able to prove it also. Let's say that there was no intention to cheat. Can they take protection under the heading of intention? Can they say we did not do this intentionally, so please don't punish us? Can they take the excuse of intention? No. You can take the excuse of intention only in criminal liability. Only in criminal liability you can take the excuse of intention. Only in criminal liability you're punished. 447 punishment is given. If there is a misstatement in prospectus, 447 punishment is given. 447 punishment means what? Fraud punishment is given. If you are caught, under criminal liability, if you're getting punished for fraud. Here you will be punished only if there is an intention, only then you will be punished. You must have learned this in CA Foundation, that fraud means intentionally done. You remember doing it, you remember learning it. In fraud, there is intention. So in criminal liability, I am punishing you under 447. 447 is fraud punishment. Like how whenever you hear 420, Indian Penal Code 420 talks about fraud. As soon as you hear 420, you think about fraud. That is because 420 talks about fraud punishment in Indian Penal Code. Similarly, in Companies Act, wherever there is fraud, we write about section 447. So 447 is fraud. Fraud will come into the picture only if you've done it intentionally. If you do it unintentionally, honest mistake, genuine mistake if you did, then no criminal liability. Understanding? But in civil liability, I don't care whether you did it intentionally or not. I don't care. In civil liability, what are the conditions? Condition number 1, there was a misleading prospectus. Condition number 2, a person relied on this misleading prospectus. Condition number 3, relying on this misleading prospectus, this person subscribed to the securities of the company. Condition 4, because of subscribing to the company securities, this person suffered a loss. How many conditions? 4 conditions. Now in these 4 conditions, is it written anywhere that these persons did the misstatement intentionally? No. So whether they did it intentionally or not, it doesn't matter. If these 4 conditions are fulfilled, welcome to civil liability. Understanding, guys? Now I'll quickly tell you what happened in the case of Peak versus Gurney. The most important case law in your syllabus, Peak versus Gurney. So what happened is, there was a company. This company issued a prospectus. It wanted to make a public offer. Let's say there was this person, Mr. A. This person, Mr. A, subscribed to the securities. Company allotted shares to A. Then A transferred the securities to B. Now this person B, he was Mr. Peak. This person Peak, when the company had come up with the prospectus, that time itself Mr. Peak had read the prospectus. He had read the whole prospectus, but that time he did not apply for the shares. Later, he bought the shares from A in the stock market. He bought the shares from A. Later, it was realized that in the prospectus there was misstatement, it was a misleading prospectus. Once that news came out, it was a misleading prospectus, this company's share price fell. So when the share price fell, who suffered a loss? Mr. Peak, he suffered a loss. So Mr. Peak sued the company and the 5 people to compensate him for the loss. What do you think? Will he get compensation for the loss? Can he apply this concept? You understood the story? Mr. Peak had read the prospectus, but that time he did not apply for the securities. Later, he bought the securities from A in the stock market. Then news came out that there was misstatement, it was a misleading prospectus and all news came out. Share price fell. Peak suffered a loss. When Peak suffered a loss, he sued company and the 5 people that compensate me for the loss. Will civil liability apply over here? Let's check the conditions one by one. Is it a misleading prospectus? Yes. Did Peak rely upon the prospectus? Yes, he read the prospectus, he relied upon the prospectus. Did he suffer a loss? Yes. But did he subscribe to the securities? Subscribed means what? Subscribed means he should have directly purchased from the company. Did he directly purchase from the company, guys? No. Did Mr. A subscribe to the securities? Did Mr. A subscribe to the securities? Mr. A subscribed to the securities. You can use the word subscribe for A. What did Peak do? Peak only purchased the securities. Did Peak subscribe to the securities? No, he purchased the security. This is a secondary market transaction. Subscribed means what? Primary market transaction. So condition 3 is not fulfilled over here. No civil liability. Peak did not get any compensation from company and 5 people. Concept is clear, everybody? Yes. So you got the whole point. Mr. Peak over here, he purchased shares. He did not subscribe to the shares. He purchased the shares. So he cannot take any protection under civil liability at all. Is everybody crystal clear with this discussion? The 4 conditions, it should be misleading prospectus. He should have relied upon the prospectus. Relying upon the prospectus, he should have subscribed to the securities. And because of this, he should have suffered a loss. Subscribed means it should be a primary market transaction, not purchasing shares, subscribing shares. With this in your mind, one quick reading to the question. With a view to issue shares to the public, a prospectus containing false information was issued by the company. So what kind of prospectus is this? This is a misleading prospectus. Then the question says, Mr. X received copy of the prospectus from the company but did not apply for allotment of shares. He did not apply for allotment of shares. Allotment of shares to the general public was completed by the company within stipulated period. A few months later, Mr. X bought 2000 shares through the stock exchange at a higher price, which later on fell sharply. X sold these shares at a heavy loss. Mr. X claims damages from the company for the loss suffered on the ground that the prospectus issued by the company contained a false statement. Can Mr. X claim damages, guys? You can claim damages only if there is, listen, will civil liability apply over here? No. Why? Because Mr. X had purchased the shares from the stock market. It's a purchase. It's not subscribing. It is buying. Condition 3, same thing. Exactly the same thing that happened in Peak versus Gurney. He will not get any damages over here. You might think now, can't we apply criminal liability? See, in criminal liability, can an individual sue the company? No. In criminal liability, can Mr. X claim damages? No. In criminal liability, what is the punishment for the company? The punishment for the company is 447 punishment, where they will pay fine and they will be imprisoned. The persons who did wrong, the persons who authorized the issue of prospectus, they will be punished with a fine and they will be imprisoned. But will this person get any damages? No. You're understanding? In criminal liability, will this person who suffered a loss, will he get any compensation in criminal liability? No. In criminal liability, the persons who authorized the issue of prospectus, who intentionally did this fraud, they will be punished under 447. They'll have to pay imprisonment. They'll have to pay a fine. They'll be imprisoned. But will this person get any compensation? No. So can criminal liability apply over here? Criminal liability is anyways impossible over here. Mr. X is asking for damages, which case he can get compensation. He can get compensation only in civil liability. Will civil liability apply over here? Civil liability also will not apply over here because he is not a subscriber. Now understood? Everybody, so that is it with question number 12. Right away, I'll start writing the answer for you because we just discussed the provision. We'll start with the heading. Let's say this is question number 12. So give the heading misstatement in prospectus. Under this, write down the following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, first we'll write about civil liability. So give the side heading civil liability. And write down if there is a dash in the prospectus, the company and the following persons, company and the following persons shall be liable to dash every person who dash to the company's securities relying on a dash in the prospectus and has sustained any dash or damage as a consequence thereof. Fill in the blanks, guys. If there is a misstatement in the prospectus, company and the following persons shall be liable to compensate every person who subscribe to the company securities relying on a misstatement in the prospectus and has sustained any loss or damage as a consequence thereof. Now, who are these following persons? Let's write them down one below the other. First of all, basically, you understood what you're writing about? You're saying that if there is a misstatement in the prospectus, who will be liable? Company and following persons will be liable. They will be liable to whom? All the four conditions I have written. What are the four conditions? Persons who subscribe to the company securities, relying on the misstatement in the prospectus, and have sustained any loss or damage thereof. Remember the four conditions, guys. Condition number one, there must be a misleading prospectus. There must be a misstatement in the prospectus. Condition 2, you must have relied upon the misstatement. Condition 3, you must have subscribed to the securities and you must have suffered a loss. So I've written about all the 4 conditions over here. Now, who are liable? Company and following persons. Who are those 5 persons? We'll write about them one by one. The first person is directors. Directors of the company. Second, persons who authorized the company, persons who authorized themselves to be named and are so named in the prospectus as directors. Next point, promoters. Next, persons who authorized the issue of prospectus. And last point, experts. Who are the 5 people? Once again, directors of the company, persons who authorize themselves to be named and are so named in the prospectus as directors, promoters, persons who authorize the issue of prospectus, and experts. These are the 5 persons who are responsible. In criminal liability, who is responsible, everybody? Do you know that? In criminal liability, only this point, guys. Only the persons who authorize the issue of prospectus, only this 4th point, only they are liable. Okay. So we've written about the entire civil liability concept. Now we'll write about Peak versus Gurney. Now Peak versus Gurney we'll write after the provisions. We've written all the provisions. Now we will write about the case law Peak versus Gurney. So write down next line. The facts of the given question are similar to the case of Peak versus Gurney. Now, continue writing. Under this next point, write down. Here, a fraudulent prospectus was issued on behalf of the company. A fraudulent prospectus was issued on behalf of the company. Next point, write down. Peak did not subscribe to the shares at that time. Next point, write down. Later, he purchased the shares. Guys, are you noticing? I'm being very careful about where I'm using the word subscribe and where I'm using the word purchase. Did you notice? He did not subscribe to the shares. Later, he purchased the shares. Later, continue writing. Later, he purchased the shares of the company from the stock exchange. From the stock exchange. Next point, write down. He bought an action against the directors for deceit in brackets write down, on the basis of prospectus. And last point, write down what was the conclusion of the case. Write down courts held that the directors are not liable. The directors are not liable as the shares were not purchased. Sorry, as the shares were not subscribed. As the shares were not subscribed on the basis of prospectus. Underline, directors are not liable. Underline this entire conclusion, guys. This is the most important point, that there is no civil liability because the shareholder did not subscribe to the shares. He just purchased the shares. Now see everybody, for a moment, pause writing and listen to me. When you have a case study based question, your answer will have 5 parts. You will first write about the provisions, then you will write about the case law involved, then you will put the facts of the case, then you will put the analysis, and then you will put the conclusion. So what is the extra point over here? The case law. So when you have the case law, you will write the case law right after the provisions. That's exactly what I've done over here. I first wrote the entire provision relating to civil liability. Now see, in civil liability, you also have some 4 situations where, some 4 exceptions where civil liability concept will not apply. I will not write about all that over here because it is not even relevant to this question. We also have the concept in civil liability where we talk about onus of proof is on whom. I will not talk about that also because even that is not relevant to my answer. So whatever was relevant about civil liability, I wrote about that who are the 5 people and when are they liable, what are the 4 conditions. I've written all my 4 conditions over here. I've written about the 5 people over here. Then we've written about Peak versus Gurney. So we've done the provisions, we've done the case law. Now we will write about the facts of the case. So write down how do we indicate to the examiner that we're writing about facts of the case. Here, next line write down, Mr. X bought 2000 shares of the company from the stock exchange. Next point write down, later he sold the shares at a loss and claimed damages for the loss suffered on the grounds of misstatement in the prospectus. Facts of the case, not more than 2 sentences, guys. This much is enough. Mr. X bought 2000 shares, then he sold the shares at a loss and he claimed damages. Now write down the analysis. Applying the above provisions along with the court's decision, in the case of Peak versus Gurney, Applying the above provisions along with the court's decision in the case of Peak versus Gurney, it's spelled like this, Peak and Gurney. Okay, so under this write down, it can be said that civil liability will not arise if the shares are simply purchased from stock exchange. Next line, write down. Civil liability is attracted only when shares are subscribed on the basis of a prospectus, in brackets write down, misleading and as a consequence thereof the shareholder suffers a loss. Guys, here you got to underline some points. In the first sentence, underline will not arise if the shares are simply purchased. Underline the word purchased from the stock exchange. Next line, underline is attracted only when the shares are subscribed. Underline the word subscribed. Then write down the next point. As Mr. X purchased the shares through the stock exchange, it cannot be said that he subscribed for the shares. It cannot be said that he subscribed for the shares Next line, write down. He cannot claim damages from the company on the grounds of misstatement in the prospectus. Thus, no, Mr. X's claim for damages is not justified. See, look at the question. Question is asking us, examine whether Mr. X's claim is justified. So I've answered exactly to that, no, Mr. X's claim for damages is not justified. You got the point, guys? We've written an amazing answer for this question. We first wrote the whole provision, then we wrote what happened in the case, then we wrote the facts of the case, analysis and conclusion. I will suggest, could you please take a minute now and just read the answer once again what you've written, because the whole structure was little different in this question because case law was involved. So I want you to just go through this whole thing once again, because an extremely important concept also we've spoken about through this whole discussion. See if you've understood. Take a minute, read the whole thing, and then we will continue with the next question. All right, so let's continue, guys. I hope you've read the question. Now, in this question, how would marks be allocated? You will have, I'm just giving you a rough idea that how would marks be allocated. It would be, let's say, a 5 marks question. It cannot be a 6 marks question. The largest number of marks that can be allocated in your examination is 5 marks. So mostly how it would be is, for this entire point, writing this entire point correctly, you will be getting around 1.5 marks. Of course, that 1.5 marks again will be split. Let's say for these 5 points, half a mark. For writing these 4 conditions, let's say another half a mark. For writing that, that there is a misstatement in the prospectus, compensation, these keywords, basically this entire civil liability discussion can be fully 1.5 marks. Okay. Then after this, writing about peak and gurney, this may carry another 1.5 marks, this entire case law that we've written. Facts of the case, I've told you, will not carry marks. Then the analysis will carry, let's say, another 1 mark, all right. And then in fact, the analysis should carry 1.5 marks, and your conclusion may be half a mark. So sort of that is how your breakup of marks would be. When I say analysis 1.5 marks, the breakup of this 1.5 also will be there. That, we wrote that this whole conclusion, this whole analysis that we have made, that civil liability is attracted only when shares are subscribed and not when shares are purchased. This is the most important point of this entire analysis. This is the point which will carry the most number of marks, that civil liability comes into the picture only when shares are subscribed and not when they are purchased. So your breakup of marks would be something like this. I hope you understood. 1.5 marks for the civil liability provisions, 1.5 marks for the case law, and 1.5 marks for the analysis, and maybe half a mark for the conclusion. All right. Now come to the next question, everybody. This was question number 12. Question number 13 is a question that we have from our management and administration chapter. Let me explain the concept which is involved in the question, and then we can start writing. See, we know about quorum, right? Quorum is a minimum number of members that must be personally present. Only then we can transact business at the meeting. Unless the quorum is present, we can't start the meeting. So for quorum, we will wait for how much time? We will wait for quorum for half an hour. Within half an hour, if quorum is present, then great. Within half an hour, if quorum is not present, what will we do? Within half an hour, if quorum is not present, then we will adjourn the meeting. We will adjourn the meeting. Understanding point number 1? So quorum has to be present within how much time? Quorum has to be present within half an hour. Within half an hour, if quorum is not present, we will have to adjourn the meeting. Now listen to the next point. We will see when was the AGM held. From the date of the AGM, within how much time do you have to file the financial statements, and within how much time do you have to file the annual return? Tell me about annual return first. Annual return has to be filed within how much time, guys? Annual return has to be filed within 60 days. Within 60 days. And within how much time do you have to file the financial statements of the company? Financial statements have to be filed with the ROC within 30 days. Now, this is one point where students get confused a lot. They mix up between these two numbers. I'll tell you how to remember this. One small hint I'll give you. The hint is, first we file financial statements, F and F. So first financial statements 30 days, then only 60 days annual return. Do not get confused between this. This is one of the most important time limit in your syllabus, that annual return has to be filed within 60 days from the date of AGM. Financial statements have to be filed within 30 days from the date of the AGM. But guys, however, what if the AGM is not held? What if the company is not even holding the AGM? If company is not even holding the AGM, then you will see what is the last day by which AGM should have been held. So from that day, within 30 days, within 60 days, as the case may be, we have to file. Are you understanding, everybody? So from the date of AGM, we have to file within 60 days, within 30 days. But if AGM itself is not held, if AGM is not held, can I say I will not file these two because AGM is not held? Even if AGM is not held, we still have to file this. So we will file from within how much time? The starting point will be what? If there is no AGM, we'll have to compute this time limit from the last day by which AGM should have been held. Are you listening, everybody? Computation will be from the last day on which AGM should have been held. And if you're talking about holding the AGM, what is the time limit, guys? When should the AGM be held? What's the time limit for AGM? Do you guys know? There are totally how many time limits? There are totally 3 time limits. And out of the 3 time limits, you have to pick whichever is the earliest of these 3 time limits. What are the 3 time limits? Tell me. First of all, the gap between 2 AGMs should not be more than 15 months. This is one time limit. The second time limit, in each dash year, there has to be minimum 1 AGM. In which year? In financial year or calendar year? In every calendar year. In every calendar year, there must be at least 1 AGM. And lastly, from the end of the financial year, within how much time you should hold the AGM? Within 6 months, you should hold the AGM. So there are 3 time limits. Time limit number 1, gap between 2 AGMs should not exceed 15 months. Number 2, in each calendar year, you must have at least 1 AGM. And from the end of the financial year, within 6 months, you have to hold the AGM. So like this, you will get 3 time limits. Out of the 3 time limits, you will pick whichever is the earliest. That would be the last day by which you have to hold the AGM. That would be the last day by which you have to hold the AGM. And guys, extra discussion. Are you aware that what if the company did not hold the AGM within this much time? Can the company ask for extension? Can the company ask for extension? If yes, how much time extension they will get? They can ask for extension, guys. How much time extension will they get? Are you aware of it? How much they can ask for extension from ROC? ROC will give maximum how much extension? ROC will give maximum 3 months extension. But now tell me, if I'm holding the first AGM, just now company got incorporated, guys. First AGM we have to hold. For first AGM, how many time limits you have? First AGM, you don't have 3 time limits. You have only 1 time limit for the first AGM. And what is that 1 time limit? That 1 time limit is 9 months from the end of the financial year. Generally, end of the financial year, how much time? 6 months. But for first AGM, it is 9 months from the end of the first financial year. First AGM, can you ask for any extension? No, you are already given how much time extra? You're already given 3 months extra. No, from 6 months, 9 months, already you are given 3 months extra. So you will not get any extension for the first AGM. Are we clear with this? Yes, so this was our entire discussion regarding this quorum and this AGM point. So I've discussed some extra points also with you. Can I quickly give you a revision around this whole thing, and then we'll look at the question, guys? The point is quorum has to be present within half an hour. If quorum is not present within half an hour, we have to adjourn the meeting. And what if in the adjourned meeting also there is no quorum, guys? Then what will you do? In the adjourned meeting also, if there is no quorum, then how many ever members are present, whether they are present in person or whether they are present through proxy, in the adjourned meeting, even if 1 member is present, even if 1 proxy is present, we will consider them itself as quorum and we can start the meeting. Okay, then tell me, within how much time are you supposed to file the annual return? Within 60 days from the date of AGM. Within how much time are you supposed to file the financial statements? Within 30 days from the date of AGM. What if AGM is not held? You're supposed to still file within 60 days, within 30 days from the last day by which AGM should have been held. What is the last day by which AGM should have been held? It depends. There are 3 time limits. Out of the 3 time limits, we will pick whichever is the earliest. Gap between 2 AGMs should not exceed 15 months. In each calendar year, we must have at least 1 AGM. And from the end of the financial year, within 6 months, we have to hold the AGM. If you are not able to hold the AGM within this much time, then we can ask the ROC for extension. ROC will give us how much extension? Maximum 3 months extension. If I am holding the first AGM of the company after incorporation, how many time limits are applicable for me? Only 1 time limit is applicable for me, and that 1 time limit is within 9 months from the end of the financial year. For the first AGM also, can I ask for extension? For the first AGM, I cannot ask for any extension. One last point, guys. Do you have to learn punishments and penalties? You don't have to learn them all, but some important ones, it is good if you are able to learn at least some important ones. Like for example, section 447 is a very important penalty. You should know it. Similarly, what if annual return is not filed? You're supposed to file the annual return within 60 days. No. What will happen if you don't file the annual return on time? What is the punishment? Even this is extremely important. You should know this punishment. Who will be punished? First of all, company will be punished, officer in default will be punished. Two categories will be punished, company and officer in default. They will be punished with how much fine? They will be punished with 10,000 rupees fine. But however, if there is a continuing failure, they are not filing only. If it's a continuing failure, per day of delay, like if let's say they filed on the 70th day, so how many days of delay? 10 days of delay. Per day of delay, they'll have to pay 100 rupees, 100 rupees per day of delay. And what is a maximum penalty now? The maximum penalty for the company is going to be 2 lakh rupees, and for the officer in default, it will be 50,000 rupees. Getting my point, everybody? Annual return punishment is important. For company, maximum 2 lakh. For officer in default, maximum 50,000. They have to pay 10,000 rupees. Per day of delay, 100 rupees per day of delay in case of continuing failure. Total put together for company, it should not exceed 2 lakh. For officer in default, it should not exceed 50,000. Keep all these points in mind, and now come to this question. I have not only discussed with you the provisions involved in this question, I have discussed some extra provisions also for you just to give you some revision. Come to this question now. The question says, Party Limited is manufacturing premium quality milk-based ice cream in two flavors. First chocolate and second butterscotch. Company called its AGM to lay down financial statements for shareholders' approval. Due to want of quorum, meeting was cancelled. Is this right, guys? Because quorum was not there, they cancelled the meeting. Is this right? No. If quorum is not there, what are the directors? What is the company supposed to do? You're supposed to adjourn the meeting. Even in the adjourned meeting, if there is no quorum, then also you should not cancel the meeting. Even in adjourned meeting, if there is no quorum, how many ever members are present, whether in person or through proxy, how many ever people are present, assume them to be quorum. It's a legal assumption. Deem it to be quorum. Assume how many ever people are present as quorum and start the meeting. But if quorum is not there, can you ever cancel the meeting? No. Guys, tell me, if quorum is not there, there is one situation where you can cancel the meeting. Which situation is that? Generally, if no quorum, you're supposed to adjourn the meeting. Extra question only I'm asking you. Are you able to tell me there is one situation where if there is no quorum, you can cancel the meeting also? Does anybody know what that situation is? If meeting is called by requisitionists, you must have learned in EGM, no, that members can request to call the meeting. So if if the members are requesting, the board has to conduct the meeting. If the board is not calling the meeting, if the board is not conducting the meeting, then the requisitionists, they themselves will call the meeting. If requisitionists, if they themselves are calling the meeting, and in that meeting itself, if there is no quorum, then what we can do? Then we can cancel the meeting. Understanding, if requisitionists are calling the meeting, see, requisitionists, the members requested the board, but the board is not listening to them. Board is not calling the meeting, board is not conducting the meeting. Then the requisitionists, they themselves can conduct the meeting within 3 months. When requisitionists, when they are calling the meeting, in that meeting, if there is no quorum, no question of adjourning, it will simply get cancelled. Getting my point? Just an interconnected point, gave you one small revision. Anyways, coming back. So here the company has done one thing wrong, guys. Company has cancelled the meeting. Company, instead of cancelling the meeting, you should have adjourned the meeting. Then the question says, directors of the company did not file annual return with ROC. Directors were of the idea that time for filing of returns within 60 days from the date of AGM will not apply as AGM was cancelled. Is this right? Even this is wrong. Even though AGM is not held, company are supposed to see what is the last day by which AGM should have been held. And from that day, within 60 days, you should have filed. Even here, there is a contravention. Has the company contravened the provisions of the Companies Act? Yes, of course. And how will it be penalized? We will say company and officer in default, both will be punished with 10,000 rupees. And continuing failure, per day, 100 rupees. Total maximum for company, 2 lakh rupees. Total maximum for officer in default, 50,000 rupees. All right, question is clear. Can we start writing the answer? Come on, guys, give the heading. Put the question number first. Question number 13. It's a case study based question. We will write our answer with all the 4 parts: provisions, facts of the case, analysis and conclusion. All the 4 parts we will write. Give the heading. Give the heading: quorum, comma, annual return. Under this write down, the following are the applicable provisions. The following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, write on the provisions one by one, guys. You tell me what are all the provisions we should write. You tell me this time. Tell me what are all the concepts I should write about. Very good. I should write about quorum. That quorum has to be present within half an hour. If not present, we should adjourn the meeting. That point we should write. Okay. Then what else I should write? Don't you think I should also write first what is quorum? It's a minimum number of members who must be present. Only then we can transact business at the meeting. I should write what is quorum. I should write about the half an hour point. What else? Annual return time limit. Very good. Then what else? I will also write what if the annual return, what if AGM is not held? Then annual return you should file within 60 days from the last day by which AGM should have been held. That also I will write. Then I will write about the penalty point also. Tell me, should I write about the requisitionists point? That if meeting is called by requisitionists and there if there is no quorum, we should cancel the meeting. I will not write about that. That's an extra point. Then tell me, should I write about the due date by which AGM should be held? No, even that is irrelevant for me. Are they asking us to tell, when AGM should be held? No. So all that becomes extra point. So judge wisely what is relevant, what is not relevant. Whatever provision helps you in analysis, put those provisions only. I'll show you. Write down one by one. First of all, we will define quorum. Quorum is the dash number of dash that must be dash dash to constitute a meeting and transact dash thereat. Fill in the blanks, please. Quorum is the minimum number of members that must be personally present to constitute a meeting and transact business thereat. Tell me, why have we written the word personally present? Can we include proxy also in quorum? When we are counting quorum, can we include proxy also? No. That is why we've written members personally present. You're going to count only those members who are personally present. Okay. Then write down the next point. We'll write about the half an hour point now. If the quorum is not present within dash hours of appointed time, comma, the meeting shall be dash to same day, same time, same place in the dash dash or some other day, time or place as decided by dash. Tell me this, guys. Many points over here I did not discuss with you while giving you a revision. Are you able to recall learning this? If quorum is not present within half an hour, meeting has to be adjourned. This is fine. It shall be adjourned. The adjourned meeting, when and where will you held? Either on the same day, same time, same place next week, or or some other date, time, place, who will decide? Some other date, time, place as decided by board of directors. Okay, the adjourned meeting has to be held either on the same day, same time, same place in the next week, or some other date, time, place which the board of directors will decide. Okay. Then after this, we will write about the annual return point. This much is enough about quorum, guys, because about quorum, the only point is that they cancelled the meeting. This was the only point about quorum, that quorum was not there, so they cancelled. Instead, they should have adjourned. This is the only relevant point about quorum. We've written the point. Now come to the annual return point. We'll put the time limit and all. Write down. Annual return should be filed with dash in. Guys, do you remember? Does anybody know what's a form number for annual return? Does anybody know the form number for annual return? MGT what? It's MGT 7, okay? If you remember the form number, you can write. If you don't remember the form number, what will you write? Prescribed form. Okay, don't take too much pressure about form numbers. If you're able to recall the form number, put the form number. Otherwise, just say prescribed form. So annual return should be filed with dash in MGT 7 within dash days from the date of annual general meeting. Put the word AGM in brackets so that you can use this short form. Same point, continue writing in the next line. If AGM is not held, comma, it should be filed. It should be filed within dash days. Within dash days from the last date by which AGM should have been held. Can you fill in the blanks, please? Annual return should be filed within 30 days or 60 days. Financial statement, 30 days. Annual return, 60 days. Within 60 days, it should be filed with ROC in MGT 7 within 60 days from the date of annual general meeting. If AGM is not held, it should be filed within 60 days from the last day by which AGM should have been held. Lastly, what's the only provision we are left with now? The penalty. What happens if you don't file annual return on time? Write down, if the annual return is not so filed, dash, and every dash shall be punished, dash, and every dash shall be punished with a fine of rupees dash, and in case of dash failure, comma, with a further penalty of rupees dash per dash, during which the default continues. Next, in brackets, write down maximum rupees dash for the company and rupees dash for officer in default. Please fill in all the blanks. If the annual return is not so filed, then who will be punished? Company and every officer in default shall be punished with a fine of rupees 10,000, and in case of continuing failure, with a further penalty of rupees 100 per day during which the default continues, maximum rupees 2 lakhs for the company and rupees 50,000 for officer in default. Done? This is it about the entire provision, guys. There were 4 provisions involved over here. What is quorum? What if quorum is not there within half an hour? Adjourn the meeting. Then annual return time limit and annual return penalty. Now we'll write down the facts of the case. Write down here. Now, what are the facts of the case? What has happened over here? See, it's very simple. Tell me, what's the first point over here in facts of the case? No quorum, meeting was cancelled. What's the second point in the facts of the case? Because meeting was not held, annual return was not filed. Only 2 points over here, guys. Should we write more than 2 sentences here? No. If you are running out of time, skip this. Doesn't carry marks. Alright, write down over here. First point. Due to lack of quorum, comma, what's the company's name? Nutty Buddy Limited. Nutty Buddy Limited cancelled its AGM. Next point, write down. Also, as AGM was cancelled, comma, annual return was not filed by the company. That's all, guys. This is what has happened in the story. Now we'll write down the analysis. Next line, write down. Applying the above provisions. First point, write down. Due to lack of quorum, comma, Nutty Buddy Limited's AGM should have been adjourned instead of being cancelled. Should have been adjourned instead of being cancelled. Next point, write down. Despite not holding the AGM, comma, annual return of Nutty Buddy Limited should have been filed within 60 days from the last day by which AGM should have been held. Now tell me, should I write the penalty once again? That because Nutty Buddy Limited did not do so, this will be the punishment. That will be unnecessary repetition. So see what I'll write. I'll simply write like this. as Nutty Buddy Limited's directors failed to do so, the company and such directors will be punished as outlined above. You understood what I've written in this last part? I've mentioned, I just put that because the company did not file the annual return. Punishment same like what is written above. I'm not going to write the punishment all over again. It will be unnecessary repetition. All right. And now comes my conclusion. How do you handle the conclusion, everybody? Come on, sit up straight. Tell me. We'll see what exactly is the question asking us. Has the company contravened with the provisions of Companies Act? What will you say? Yes. Write down point 1. Yes. The company has contravened the provisions of Companies Act 2013. Second point, what else are they asking us? How will it be penalized? Now, in conclusion, will I write the punishment again? No, I will simply write punishment as outlined above. That's all. No need to write it all over again. I've already written it fully in the provisions part. Won't make sense if we write it all over again. All clear? Yes, so that is it with this question, guys. Can we proceed forward? Yes, I hope. And guys, one more thing. I'm very sure many of you will be thinking this. Ma'am, what if we did not know the penalty? Then how many marks would have been deducted for us? It's a 5, let's say it's a 5 marks question. 1 mark is what will be deducted from you. Because here they are specifically asking. If they don't ask you for penalty specifically and if you don't write, like in this question, had they not said this, had they just asked, has the company contravened with the provisions of Companies Act, then will penalty carry marks? No. But they're specifically asking you for penalty. That how will it be it will be penalized? They're specifically asking you for the penalty. So here penalty will carry 1 mark. All right. So the only that is the risk that you're taking when you don't learn penalties and go. All right. And if at all they ask penalties in your question paper, can your question paper be filled with penalties? Not really, guys. Max 2 to 3 marks of penalty. Beyond that, they cannot ask. 2 to 3 marks, upper limit 4 marks. Beyond that, they cannot ask. So should you spend time and energy learning the penalties? I don't think so, because the marks at stake are pretty less. Time taken will be a lot if you actually sit to learn the penalties. I'll give you a list of some important penalties. If you don't have the time, you at least learn those important penalties, because point number 1, mostly they will not ask you a penalty question, and even if they do, 99% it will be one of the important penalties. So that way you will be taking very little risk. Come on, let's go to the next question, everybody. Can we come to question number 14? Now, you remember I had told you even in yesterday's class that disqualifications are very important in your syllabus. How many disqualifications are you having? 3 sets of disqualifications you're having. Now, and also, do you remember I had told you in deposits, if they ask you a question from deposits, mostly it's going to be about what? Exclusions from deposits, that list of exclusions. Similarly, auditors chapter, if they will definitely ask you a question, right? That question will be mostly from the disqualifications of auditors. I mean, that is how it is generally seen, that the most common question from auditors is from the disqualifications. So exclusions in the deposits chapter and disqualifications in the auditors chapter always have to be done really, really well. So I brought 2 questions. I brought this question from containing 2 subdivisions relating to auditors' disqualifications. Let me explain to you the concept which is involved in these 2 subdivisions, and then we will read the question and we will write down the answer. Listen to me. Let's say there is this company There is a company, let's say Gajendra Limited. I'll tell you what exactly has happened over here in this question. There's a company Gajendra Limited, and there is this person, Mr. Maninder. The question says Gajendra Limited was incorporated in 1995. Its main business is manufacturing tiles. It is in the process of appointing statutory auditor. Advise whether the following are qualified to be appointed as auditor of Gajendra Limited. We're talking about Gajendra Limited. Maninder, a qualified CA, holds equity shares of 2 lakh nominal value of Narendra Limited, which is an associate company of Gajendra Limited. Listen, be careful. Whom do we want to appoint as auditor? Mr. Maninder. Where do we want to appoint him as auditor? In Gajendra Limited. Where is he holding shares? In Narendra Limited. Who is Narendra Limited? An associate of Gajendra Limited. You apply your knowledge first and you tell me first, is Maninder qualified or is he disqualified? Is he disqualified or is he not disqualified? 2 lakh rupees? Come on guys, you should know this 1 month before the exam. You need to know all this. He is disqualified, guys. So, and what if this was within 1 lakh? What if this was, let's say, 20,000? Then within 1 lakh if he's holding, then also very good, then also disqualified. Let me give you a reminder of what the provision is. Listen to me. The provision goes like this. Maninder, you want to be appointed. Listen carefully, everybody. Not able to answer properly. I'm explaining the whole provision. Listen to me. Mr. Maninder, you want to be appointed as an auditor in Gajendra Limited? If yes, you, your partners, and your relatives. You, your partner, and your relatives, none of you should hold securities where in company, associate company, subsidiary company, holding company, and subsidiary of holding company. Cash and subsidiary of holding company. Yesterday, which concept we saw? CSH. Which concept we saw that auditor should not render services to CSH. Section 144, guys. There we saw auditor should not render prohibited services to CSH. Can auditor render to associate company? Yes, associate company you can render. You can't render to CSH. If you render 144 services to CSH, auditor will become disqualified to be appointed where? Auditor will be disqualified to be appointed where? In the company. Right, guys? So this was yesterday's concept. So coming back here, the question says, Maninder, partner, relatives. Auditor, his partner, his relatives. None of them should hold any securities in the company, associate, subsidiary, holding, and subsidiary of holding company. If relatives are holding, for relatives alone, there is one relaxation. What is the relaxation? Relatives can hold up to 1 lakh face value, guys. Face value, not market value. Relatives can hold up to 1 lakh face value. Now, in this question, what happened? Maninder, is he holding securities in Gajendra Limited? No. In this question, Maninder was holding securities in Narendra Limited. And who is Narendra Limited? Narendra Limited is an associate company of Gajendra Limited. It will fall over here, guys. So tell me, can Maninder be appointed as auditor? No, Maninder will be disqualified, but he will be disqualified to be appointed where? We're talking about being appointed as an auditor where? In Gajendra Limited. So in Gajendra Limited, Maninder will be disqualified. Is this crystal clear? Yes, guys. So I'll summarize it for you once again. The summary is very simple. The auditor, his partners, and his relatives, none of them should hold any securities in the company, associate company, subsidiary company, holding company, subsidiary of holding company. If they hold securities, then this person cannot be appointed as an auditor in the company. Relatives alone can hold securities up to 1 lakh face value. Beyond that, not allowed. Here in this question, Maninder is holding securities in the associate. Even one share if you hold gone, you will become disqualified. Okay, guys. Now listen to the second point. Read the second point with me. What is the second point saying? Guys, read carefully because you only will be writing answers. I'm hoping you're listening to the provision carefully because I'm just discussing the provision with you. Answer to this question you will be writing on your own. I'm going to give you 5 minutes time. You are only going to write the answer. So listen carefully. Come to the last part now. The question says, Dinesh, a qualified CA whose son owes Gajendra Limited 99,000. Can Dinesh be appointed as an auditor of the company? His son owes Gajendra Limited 99,000. Can he be appointed as auditor of the company? Again, I'll help you with the provision. The provision is like this. Mr. Dinesh wants to be appointed as an auditor in Gajendra Limited. The provision says, Mr. Dinesh, you, your partners, your relatives, your partners, your relatives, none of you should have borrowed a loan. From whom? From the company, associate company, subsidiary company, holding company, from the subsidiary of holding company. From any of these, neither you nor your partner nor your relatives should have borrowed a loan. If you have borrowed a loan, up to how much is okay? Up to 5 lakh loan is okay. If the loan is more than 5 lakh, then you will be disqualified. 1 lakh limit applies to guarantee. 1 lakh limit applies to relatives plus securities plus FMB. There 1 lakh limit will apply. Okay. For loan, it is 5 lakh limit. So neither Dinesh nor his partner nor his relatives, none of them should have borrowed a loan from cash or subsidiary of holding company more than 5 lakh. Up to 5 lakh, then okay. Only if it is more than 5 lakh, if it is more than 5 lakh, what will happen? Who will be disqualified? Dinesh, you will be disqualified. Disqualified where? Tell me correctly. You will be disqualified where? In the company. In the company, you can't be appointed as auditor. In Gajendra Limited, you can't be appointed as auditor. Relative means what? Relative means what? If I am the auditor, relative will include my parents, my brothers, my sisters, my children, my spouse, members of the HUF, and also my children's spouse. Understanding? So plus spouse HUF members, plus spouse HUF members. If I am the auditor, it will include my brother, my sister, my children and their spouses, my parents, my spouse and the members of the HUF. Alright, now here parents will include step parents, brothers and sisters will include step brothers and step sisters, children will include step children. So any of the relatives are, if they borrowed a loan of more than 5 lakh, then only disqualified. In this question, if you see, son borrowed. Is son covered in relative? Yes. He borrowed 99,000. 99,000 is within 5 lakhs, guys. So will any disqualification be attracted? No, no disqualification will be attracted. Now look at the one last subdivision now. Rajendra, a qualified CA who has been convicted in the year 2005. He was convicted in the year 2005 by a court for an offense involving fraud. If you are convicted by any court for offense involving fraud, 3 points, convicted by any court for an offense involving fraud, for how many years are you disqualified? For 10 years, you're disqualified, guys. For 10 years. But here, when was he disqualified? When was he convicted? He was convicted in 2005. 2005. Since 2005, 10 years have lapsed, guys. We are in 2024 now. So we have definitely crossed 10 years. So is it still disqualified? No, now he is not disqualified anymore. Point to be noted, he is disqualified for 10 years. 10 years from when? He is disqualified for 10 years from the date of conviction. Ensure you write it fully, then you get full marks. So if you are convicted for any offense involving fraud, you will be disqualified for how many years, everybody? You will be disqualified for 10 years. 10 years from when? 10 years from the date of conviction. Here 10 years have lapsed. Because 10 years have lapsed, he is not disqualified anymore. He can be appointed as auditor. Are we clear? Yes, totally there are 3 subdivisions. These 2 subdivisions we will do together. But this first subdivision, can you write the answer on your own? 2 marks. 2 marks, 2 marks, 2 marks. Thinking it's a 2 marks question, I want you to try writing the answer on your own. I'll give you one small instruction that on which basis you can ensure you do the answer properly, so that even you are content. All right. Very simple instruction I'm giving you. Do you remember yesterday when I was discussing with you about deposit exclusion? What instruction I gave you over there? First mention whether it is considered as deposit or not considered as deposit. First mention that. Then give your reason. Same thing even over here. First mention whether disqualified or not disqualified. Then give your reason. When you give the reason will have 2 points. Are you listening to me? I'll repeat once again. First, I will write whether he is disqualified or not disqualified. Then I will give the reason. When I give the reason, first I will write the provision and then I will apply the provision in the question. First I will say what the provision says and then I will talk about Gajendra, Maninder, all of them I will talk about. First I will write the provision but. Alright, so first you will write the conclusion, disqualified, not disqualified. First you will write the conclusion and then you will give your reason. In reason, first you will write the provision, then only you will write the analysis. Will you try this? Yes, guys, it's going to be for 2 marks. 2 marks means you can give yourself how much time? 2 marks means you can give yourself 3.5 minutes time. Time yourself and begin. Exactly 3.5 minutes, we will start discussing. Will you do this? I'll keep the question open in front of you. Imagine you're writing the answer in the examination. I've given you a lot of tips since yesterday how to write answers. Keep all that in mind and put down the answer in your notebooks. Let's see how your answer is. Come on. Let me also do the hard work for you. I'll show you what exactly you could have written. So this is answer to question number 14. Question 14, what's the heading? Disqualification of auditor. So first I told you we will write our conclusion. What is our conclusion? Maninder, is he qualified or disqualified? I've already concluded it for you. He is disqualified because he is holding securities in the associate of the company. He himself holds even one security gone, he will be disqualified. So first let's write down that. Write down first subdivision. Maninder is disqualified to be appointed as auditor of Gajendra Limited. Gajendra Limited. Then leave a line, write on the subheading reason. First write on the provision. As per the provisions of Companies Act 2013 and corresponding rules, a person is disqualified from being appointed as auditor if he or his dash hold any security or interest in dash, dash or any dash of dash. Fill in all the blanks, please. If he or his partners or his relatives hold any security or interest in the company, associate company, subsidiary company, holding company, or any subsidiary of holding company. So this is it about my reason. This is my provision. Now I will apply this provision in this question. So I leave a line and write down, in the given case, as Maninder himself is holding shares of Gajendra Limited's associate company, comma, he is disqualified from being appointed as auditor in Gajendra Limited. Now, I want everybody to tell me, should we write about casual vacancy also? Yesterday, remember, I gave you the whole concept of casual vacancy. Should I write about casual vacancy over here? No, why not? Give me the reason. When do we write about casual vacancy? Only if you have been appointed as auditor and then you attract a disqualification, and because of that you have to leave. That is where I will apply the casual vacancy point, guys. Do you all remember? DDRR, death, disqualification, resignation, removal. Here, if you see, he was not even appointed. There is no question of him leaving. Before appointing itself, he is attracting a disqualification. We can't even appoint him. There is no question of casual vacancy. All right, guys. This was the first subdivision. Now come to the second subdivision. In the second subdivision, Dinesh, a qualified CA, son owes Gajendra Limited 99,000. Here, what is your answer? First of all, tell me, is he qualified or is he disqualified? He's not disqualified, right? He's eligible. He can be appointed because the loan is within 5 lakhs. Now answer my question. Should I write that he is qualified, or should I write that he is not disqualified, or can I write either of the two? Should I say qualified? Should I say not disqualified? Or can I write either of the two? Guys, you got to be careful. You'll have to write not disqualified. You can't write qualified, because tell me, is this concept from qualifications or is this concept from disqualifications? It's from disqualifications. In qualification point, there's only one single point, that you should be a chartered accountant in practice holding a valid COP of ICAI. That's the only point. Or if you are a firm, then your majority of the partners have to be practicing chartered accountants. You're understanding? So this is a disqualification concept. This is not a qualification concept. If you look at your ICAI RTPs, MTPs, in some questions, they would have interchanged. They would have written qualified in some questions. In some questions, they would have written not disqualified. They would have written both. But the ideal answer, you're understanding, the ideal answer is what? That you are not disqualified. You don't say you're qualified. Either the person is disqualified or he's not disqualified. You're getting my point? You can't say he is not qualified. You can't say he's qualified. You either say he's disqualified or you say he's not disqualified. Small point, guys, but remember, may make a difference if they make the paper correction strict. Okay, so let's write down the answer to the second subdivision. First, we'll give our conclusion. Write down. Dinesh is not disqualified to be appointed as auditor of Gajendra Limited. Leave a line and give the subheading reason. Under reason, write down as per the provisions of Companies Act 2013, and the corresponding rules, comma, a person is disqualified from being appointed as auditor, if he or his dash are indebted to the company or associate company or its subsidiary or its holding company or subsidiary of holding company for more than rupees dash. Fill in the blanks, guys. As per the provisions of Companies Act and corresponding rules, person is disqualified from being appointed as auditor if he or his partners or his relatives are indebted to the company, associate, subsidiary, holding and all for more than rupees 5 lakhs. Guys, will you remember? For loan, the limit is 5 lakhs. For guarantee, the limit is 1 lakh. Okay. So this is the reason, the provisions part. Now I will apply the provisions in my case. I will say that over here it is within 5 lakh only, hence not disqualified. So write down over here, next line, leave a line and write down. In the given case, comma, Dinesh's son owes Gajendra Limited only rupees 99,000. That is, the indebtedness does not exceed rupees 5 lakhs. Hence, or thus, whatever, Dinesh is not disqualified. Dinesh is not disqualified from being appointed as an auditor of the company. Dinesh is not disqualified from being appointed as auditor of the company. Done? So this was the second subdivision, guys. Come on, everybody. Let's go to the last subdivision now. Let's go to the third subdivision. The third subdivision says Rajendra, a qualified CA who has been convicted in the year 2005 by a court for an offence involving fraud. Here, what is the time limit that I'll keep in mind? 10 years. 10 years have lapsed. So what's my conclusion? Is he disqualified or is he not disqualified? He is not disqualified. Same way, guys, I'll write the conclusion first. Come on, let's do this. Answer to the third subdivision. Guys, you're all following, right? Everybody is writing with me, I'm hoping. Third subdivision, write down. Rajender is not disqualified. Rajender is not disqualified from being appointed as Auditor of Gajendra Limited. Leave a line, give the side heading reason and write down. As per the provisions of Companies Act 2013 and corresponding rules, a person is disqualified from being appointed as auditor if he has been convicted by a dash for an offense involving dash. Same point, continue writing, but if dash years have lapsed from the date of such dash, he is not disqualified anymore. Now fill in the blanks, everybody. He is convicted by a court for an offense involving fraud, but if 10 years have lapsed from the date of such conviction, he is not disqualified anymore. So this was my reason provisions. Now I'll connect the reason to my case. Write down over here. In the given case, leave a line and write down, in the given case, Rajendra was convicted for such an offense in 2005. As 10 years have lapsed, he is not disqualified. He is not disqualified from being appointed. He is not disqualified from being appointed as auditor of the company. All right. So that's it with this question, guys. We've written all the three subdivisions, even for exclusions from deposits, even for auditor's disqualification. I'll first write my conclusion, then I'll give my reason, and then I'll connect the reason with my question and I'll conclude. All right, all clear? Good revision is also happening. 3 disqualifications we've revised. Yesterday also we saw one disqualification, at section 144 services. So out of the 10 disqualifications, 4 disqualifications we've already revised. Can we go ahead to the next question? You done writing? Yes, everybody? Come on, let's come to question number 15. Question number 15 is again a question from your General Clauses Act. But it's a small, simple question. We will finish this question and question number 23. 2 questions we will finish now, both the questions from General Clauses, one from General Clauses Act and one from Interpretation of Statutes. Okay. Now, General Clauses Act, this question, read it first. If it is defined as company means a company incorporated under Companies Act 2013 or under any previous company's law. What kind of a definition is this, guys? Company means, what kind of a definition? This is going to be an exhaustive definition. You know it very well. Exhaustive definition means what? That the meaning of the the meaning of the word is going to be restricted to whatever definition is given. What's a keyword? Meaning is going to be restricted to the meaning which is given in the definition. So which means it means that the meaning of company is only whatever is given in the definition. Anything else will not be considered as company. Company means only a company which is incorporated under Companies Act or previous company law. So nothing else will be a company. Meaning of company is restricted to the definition. Company means only whatever is given in the definition. Okay. Then what if the definition says person includes? Now it will become an inclusive definition. It will become an extensive definition. You can either say inclusive or you can say it is extensive definition. Inclusive definition, extensive definition means what? The meaning is not restricted to whatever is given in the definition. It's an extensive meaning. It has a wider meaning. Whatever is not given in the definition, that also will be included. See, if it's an exhaustive definition, the key word is only. Meaning is only whatever is given in the definition, nothing else. When it's an extensive definition, the key word is also. The meaning is also whatever is given in the definition. Other things may also come under this word. Person includes company, association, body of individuals, let's say. Includes is written. So which means whatever is written over here, that is included in person. But other things which are not written in the definition, other things that also will be included in the definition. It's a wider meaning. It has a wider meaning. Okay. So this also I'll give you the answer. The entire concept of exhaustive definition and extensive definition, you can directly learn from the answer I'm giving you. Remember, for may and shall also I told you I'll give you proper answer. Learn directly from here. Same thing when it comes to exhaustive definitions and extensive definition. Whatever you need to learn, I'm putting it for you over here. You can learn directly from here. Now, what do you think? How would you interpret or construct the nature and the scope of the above definitions? Is this a direct question or is this a case study based question? This is more or less it is a direct question, but at the end we do have to connect these definitions as well. I'll show you how. Give the heading first of all, question 15. Question 15. Under this, write down as a call out. Give the heading types of definitions. Types of definitions, give the heading. Under this, write down point 1. First definition is means. Means exhaustive definition. First, give the subheading exhaustive definition. Under this, write down when the definition uses the word means, comma, then the definition is dash or dash. The meaning of the word, is dash to the meaning given in the definition. Fill in the blanks, please. When the definition uses the word means, the definition is exhaustive or restrictive. Meaning of the word is restricted only to the meaning given in the definition. So we've written what is exhaustive definition. Now we have to interpret this definition. The question says, how would you interpret or construct the nature and scope of the above definitions? So we have to interpret this definition. Company means. So how will you interpret? You will interpret it by saying that only an entity which is incorporated under Companies Act or previous company law, only that entity is company, nothing else is company. That will be my interpretation. Write down, leave a line and write down the given definition of company. The given definition of company is an exhaustive definition Next line, write the subheading interpretation. They are asking us to interpret the definition. No. So give the subheading interpretation and then write down only an entity, only an entity incorporated under Companies Act 2013 or any previous Companies Act or any previous Companies Act should be considered or shall be considered as company. All right. So here underline the word only. Only an entity which is incorporated under Companies Act or any previous Companies Act, only that entity will be even considered as a company. All right. Can we proceed? Can we go to the next definition? They've given us one more definition, guys. The second definition is definition of person. Let's write the answer to that as well. Now, this is person includes. So this is definitely going to be an extensive definition. Now, first we will write what is an extensive definition. Give the extensive definition subheading and then write down when the definition uses the word includes, comma, the definition is dash or dash. The meaning of the word is not restricted to the meaning given in the definition. Instead, it has an extensive meaning. Instead, it has an extensive meaning which also, underline the word also, which also includes the meaning given in the definition. Now, write it properly, fill in the blanks. When the definition uses the word includes, the definition is extensive or inclusive. Meaning of the word is not restricted to the meaning given in the definition. Instead, it has an extensive meaning which also includes the meaning given in the definition. Guys, are you following? Yes. Now let's interpret the definition which they have given, guys. They have given us a definition of person. Person includes. So this definition is going to be an extensive definition. So leave a line and write down. The given definition of person is an extensive definition. Now they've also asked us to interpret the definition. Just like how we interpreted the definition of company, same way we'll interpret the definition of person. So next line, give the subheading interpretation and then write down the definition of person has a wide scope. It also includes other terms in addition to the meaning given in the definition. That's all. The definition of the person, or their definition of person, has a wide scope. It also includes other terms which are not included in the definition. For example, in the definition, the word individual is not written, but person will also include individual. In the definition, only company, association is written, let's say. The definition doesn't put the word HUF in the definition. It will include HUF as well. So even other words which are not included in the definition, even that will be considered as included under the term person. It has a wide scope. All right, this whole concept of exhaustive definition, extensive definition, you can learn just from here. Let's see now how good your memory is. Will you try to answer? Tell me, guys. For the word may, when you're writing the answer about may, what are your two keywords? One is directory, the other is enabling. When you're writing the answer about shall, what are your two keywords about shall? Here you will say mandatory and imperative. Then tell me, when we have the word means, what are your two keywords here? What is the definition called? Definition is called as exhaustive definition, and one more word. Exhaustive, restrictive. And one more keyword, if you say, you will have to use the word only in the definition. The definition, the meaning is only whatever is given in the definition. Then if the definition has the word includes in it, then you will say that the definition is an extensive definition or an inclusive definition. And one more keyword in your meaning, you will write also. Meaning also includes other terms which are not written in the definition. Done, everybody? Yes, let's do one more small question and then we will close, guys. Just 10 more minutes and then we will close. One last question. Come to question number 23. Question number 23 is a direct question from interpretation of statutes, the rule of Ejusdem Generis. I really want to do this for you because this is important. Ejusdem Generis is an important concept. From interpretation of statutes, we're already done with may and shall, that concept. Ejusdem Generis as well. Whatever you have to learn about Ejusdem Generis, I will give you the entire answer. Ejusdem Generis you can learn just from my notes. Okay. Listen to me. First of all, let me give you a quick revision. This is a very, very interesting point, a very simple point also. What does this principle say? Ejusdem Generis says, like for example, let's say I'm giving you a list. In that list, I'm writing accounts, audit, law, DT, GST, etc. Now tell me, will this etc. also include history? No, why not? But will it include costing? Yes, that's all. This is Ejusdem Generis. What did you do over here? See, listen, what are the conditions? First of all, I have a list. List is called as enumeration. List is called as enumeration. I have a list of subjects over here. Now, the list is containing specific words, guys. Are you noticing? These are your specific words. Accounts, audit, law, DT, GST, these are your specific words. And these specific words are followed by what? These specific words are followed by etc. Etc. is what? A general word. So I have a list. I have an enumeration. In this enumeration, I have specific words. The specific words are followed by a general word. All the specific words belong to one single category. But tell me, is the category exhausted? In your CA Inter, by the way, what is this category over here? I am saying all these words belong to one category. They belong to which category? They all belong to your CA Inter papers, guys. So they all belong to one specific category. But tell me, is this category exhausted? Is this category exhausted? It is not exhausted, guys. Have I written all the subjects? No. I have not written FM, I have not written SM, I have not written costing. This list is not exhausted. I have not written all the papers. So when all these conditions are fulfilled, Ejusdem Generis applies. Ejusdem Generis concept. What does Ejusdem Generis concept say? Ejusdem Generis concept says that etc. If you want to interpret this word etc., this word etc. will also include only those things which fall in the same category. In the same category does history fall? Thankfully, no. But in the same category does costing fall? Yes. So, Ejusdem Generis is correctly answered. This principle is helping us interpret what? Is it helping us interpret the specific word, or is it helping us interpret the general word? It is helping us interpret the general word. Oh, you want to know what is etc. Etc. will include only those things which come in this category of CA inter papers. But then always remember, if there is a list, is it mandatory that the court has to follow this principle? No. Other rules are all mandatory. Rule of literal construction mandatory. Harmonious construction mandatory. Beneficial construction mandatory. Exceptional construction mandatory. All the other rules of interpretation are mandatory, but Ejusdem Generis is a discretionary rule, which means it is up to the court whether the court wants to apply this or not. It is up to the court. It is not mandatory. Just because there is a list, just because the list contains specific words, just because the specific words are followed by a general word, just because the specific words belong to a category and the category is not exhausted, just because all these conditions are fulfilled, court does not have to necessarily follow Ejusdem Generis. It is discretionary. Understanding, guys? But however, there are some situations where Ejusdem Generis will not apply. If these conditions are not fulfilled, Ejusdem Generis will not apply. You tell me, if I have written all the subjects in this list, then also can I apply Ejusdem Generis? If the category is exhausted, can I apply Ejusdem Generis? No. I've already written all the points. Nothing is left to be put under etc. I can't apply this principle. Then tell me, if this list is all jumbled up, if this list is not belonging to one category, like I'm making a list over here: accounts, dog, cat, feather, yellow, tell me. And then if I put the word etc., can you apply this rule? Do they even belong to one category? They don't even belong to a category. So here you can't even apply Ejusdem Generis. You're understanding, if they don't belong to a category, if the category is already exhausted, if the law itself specifically mentions that don't use the if the law itself specifically mentions that don't use Ejusdem Generis, in all these cases you can't apply Ejusdem Generis. Okay, guys, and what if in this list also you're having general words like accounts, other subjects, law, DT, GST, etc. I put other subjects. If I'm putting other subjects, that word other subjects in this list, I'm having general words also inside the list. You can't apply Ejusdem Generis. You can apply Ejusdem Generis only if the list is containing specific words. Okay, that is a very simple, this is a very simple concept of Ejusdem Generis. Can we write down the whole concept of Ejusdem Generis? You can directly learn it from your notes. Yes, guys, come on. Last answer for the day, guys. Give it your 200%. Sit up straight and write with me. Give the heading, question number 23, Ejusdem Generis. If the hand is hurting, know that this is the last question. That itself should make it a little okay for you. Write down with me. Ejusdem Generis means of the same kind or species. Underline of the same kind or species. This is the key word, guys. This has to be there in your answer. Then write down the next point. In this next point, I will write about all these conditions. Okay, write down. The rule applies. The rule applies when the provision contains an dash of dash words, comma, and the specific words enumerated constitute a class or category, comma, which is not exhausted, which is not exhausted by the enumeration, and a dash word follows the enumeration. Enumeration means what? List. Fill in the blanks, guys. The rule applies when the provision contains an enumeration of what words? Enumeration of specific words. And the specific words enumerated constitute a class or category which is not exhausted by the enumeration, and a general word follows the enumeration. Then write down the next point. In such cases, comma, general terms are to be understood with reference to the specific words that precede them. I'll tell you what is the meaning of this. Don't you think the meaning of the word etc. in my example depended upon that list? Yes, guys, that is what we've written. General term etc. is to be understood with reference to the specific words that precede them. That is, the general word derives meaning or derives color. General word derives color from specific words. Here color means meaning. General word derives meaning from specific words. Then write down next point. Courts have a dash whether to apply Ejusdem Generis in a particular case or not. Courts have a what? Courts have a discretion whether to apply Ejusdem Generis in a particular case or not. Then next point write down. We will write down now what are the situations in which Ejusdem Generis will not apply. Write down the last part of our answer, guys. The rule of Ejusdem Generis is not applicable in the following cases. Write down the first point here. If the preceding term also is, if the preceding terms also are general. Second point, if the enumeration of specific words is diverse in nature. Diverse in nature means what? They don't belong to one category. I gave you an example. No, words are all belonging to different categories. They're not belonging to one category. You can't apply Ejusdem Generis. Then write down the next point. If the enumeration of specific words exhaust the whole genus. Genus refers to category. Genus is nothing but category. The specific words exhaust the whole category. And last point, if the legislature expressly states that Ejusdem Generis shall not be applied. So this is your entire answer of Ejusdem Generis. Your main point over here is what does Ejusdem Generis mean of the same kind or species. Second main point over here is that the general word derives color from specific words, which means the meaning of etc. depends upon the meaning of the specific words. Also remember that this is discretionary. This discretionary point may be asked in your MCQs. And then we've also written over here what are the situations in which Ejusdem Generis concept itself will not apply if the preceding terms are also general, if enumeration is diverse in nature, they don't belong to one single category, if the enumeration is already exhausting the whole category, and if the lawmaker specifically mentions don't apply Ejusdem Generis, then we will not apply Ejusdem Generis. Alright, so this is it with our discussion on Ejusdem Generis. We stopped with question number 15. So let's straight away take on question number 16. Question 16 is from your charges chapter, okay? A simple question, but the most important concept from charges. From charges chapter, if you see, the most important and the most repetitively asked question is about registration of charges. That charge has to be registered within how much time, right? So that's why I've chosen a question exactly on that concept, so that revision also will happen and you will learn how to write also. Let's begin. Let's read the question. The question says, Rose Private Limited, so which means it's a private company, on 3rd April 2019 obtained 30 lakhs of working capital loan by offering stock and accounts receivable as security and rupees 5 lakhs ad hoc overdraft on the personal guarantee of a director of Rose Private Limited from a financial institution. So there are totally how many transactions over here? There are totally 2 transactions over here. Transaction number 1 is that my company has obtained a working capital loan. Working capital loan was obtained by offering stock and accounts receivable as security, which means what kind of assets have we given as security? See, you must be knowing this, everybody, that charges are of 2 types. Right? Charges are of 2 types. We have fixed charges and we have floating charges. Now, fixed charges are those charges which are created by giving fixed assets as security. Right? And floating charges are those charges which are created by giving floating assets as security, that is, by giving current assets as security, which are also called as the fluctuating assets as security, guys. Right? So when we give fixed asset as security, the charge is called as fixed charge, and when we give floating assets, also called as current assets, also called as fluctuating asset as security, it is called as floating charge. Now, whether it is a fixed charge, whether it is a floating charge, it doesn't matter. Both the charges have to be registered. Does everybody agree? Both charges have to be registered. They have to be registered within how much time? From the date of creation of charge, they have to be registered within 30 days time. If you register within 30 days like this, you will have to pay fees. But however, if you're not able to register within 30 days of creation of charge, you can register from the date of creation within how much time? From the date of creation of charge, you can register within 60 days time. Now, if you do this, you're getting extra 30 days. If you want these extra 30 days, this time what you will have to pay? This time you will have to pay additional fees. And if you're unable to register within these 60 days also, then you can register in the next 60 days. But here, what will you have to pay? Here you will have to pay ad valorem fees. Guys, I'm hoping everybody is aware of this, the most important concept in your entire charges chapter, which is about registration of charge, guys. Yes, so from the date of creation, within 30 days you're supposed to register, you'll have to pay fees. If you're not able to do it, you have to register within 60 days from the date of creation, you'll have to pay additional fees. If you're unable to do it, you have to register within the next 60 days, you'll have to pay ad valorem fees. Ad valorem fees means fees which is according to value. It depends upon the value of the charge. But however, listen, assessee, there's another point over here which a lot of students don't write in their answer. Till here everybody writes, but they don't write one very important point in their answer, and that is, if you're registering in these next 30 days, or if you're registering in these next 60 days, that is, if you're registering by paying additional fees or ad valorem fees, then there is an extra formality. The extra formality is that the company has to file an application with the ROC. Company has to give a declaration to the ROC that ROC, yes, we are registering the charge late. But even though we are registering the charge late, the charge holder will not be negatively affected. His rights will still start when? His rights will still start on the date of creation only. And lastly, we also have to give the ROC sufficient cause. That is, we have to give the ROC a justifiable reason that why we did not register charge on time. Why are we registering the charge late? What is the reason? Justifiable reason also has to be given. Guys, are you all understanding? Is this crystal clear till here? Yes, guys. So this was my entire discussion on charges. I'll give you one very quick revision. Come on, everybody, sit up straight and participate. Last session, guys, give me your best. So charges are of two types. We have fixed charges and we have floating charges. Fixed charges are those charges wherein I give fixed assets as security. Floating charges are those charges where I give current assets as security. Whether it is a fixed charge, whether it is a floating charge, both have to be registered. And both have to be registered within how much time? Both have to be registered within 30 days of creation of the charge. And to register within 30 days from creation, you will have to pay some fees. But if you are unable to register within 30 days of creation of charge, you have to register within 60 days from creation of charge. Tell me, can I write in the examination next 30 days? No, you have to write within 60 days from date of creation only. You'll have to pay additional fees. If you're unable to register within next 60 days, then you can register within these next 60 days. But for this, you'll have to pay ad valorem fees. Now, if you're registering within the next 30 days over here, or if you're registering within the 60 days over here, then you will have to first of all file an application with the ROC for late registration of charge. You'll also have to give a declaration to ROC that ROC, yes, I know I'm registering the charge late, but even though I'm registering the charge late, the charge holder will not be affected. His rights will still start on the date of creation only. And we also have to give the ROC justifiable reason, sufficient cause that why we couldn't register on time. Only then he will let us do this registration within the next 30 days and within these next 60 days. Is everybody crystal clear now? Now understood. Now come to the question again. So I just now read the question for you. In the question, my company was obtaining working capital loan by giving stock and accounts receivable as security. So which means my company has given current assets as security, guys. So when my company give current assets as security, what will you call the kind of what will you call the charge? You will call it as floating charge, guys. Now even floating charge has to be registered. Yes. Then look at the next part. My company has borrowed two loans, guys. There's one more loan the company has borrowed. It is a 5 lakhs ad hoc overdraft. Overdraft facility my company is getting. But for this overdraft facility, is the company giving any asset as security? No. Company is giving personal guarantee of a director. Company is giving personal guarantee of a director, which means what? Director is giving guarantee to the lender that don't worry, company will repay. If company doesn't repay, I will will repay like the director is giving guarantee. But tell me guys, for the overdraft, was any asset given as security? Was any asset given as security? No. So for this overdraft, here also do we have any charge guys? For this there is no charge. Understanding, charge comes into the picture only when we give some asset as security. Now look at this next point. Is it required to create a charge for working capital loan? What will you say? For working capital loan, we gave current assets as security. It will be a floating charge. Yes, we have to create a floating charge. And for ad hoc overdraft, do you have to create a charge, guys, for ad hoc overdraft? No, because here we did not give any asset as security. We only give guarantee of director. So is it required to create charge for working capital loan? Yes, and that too it's going to be a floating charge. For ad hoc overdraft, no, not required. Then they're asking you, state the provisions relating to extension of time and procedure for registration of charges in case the charge was not registered within 30 days of creation. So what is the second question? Second question is a direct question over here. They are asking you the entire procedure relating to registration of charge along with the time limits and all. That what if I'm not able to register within 30 days, how much extra time I will get, the 60 days, next 60 days, additional fees, ad valorem fees, application, declaration, sufficient cause, just now what I explained to you, all that we will write. Are you ready everybody? Can we begin? Can we start writing the answer? Yes, guys, come on, come to your notebooks. Let's begin. Give the heading. Question number 16. Give the heading. Registration of charge. Now listen, guys. They have asked us 2 subdivisions. So even we have to write it as 2 separate questions, only then we get the marks. We can't combine them together. So write down the first subdivision. First subdivision is asking us, is it required to create a charge for working capital loan and ad hoc overdraft? Write down. The following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, write down the first point. See guys, same way, I'm writing the provisions first, then facts, then analysis, and then conclusion. Now, in the provisions, do not forget, the question is asking us whether charge has to be created on this loan and on this overdraft. Whether charge has to be created or not, question is asking. So I will start with definition of charge, telling what exactly is charge first. So write down, charge is an interest or lien created on dash or dash of the company or any of its dash or both as dash. Fill in the blanks, please. Charge is an interest or lien created on property or assets of the company as security of the company or any of its undertaking or both as security. Then write down the next point. 2 types of charges, we'll write about that now. Charge can be dash or dash. Charge can be fixed or floating. Then write down. We'll write, see, should we explain about fixed charge in this question? No, because this question is targeting floating charge. We've given current assets as security. So we will just write about floating charge. Write down. Floating charge is created on dash assets or dash assets of the company. Floating charge is created on fluctuating assets or current assets of the company. Next line, write down. Charge created on assets of the company. Charge created on assets of the company, comma, whether fixed charge or floating charge. Whether fixed charge or floating charge have to be registered with dash within dash days from the date of dash of charge. Fill in the blanks. Have to be registered with whom? With ROC within 30 days from the date of creation of charge. This is it about the provisions, guys. They had asked us that whether charge has to be registered or not. So we defined charge. We spoke about the two types of charges. We did not target a fixed charge over here. We're writing only about floating charge because the question is only about floating charge. And then we spoke about the time limit for registration. Okay. In this first part, will I write about the extended time limit, extra 30 days, extra 60 days, ad valorem fees? Will I write about all that? No, because in the first part, they're only asking me, is it required to create charge or not? So I will keep my answer precise. Precise answers have more chances of getting full marks than unnecessarily detailed answers. These were my provisions. Now we'll write about the facts of the case, guys. So write down here. Next line, write down. What was the company's name? Rose Private Limited. Here, Rose Private Limited borrowed a working capital loan. Borrowed a working capital loan by giving stock and accounts receivable as security. Next line, write down. It also obtained an ad hoc overdraft of rupees 5 lakhs against a director's guarantee. It also obtained an ad hoc overdraft of 5 lakhs against a director's guarantee. So this is what has happened in the question. 2 loans my company got. I spoke about it in the facts of the case. Now we'll write down the analysis. Write down. Applying the above provisions. Next line, write down. For the working capital loan, underline working capital loan. For the working capital loan, company has created a charge on its current assets and hence it is a dash charge and has to be dash with ROC. Fill in the blanks. Current assets, therefore it is a floating charge and has to be registered with ROC. Then write down the next point. So this was about the working capital loan. Now I will write about the ad hoc overdraft. For the ad hoc overdraft, underline ad hoc overdraft, no charge has to be registered as it is only against a director's guarantee. That is, the overdraft is not against the security of an asset. That is, the overdraft is not against the security of an asset. So this was our analysis. Now comes the conclusion. Write down thus. We'll see exactly what the examiner is asking us. He is asking us, is it required to create a charge for this loan and overdraft? So exactly to the point we will answer. What will be right? Yes. For the working capital loan, comma, floating charge is to be registered, but no registration is required for the ad hoc overdraft. No registration is required for the ad hoc overdraft. So this is it with our first subdivision, everybody. I'm hoping everybody is perfectly clear. We first wrote about the provisions which talk about the different types of charges and about registration. Then we spoke about the analysis. In the analysis, we said for the first loan, yes, we have to create a charge, but for ad hoc overdraft, it's only against guarantee, not against assets. So no charge is required. And then we gave our conclusion. Now let's come to the second part, guys. In the second part, they're asking us about the provisions relating to extension of time. Ideally, you're supposed to register within 30 days. But if you're not able to register within 30 days, about the extended time they are asking us. In this part, the common mistake is students write about all this. They forget to write about this. So let's write a proper answer on time limits. Are you ready, everybody? Come on, write down answer to subdivision 2. It's a straightforward question, no analysis and all. Straight away, I will write to the point. Just the provisions, write down. If the charge is not registered within dash days, from the date of creation, comma, it may be registered within dash days from the date of dash upon payment of dash fees. Fill in the blanks correctly. If the charge is not registered within 30 days from creation, it may be registered within 60 days from the date of creation upon payment of additional fees. Then write down the next point. If the charge is not registered within such extended time, it can be registered in the next dash days upon payment of dash fees. It can be registered in the next 60 days upon payment of ad valorem fees. Okay, then write down the next point, next line. So this is about the extra time. This is where students generally stop. But this next point we will write about the application, declaration and sufficient cause. So write down, to avail the extra time, company shall file an dash with the dash in the dash form along with the dash signed by company secretary or director, that the delayed registration will not adversely affect the dash. Fill in the blanks. This is important. Be careful. To avail the extra time, company shall file an application with ROC in the prescribed form along with the declaration signed by company secretary or director that the delayed registration will not adversely affect the charge holder. Okay, then write down the last point. What's the only thing we're left with now? That sufficient cause point. If ROC is satisfied, that the company has sufficient cause in not registering the charge on time, it will allow the company to register the charge in such extended time. It will allow the company to register the charge in such extended time. That's it, guys. So that is it with your first question. A simple question, the question on charges. This was the first question that we've written on charges. I hope you've understood. First part was on the main point in the first part was on guarantee, charge is not required. And because you've given current assets as security for the working capital loan, you have to create a floating charge. And the second point was all about the extra time. Now, can I straight away take you to the next question, everybody? Yes, do you remember in yesterday's session, we've already done one question on deposits. Not yesterday, I think day before yesterday. We had done one question where we had spoken about the exclusions from deposit. Right, guys? So here we have one more question. Even this question sort of targets the exclusions of deposits. It came in the examination for 4 marks, guys. We will write down the answer to this. But before we start this, can I quickly give you a revision of the concept involved in the question, please? This is again a concept which is relating to the exclusions from deposit. Let us say a bank or a financial institution has given a loan to the company. Tell me, is this loan going to be considered as deposit? This loan is definitely not a deposit, guys. Any bank or any financial institution gives any loan to the company, loan is definitely not a deposit. Loan from bank, loan from financial institutions, not a deposit. You know about this, right? Loan from bank, loan from foreign, loan from bank, loan from financial institution, loan from foreign banks, loan from the government, loan from foreign governments, loan from other companies. All of these are not considered as deposit. Till here, no problem, nothing new. Now listen, the bank gave a loan to the company. Don't you think bank is taking a risk? What if the company doesn't repay the loan? Bank is taking a risk. So bank is telling the company, see, I will give you this loan only if your promoter, I will give you a loan only if your promoter is willing to take the risk of giving you a loan. If your promoter, see, nobody knows you better than your promoter. If your promoter is willing to take the risk of giving you a loan, then even I will take a risk of giving you a loan. But the promoter has to give you an unsecured loan. That much risk promoter has to be willing to take. If promoter is willing to give you unsecured loan, then I will also give you a loan. So bank is putting a condition like this. This condition is called as stipulation. So the bank put a stipulation on the company. The bank put a condition on the company, and because of the condition from the promoter, the company has taken an unsecured loan. If these conditions are fulfilled, then this unsecured loan which we took from the promoter, this unsecured loan will also not be considered as a deposit, guys. What are the conditions? Everybody tell me, what are the conditions? Condition number one, who is giving us the loan? Promoter. Condition two, what kind of loan? Unsecured loan. Condition number three, why is the promoter giving? Because of a stipulation which is put by the banker. So if these three conditions are fulfilled, this unsecured loan which the promoter has given will not be considered as a deposit. Till here, did you understand? Yes, everybody perfectly clear till here. Now tell me, apply common sense, okay? Apply common sense. If the company repays the bank loan, then tell me, will this stipulation, will this condition still exist? Will this stipulation still exist? Of course not, guys. This stipulation will not exist because the company has repaid the loan. So banker, you can't have any control over me anymore. Your loan is repaid, contract is over. So stipulation will come to an end. If stipulation comes to an end, is this unsecured loan still required? Unsecured loan is not required now. So company, come on, return unsecured loan to the promoter. Company is not returning the loan. Now what will happen? This unsecured loan will now be treated like a deposit. Now it will get treated like a deposit. You understood? So once the company repays the bank loan, there's no stipulation on the company anymore. So ideally, company should return the promoter's loan. If the company is not returning the promoter's loan, then this unsecured loan will now be treated as deposit. Done, guys. Crystal clear. Simple story. Now read the question with me. The question says, promoters of Ejusdem Spinning Mills Limited contributed in the shape of unsecured loan to the company in fulfillment of the margin money requirements stipulated by SIDCL for granting loan. Listen to me now. Look at this. This is ICAI being ICAI putting words like these. Do you know what is margin money requirement? You have no idea. You've never read this. No, where you saw this in your entire syllabus itself. Students will see this here itself, bold over, clean bold what they say. That is what will happen in the examination. Students will think, oh, this question is about something I don't know. Now understand, in every question paper, there will be one question where ICAI will use fancy English language or fancy English terminology which you will not have even heard of before. Do not get fooled by ICAI. Know that, have the basic confidence that you have learnt everything and gone. Have the basic confidence that if ICAI has put something which I don't know, even if I ignore this and read the remaining question as it is, if I read it, if I ignore this and read the remaining question, I will still be able to handle the question. Have that basic belief first. You understood what I said? This points like these words, like these table, purposely put into the question paper to make students think that I don't know this question because I don't know what this means. But this will be unnecessary information. It will not make any impact in your answer at all. Even if you ignore it and if you read the rest of the question, your answer will still be correct only. Have that sort of basic belief. Getting my point? Know that if it was, just know this, that if this was relevant for your answer, you would know the meaning. If you don't know the meaning, it means it was not even relevant for your answer. Okay, come back now. Who gave the loan? Promoters. Condition 1. What kind of loan? Unsecured loan. Condition 2. Why? Because of a stipulation put by SIDCL, which is a financial institution. So all the three conditions are fulfilled. So what will you conclude? Will this unsecured loan be considered as deposit? No, this unsecured loan will be excluded from deposit. In the light of the provisions of Companies Act and the rules made thereunder, whether the unsecured loan will be regarded as deposit or not, what will you say? No, it will not be regarded as deposit. What will your answer be in case entire loan of SIDCL is repaid? If we repay the bank's loan, if we repay the financial institution's loan, then company repay the unsecured loan also. If you don't repay now, it will be considered as deposit. Yes, guys, can we write down the answer to this? Come on, answer to question number 17, everybody. Give the heading question number 17 and let's begin. Give the heading for the question. Call it unsecured loan from promoters. Under this, write down as I call out. We'll first write down the provisions. Following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, our main point is going to be about the three conditions and repayment of loan. Then it will be considered as deposit. That will be our main point, but we'll start with the definition of deposit. So write down, deposit includes any dash of money by way of dash or dash or in any other form by a company but does not include such categories of amount as may be prescribed in consultation with dash. Fill in the blanks. Deposit includes any receipt of money by way of deposit or loan or in any other form by a company, does not include such categories of amount as may be prescribed in consultation with whom? Tell me correctly, RBI or SEBI? RBI. Consultation with RBI. Where was SEBI? Where did we talk about SEBI? Listed, unlisted companies in that discussion. Okay. Then write down the next point. The conditions we will write now. Any amount brought in by dash as dash loan under a dash of a bank or financial institution is excluded from deposits. Fill in the blanks. Any amounts brought in by promoter as unsecured loan under a stipulation of bank or financial institution is excluded from deposit. Then write down the next point. However, once the loan is repaid to the bank or financial institution, once the loan is repaid to the bank or financial institution, promoter's unsecured loan should also be repaid as the stipulation does not exist anymore. If not repaid, it will now be considered as deposit. These are the provisions, guys. I've defined a deposit, I've written about my conditions, and I've also written that once the loan is repaid of the bank, the deposit stipulation is not existing anymore. So return unsecured loan. If you don't, now it will be considered as deposit. Now let's write down the facts of the case. What happened in this question? So what are the facts that we will write over here? That the promoters of this company, they lent an unsecured loan because of the stipulation of the bank. And yes, that's the only thing. Promoters have lent an unsecured loan because of a stipulation put by SIDCL. So let's write down the facts of the case. Leave a line, write down here, and then write down next line. Promoters of Ejusdem Spinning Mills Limited. Promoters of Ejusdem Spinning Mills Limited lent an unsecured loan to the company under a stipulation put by SIDCL for granting the loan. So these are my facts of the case. Now let's write down the analysis. Applying the above provisions in the given case. Next line, write down. SIDCL, in brackets write down, financial institution has stipulated that promoters of the company lend an unsecured loan as a condition to avail a loan from SIDCL. Next line, write down. Such unsecured loan will not be considered as deposit. Underline, not be considered as deposit. Will not be considered as deposit. Next line, write down. However, once SIDCL's loan is repaid, if the company retains the promoters unsecured loan, it will now be classified as deposit and deposit provisions, it will now be classified as deposit and deposit provisions will be applicable. Done, guys. Now conclusion, write down. Thus, come to the question, see exactly what they're asking you. Whether the unsecured loan will be regarded as deposit or not. What will be your answer in case entire loan is repaid? So whether the unsecured loan is deposit or not, what's your exact answer? Your answer is no. Unsecured loan of promoters is not a deposit. Then next line, write down. Once SIDCL's loan is repaid, promoters unsecured loan will be considered as deposit. All right. That's it with this question, guys. Important point, 3 conditions. Promoters have given the loan, unsecured loan it should be, and it should be because of a stipulation put by bank or financial institution, then it will not be considered as deposit. All right, are you getting a grip over this? Can we proceed? Come on, everybody. Let's do this. Let's come to the next question. This 18th question will be our first question on dividends chapter. We've not done any question on dividends chapter till now. 2 questions we have on dividends, guys. This will be the first question on our dividends chapter. Before I start this question, answer one simple question of mine. Let's say I'm talking about financial year 22-23. This financial year's AGM will be held when? In 22-23 or after 22-23? For financial year 22-23, AGM will be held when? In 22-23 or after 22-23, guys? After 22-23. Let's say it's held on 30th September 2023. It will be held after the year. Okay. Now, interim dividend means what? What is interim dividend? When is this interim dividend declared? It is declared in the AGM or outside the AGM? It is declared outside the AGM. So which means between, which means in the AGM, if it is declared, it becomes final dividend. Outside the AGM, in between two AGMs, anywhere in between the two AGMs, if it is declared, it becomes interim dividend, which means interim dividend can be declared during the year also. It can be declared after the year before the AGM also. Yes, guys, as long as it is not declared in the AGM. If it is declared during the year or after the year before the AGM, wherever, if it is not declared in the AGM, outside the AGM, if it is declared, it will be considered as interim dividend. It may be within the year or it may be after the year, but it should not be in the AGM. All right, everybody, that's the only point. For interim dividend, is there any maximum limit that how much interim dividend can be declared? There is no maximum limit. It can be declared as much as the company wants. In interim dividend, do the shareholders play a role? No. Who declares the interim dividend? The board of directors. They itself decide how much, they itself approve, they itself declare. Generally, final dividend, if you see, it is recommended by the board, approved by the shareholders in the AGM by passing ordinary resolution, right? All that we don't have in interim dividend. In interim dividend, the only person who plays a role is a board of directors. They itself will decide how much dividend has to be declared and they itself will approve it and they itself will pay it. Now, if we are paying interim dividend out of accumulated profits, then will you apply any limit? Yes, if interim dividend is being paid out of current year profits, no limit. But if interim dividend is being paid out of accumulated profits, then there will be a limit, guys. What will the limit be? The limit will be maximum rate is going to be what? Maximum rate is going to be last 3 years average. Maximum rate is going to be last 3 years average. 3 conditions, the remaining 2 conditions will not apply. That's only for final dividend. Interim dividend, if you're declaring out of accumulated profits, only one condition will apply, and that is it should not exceed last 3 years average. All right, that's the only point. And tell me, can a Section 8 company also declare dividend? No, Section 8 company, you first of all should not even make profits. By chance, by mistake, if you make profit, you can only use the profits for your charitable objectives. You can't distribute it as dividend. No option of distributing it as dividend. Okay. With all of this in our mind, can we take up question number 18, please? I'll first leave this question on you, that read the question first and think for yourself that what and all are you going to write. Don't write. Visualize the answer that I'll write this, I'll write that. I mean, after writing all these questions, you must have gotten a very good idea that how your final answer should look like. Okay, so read this question. I've told you all the provisions relating to interim dividend. Try to think what are all the points which you're going to write and keep your list ready, and then we will start writing. First, I want you to analyze. Yeah, you'll be able to hear me now. Now, listen to me. So, when you're writing the answer, what are all the points that you will be writing? First of all, you will write about what is interim dividend declared by the board of directors in between the 2 AGMs. Right, guys? That is what you will write about interim dividend first. And you will also say that either it will be declared during the year or it will be declared after the year but before the AGM. Then we will mention that interim dividend can be paid either out of current year profits or it can be paid out of accumulated profits also. And if you're paying out of current year profits, is there any limit? There is no limit. Only if you're paying out of accumulated profits, only then we have a limit. Then the question is asking us about Section 8 companies. Section 8 companies separate the totally 3 questions. So even we will write as 3 separate answers. That's how we will get our marks. So 3 separate subdivisions we will write. So this will be an independent subdivision. In a Section 8 company, you are prohibited. What's the key word for Section 8 company question? Prohibited. It is prohibited from distributing dividend to shareholders. And then they're asking us about the penal consequences. Penalty with respect to dividend is very important. Yesterday, I pointed out an important penalty, you remember? Your annual return discussion, that was important. So now another important penalty I'm pointing out for you, your dividend relating penalty. Tell me, what happens if the company doesn't pay the dividend within 30 days? Then what happens? Who will be punished? Company also will be punished. Directors also will be punished. Directors will be punished with imprisonment how many years? Is anybody aware? Directors will be punished with an imprisonment of 2 years. And how much fine, guys? How much fine? Per day. Per day, how much fine? Per day of delay, 1000 rupees fine. Company will have to pay interest. Interest at what rate? Company will have to pay interest at 18% rate. And is it imprisonment and fine, or is it imprisonment or fine? It is imprisonment and fine. Okay. So all of these provisions we are going to write, guys. Come on, be prepared for nice, big, lengthy answer we are going to write. Let's begin. Give your question number first of all. It is question number 18. Question number 18. Give the heading under this. Interim dividend. Write down. We'll write the provisions first. Write down point number 1 because there are 3 subdivisions. We're answering the first subdivision. Write down interim of the following are the applicable provisions of Companies Act 2013 and corresponding rules. Now write down under this first point, we'll write about what is interim dividend. Interim dividend may be declared by dash any time during the dash or at any time after the closure of dash but before the dash. Fill in all the blanks. Interim dividend may be declared by board of directors. Guys, only board has a role to play over here. Anytime during the financial year or at any time after the closure of the financial year but before the annual general meeting. Put AGM in brackets so that you can use the short form in this answer. Then write down in the next line, interim dividend may be declared out of surplus in profit and loss account. In brackets write down accumulated profits or out of profits of the current year. Alright, so here if you see the question says that this company adopted first financial year. Guys, by the way, I did not discuss about this with you. Did you understand this? The first financial year was from 22nd January 2019 to 31st March 2020. They did not end it on 31st March 2019. Why are they ending on next year 31st March? You know this, right? If the company is incorporated in Jan, Feb, March, then the first financial year will end not on the coming 31st March, it will end on the next 31st March. That provision, guys. The financial statement for the said period after providing for depreciation revealed net profit, which means current year we have made net profit. Board of Directors declared 20% dividend at their meeting held on 7th July 2020. Anything wrong? Who declared? Board. Correct. 20% interim dividend, declare how much ever you want because company is declaring out of what? Current year net profits, guys. If company was declaring out of accumulated profits, then I would have said maximum 3 years average, all that I would have said. But here company is declaring out of current year profits only, so declare how much ever you want, doesn't matter. But tell me, 7th July 2020, is this okay? Before AGM, is it okay? Company is declaring after the year got over, guys. The year got over on 31st March 2020. After the year got over, the company has declared, but before AGM, yes, of course, this is okay. This will be considered as interim dividend. So whether the company has complied with the due diligence, yes, company has complied. Will I write about the maximum limit, last 3 years average? Will I write about all that? I will not, because the question is about declaring dividend out of current year profits. The question is not about declaring dividend out of accumulated profits. So therefore, I will not talk about 3 years average and all. Okay, had the question, had we been declaring out of accumulated profits, then I would have written about the maximum limit. Okay, so they're asking us whether the company has complied with the due diligence. We've written all the provisions. Now come to the facts of the case. Write down here, Sunlight Limited's board of directors have declared 20% interim dividend before first AGM. Also, company's financial statements, also company's financial statements reveal a net profit. All right, this is it about the facts of the case. Now let's write down the analysis. Write down applying the above provisions in the given case. Applying the above provisions in the given case. Write on point number 1. Board of directors correctly declared the dividend before the first AGM, thereby making it interim dividend. Next line, write down. Also, as financial statements reveal net profit, dividend can be paid out of current year's profits without applying any maximum limit. You understood this last point which I made you write. I've written that because you're paying dividend out of current year profits, and that is why there will not be any maximum limit. Had we been paying the dividend out of accumulated profits, then yes, there would have been a limit. But because we are paying dividend out of current year profits, there is no limit at all. All clear? Now this was the analysis. Now come on, let's go to the conclusion. Write down thus. See what exactly the question is asking you. Whether the company has complied due diligence or not, what will you say? Due diligence means what, by the way? There's a question in the chat box, ma'am. What is due diligence? Due diligence means what? Due diligence means have you complied with all the provisions or not? Is everything in line? Is everything in order? You should have complied with all the provisions. That is due diligence. So write down thus, yes, the company, exactly same language, guys. Yes, company has complied due diligence. Yes, the company has complied due diligence in declaring interim dividend. Yes, company has complied due diligence in declaring interim dividend. That's it with your first subdivision. Now come to the second subdivision, everybody. Second subdivision is about Section 8 company. Whether the company can declare dividend in case it was registered under Section 8. Your answer will be no. Your answer will be Section 8 company can only reinvest the profits in their charitable objects. They can't distribute it as dividend. What's the key word that we have to use over here? Prohibited. Okay. So write down answer to the second subdivision. Write down under this. Section 8 companies. Section 8 companies are companies with dash object. Next line, write down. They are dash from distributing dividend to shareholders. Next line, write down. Profits, if any, have to be applied. Profits, if any, have to be applied by such companies. Profits, if any, have to be applied by such companies only in promoting their charitable objects. Next line, write down thus. If the company is a Section 8 company, then no, it cannot declare dividend at all. Then no, it cannot declare dividend at all. Fill in all the blanks, please. Section 8 companies are companies with charitable objects. They are, what's a key word? They are prohibited from declaring dividend. Alright, so profits, if any, have to be applied by such companies only in promoting their charitable objects. Hence, if the company is a Section 8 company, then no, it cannot declare dividend at all. And finally, guys, they're asking us about the penalty, the penal provisions. Let's write that down. What are the penal consequences in case of failure to pay interim dividend? Once you, guys, you know the time limits, right? From the date of declaration of dividend, within how much time are we supposed to put the money in a separate bank account? From the date of declaration, within 5 days, you're supposed to put into a separate bank account. From the date of declaration, within how much time are you supposed to pay the dividend? You're supposed to pay the dividend within 30 days. If you're sending the dividend by way of postal warrant, you have to post the warrant by within 30 days. When did the shareholder receive the dividend warrant? It doesn't matter. If the company is paying dividend through dividend warrant has to be posted within 30 days. When did the shareholder receive the warrant? That doesn't matter. All right. So we'll write about that now. Come on, let's begin. Answer to the third subdivision. Write the subheading. Penal consequences. In bracket section 127, if you are aware of the section. Under this, write down the points one by one. If dividend has been declared but not paid within dash days from the date of dash, then as per section 127, next line write down, directors will be punished with dash of up to dash years, and underline the word and fine of rupees dash per day of dash. Next line. Company will be liable to pay dash percentage per annum interest for the period of default. Fill in the blanks, everybody. Come on. If dividend has been declared but not paid within 30 days from the date of declaration, then as per section 127, directors will be punished with imprisonment of up to 2 years and fine of rupees 1000 per day of default. Company will be liable to pay 18% interest per annum. This is one of the most important punishments with respect to your law syllabus. Alright, so this is it about section number 127, guys. With this, you've completed the answer to this question, an entire question focusing on dividend. This penalty, I hope you've marked important. You got to be very, very clear about this penalty. Here, will I write about dividend, warrant and all? Not at all, guys. Come on, our answer has to be to the point. Alright, so that is it with this question. Let's come to the next question now. Come to question number 19. This is another question from management and administration targeting minutes. Now, in your meetings chapter, in your management and administration chapter, when you learn this chapter, listen to this very important tip that I'm giving you right now. When you learn the management and administration chapter, don't start learning with registers. Like if you see your chapter in your study material, it starts with the registers. Then you learn about foreign register, you learn about significant beneficial owner, you learn about section 89, then it talks about annual return, then it talks about voting, proxy, notice, quorum, then it talks about the different types of resolutions, and then it goes to AGM, EGM. That's how your chapter is sequenced, right? Whenever you learn the management and administration chapter, do not follow that sequence. You should always start with learning AGM and EGM. This is the most important part of this chapter, and because it is coming at the last part of this chapter, students generally compromise this. Day before the exam, if you start learning this chapter from the beginning, if you start learning, AGM and EGM's turn itself will not come for revision. You're getting my point? So when you're learning this chapter, you will start with AGM and EGM. Make a note. You will first revise AGM and EGM. Then you will revise minutes of meeting. Then you will revise notice, quorum, proxy, and minutes. Voting. And then only you will do everything else. These are the top 6 concepts in this chapter. If at all you get a question from this chapter, 90% the question will be from here. These are that important. So you will start with AGM, EGM, minutes, notice, quorum, proxy and voting. You will finish this, then only you will go to the leftover chapter. Will you remember to do this, everybody? Yes. Now come on, let me give you a quick discussion of the concept involved in this question. I want to discuss with you about minutes. There are some points about minutes that we need to talk about. Listen to me. And about minutes also, we're talking about minutes plus inspection of the minutes book, basically. I'll ask you quick questions. Keep answering in the chat box, everybody. First of all, is inspection of minutes book, is it even allowed? Is it allowed to inspect the minutes book? Yes, it can be inspected. Then who can inspect? Can the members inspect? Yes, the members can inspect. Can the directors inspect? No, directors can't inspect. Who can inspect? Only the members can inspect. Can the creditors inspect? No. I'm talking up. See, I'm not talking about board meeting minutes. Did you listen to me? I'm talking about your general meeting minutes. General meeting minutes. I'm talking about the postal ballot minutes. You know, right? Minutes are prepared not only for the meeting. Minutes are also prepared for postal ballot. Are you aware of it, everybody? I'll repeat once again. Minutes are prepared not just for meetings. Minutes are also prepared for postal ballot. You know what is a postal ballot, right? Tell me, when it comes to postal ballot, are we going to have a physical meeting? No, in postal ballot, all the members are going to send their vote. Yes or no, they're going to send their vote by way of post. So, in that itself, we will be making the resolution whether it is passed or not passed. So, in a postal ballot, there is no meeting. But even for postal ballot, we prepare minutes. Is everybody aware of this? You better say yes. Yes, guys. So we prepare minutes for not only the general meeting, we also prepare minutes for postal ballot. So general meeting minutes and postal ballot minutes can be inspected only by the members. I'm not talking about board minutes. Board minutes can be inspected by directors. General meeting minutes, postal ballot minutes, all this is connected to shareholders. It can be inspected only by the members. Okay, guys, now when can they inspect? Tell me, when can they inspect? They can inspect any time during the business hours, they can inspect. Now, for inspection, can we charge a fees? For inspection, there is no fees for inspection. But can they ask for copies of the minutes book, guys? Can they ask for copies? Yes, they can ask a copy. Now, they can either ask for a hard copy or they can ask for a soft copy. Okay, if they are asking for a hard copy, then can we charge a fees from them? Yes, we can charge a fee. The how much fees we can charge, where it will be written, the fees will be written in the AOA. But maximum how much fees we can charge from them? Maximum 10 rupees. Is 10 rupees total fees or per page fees? 10 rupees is per page fees. Okay, so the fees will be written where in the AOA, but maximum it can be how much? Maximum it can be 10 rupees per page. Now, if they're asking for a soft copy, for a soft copy also can be charge a fees. For soft copy, no, there is no fee. Soft copy will always be free of cost. Now, if they're asking for a copy of the minutes, can they ask for copy of the minutes of the last 20 years also? Can they ask for a copy of the minutes of the last 20 years also? No. Last how many years copy they can ask, guys? Last 3 years copy only they can ask. Last 3 years. Last 3 years, whatever meeting happened, in that last 3 years meeting only copy they can ask. And if they're asking for copy, within how much time company has to give the copy? Company has to give the copy within 7 days. Okay, now this is the only part which is relevant for this question, but one small additional discussion can I have with you about minutes, not connected to this question, guys, but an important point about minutes. One more point, guys, listen to this also, revision will happen for you. See, who makes a decision that what will enter in the minutes book, what will not enter the minutes book? Who makes that decision? It is a chairperson of the company. It is a chairperson who makes a decision that what will enter into the minutes book, what will not enter into the minutes book. It is a chairperson who makes a decision. Generally, the minutes is supposed to contain a fair and correct summary of everything that happened in the meeting. What should it contain? Fair and correct summary of everything that happened in the meeting. But the chairperson, he has discretion, which means he has decision making power. He has the absolute discretion to decide what will enter into the minutes book, what will not enter into the minutes book. If he thinks something is DID means what? D stands for something is detrimental to the company's interest. If something is irrelevant, if something is immaterial, or if something is defamatory, four keywords. Four keywords, one more keyword. If the chairperson, if he is of the view that if something is detrimental or irrelevant or immaterial or defamatory, it will not enter into the minutes book. So who has absolute discretion? It is a chairperson who has absolute discretion. Did you understand this, everybody? Come on, give me a quick yes. Did you understand? Because of this reason, like for example, let's say something was detrimental to company's interest, that is why it was not written in the minutes book. So can you say company has done something wrong? Can you say company has violated Companies Act? No. Yes, no doubt, Companies Act says that the minutes should contain a fair and correct summary of everything that happened in the meeting. Yes, it should contain everything, but who has the final decision making authority? The chairperson. If he thinks something is detrimental, irrelevant, immaterial, defamatory, it will not enter into the minutes book. So if something is not written in the minutes book because of this, then there is no violation. Guys, perfectly clear. Yes, guys, can I take you to the question now? You understood, right? 4 keywords, guys. Will you remember to write all the 4 keywords? Detrimental, irrelevant, immaterial, defamatory. Not connected to this question, but because we were talking about minutes, I got reminded of this important point. So I thought I'll give you a revision. Now come to the question, everybody. The question says, Mr. Laurel, a shareholder in Hardly Limited, a listed company, desires to inspect the minutes book. Will you let him inspect, guys? He's a shareholder. Can he inspect the minutes book? Yes. And to have a copy, can he have a copy of the resolutions also? Yes, copy of the resolutions also he can have. Whether he can inspect the minutes book and have copy of the minutes at free of cost. Soft copy he can get free of cost. Inspection he can do free of cost. But hard copy he will have to pay a fees. How much fees? Fees is written in the AOA. Maximum it can be how much? 10 rupees per page. Whether he can authorize his friend to inspect the minutes book. Can he authorize his friend to inspect the minutes book? No, he cannot authorize. He himself only has to inspect. So that's all, guys. Come on, let's write down the answer to the question. Write first of all question number 19. Give the heading inspection of minutes. Give the heading inspection of minutes. Under this, write down the following are the applicable provisions of Companies Act 2013. The following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, write down point number 1. We'll go point by point, guys. We'll slowly build our answer. We will first write what are minutes. Then we will say that minutes has to be inspected by whom, when, soft copy, hard copy, fees. Like that, point by point we will go. First of all, let's write what are minutes. Minutes are a written record. Minutes are a written record of business transacted at the meeting. Minutes are a written record of business transacted at the meeting. Continue writing. They contain dash and dash summary of the proceedings of the meeting. They contain fair and correct summary of the proceedings of the meeting. Then we'll start writing about inspection. Next line, write down minutes book of general meeting and postal ballot can be. Guys, one small point. I forgot to tell you something. This question is having 2 subdivisions, right? So we have to write it in 2 parts. So what I'm writing for you right now is the first part, okay? This is the first part. Continue writing. Minutes book of general meeting can be inspected by members only. Underline members only during business hours. during business hours without any fee. There is no fee for inspection. Underline without any fee. Next line, write down. Members can also request for a soft copy of the minutes book of any general meeting held in dash preceding financial years, comma, which shall be furnished within dash days without any fees. For soft copy, there is no fees, without any fees. Underline without any fees, fill in the blanks. You can ask for minutes book soft copy of any meeting held in 3 preceding financial years, which shall be furnished within 7 days. Next point, write down. What's the only point we are left with now? We only have to write about hard copy now. So write down. However, if members request for hard copy, fee as specified in Articles of Association, comma, up to a maximum of rupees 10 per page, up to a maximum of rupees 10 per page can be charged. Up to a maximum of rupees 10 per page can be charged. So this is it about the provisions. Now let's write the facts of the case. Next line, write down here. Next line, write down. Mr. What's the name of the shareholder? Mr. Laurel Hardly Limited. Write down Mr. Laurel, a shareholder of Hardly Limited, wants to inspect the minutes book and take a copy of the same. Here, Mr. Laurel, a shareholder of Hardly Limited, wants to inspect the minutes book and take a copy of the same. Now write down the analysis. Next line, write down. Applying the above provisions. Guys, what are they asking us? Whether he can inspect the minutes book and have copy. Did they talk about soft copy or hard copy? No. So we'll write about both. Write on applying the above provisions. Yes, Mr. Laurel can inspect the minutes book and also avail a copy of the same relating to meetings held in 3 preceding financial years. Next line, write down. Fee that can be charged, underline, under this write down, for inspection nil, for soft copy nil, for hard copy as specified in the articles, in brackets write down maximum rupees 10 per page. Maximum rupees 10 per page. All right. Then we'll now coming to the last part, coming to the conclusion. So whether he can inspect the minutes book and have copy. So I'll write thus. Yes, he can inspect the minutes book and also have copies of the same for a fee as outlined above. This was it about my first subdivision. Coming to the second subdivision, which is going to be a much simpler and a shorter subdivision, whether he can authorize his friend to inspect the minutes book on behalf of him, we will write no. No. Mr. Laurel cannot authorize his friend to inspect the minutes book. Cannot authorize, underlined, cannot authorize his friend to inspect the minutes book on his behalf. Only members are allowed to inspect. Only members are allowed to inspect the minutes book of general meetings. Only members are allowed to inspect the minutes book of general meetings. Guys, before I forget one small point, let me tell you, like how inspection of minutes book is important, no, in your management and administration chapter. Similarly, in your accounts of companies chapter, you have about inspection of books of accounts, inspection of books of accounts by board of directors. Even that is important. Okay, on that I have also recorded one nice detailed video and I've put it up on YouTube, just targeting the books of accounts concept, the whole books of accounts concept in your accounts of companies chapter. I've put up a video on YouTube, so ensure you watch that. If you have any doubt with respect to your inspection, there are two important inspections in your syllabus. One is inspection of minutes book, which I've discussed for you here, and the other is inspection of accounts of inspection of books of accounts. Okay, that is it with this question, guys. Let's go to the next question now. Come on, everybody, come to question number 20. This is again a question from your meetings chapter, from management and administration chapter. This question is about AGM and EGM, that where are you supposed to hold it, when are you supposed to hold it. It's about all of that. let me give you a quick revision. This question is only about AGM, but I will be giving you the revision of both AGM and EGM. Both I'll give you a revision. Okay, come on, listen to me carefully, everybody. I am first talking to you about AGM. Okay, now where are you supposed to hold the AGM? It all depends upon, is the company a listed company or is the company an unlisted company, listed company or unlisted company. If it is a listed company, it can be conducted at the registered office of the company, or it can also be conducted at any other place outside the registered office. But this any other place has to be in the same city, town, or village where the registered office is situated. Are you listening? Yes, if you're conducting the AGM, where are you going to conduct the AGM? If it's a listed company, you can conduct it at the registered office or at any other place, but in the same city, town, or village where the RO is situated. Do you have any option of going to some other city? There is no option, guys. You have to do either in the registered office or any other place in the same city. But if it is an unlisted company, here you have many options, guys. You can conduct the meeting at the registered office. You can conduct at any other place in the same city, town, or village where the RO is situated, or you can also conduct the AGM at any other place in any other city. But this any other city, can you go to US also and conduct? No. This any other city has to be in India only. It has to be in India only. And if you want to do in any other city, don't you think it is something which is beyond the limit? I mean, if you're going to some other city, you're taking a big step. So you need the consent. You need the consent of how many members? You need the consent of all members, guys. Each and every member has to be okay with this place. And these all members, you should get consent how? Either you should get the consent from them in writing, or you should get the consent from them in electronic form. Understand the logic behind this point. See, if this consent point is not there, then what the company will do? Company will decide, I will hold the meeting in one corner of some northeastern state. Let's say in some corner of Mizoram, which is not even easily accessible. 99% of the members will not even be able to reach that place. So company will say it's in India. Anywhere in India I can do. I will do in Andaman Nicobar Islands in the middle of a forest also. So we have to stop the company from doing all that. We're telling the company, okay, fine, you can do in anywhere, in any place in India. But if you want to go outside the same city, if you want to go to some other place, you need the consent of all members. I'm not saying majority members. I'm saying you need the consent of all the members. Is this also clear? Yes, guys. So this was our discussion about AGM. Now listen, one more point about AGM. This is about where are you supposed to hold the meeting. Now we also need to know that when are we supposed to hold the meeting. The maximum time limit that you know. Remember, 3 time limits, out of them whichever is earlier, that you know. But I want to know the time, basically the day. Can you hold the AGM on a national holiday? No. But can you hold the AGM on a state holiday? Yes. So this was entire discussion about AGM. Now coming to our discussion about EGM. Listen to me. Where are you supposed to hold the EGM? Now, generally, if you see any kind of a company, generally EGM can be held anywhere in India, guys. You can also hold the EGM in another city. Even if you're a listed company, doesn't matter. Any company, you can hold the EGM anywhere in India. Alright, however, if your company is a wholly owned subsidiary of a foreign company, the company is a wholly owned subsidiary of a foreign company, this kind of a company can have the meeting outside India also. This is allowed. Wholly owned subsidiary of foreign company can have a meeting outside India also, it is allowed. But do you remember yesterday when I was talking to you about quorum, I was saying that sometimes EGM is called by requisitionists. Do you remember that discussion? Sometimes EGM is called by requisitionists because members requested the directors. The directors did not call the meeting. The board did not call the meeting. So because the board did not call the meeting, the requisitionists, they themselves called the meeting. Now this meeting, you have criteria, you have a little there's a little strictness about this meeting. This meeting has to be held either in the registered office or it has to be held at any other place but in the same city, town, or village where the registered office is situated. Okay, so generally EGM can be held anywhere in India. You don't need anybody's permission and all. You can hold the meeting anywhere in India. But however, if you're a wholly owned subsidiary of a foreign company, your EGM can be held outside India also. But if the EGM is called by requisitionists themselves, then the meeting has to be either in the registered office or at any other place, but same city, town, village where the registered office is situated. Okay, so this question is not about EGM. This question we're going to see now is about AGM only. Just wanted to give you a revision of both so that you can learn both comparing each other. So coming to my AGM it only depends upon whether it's a listed company or unlisted company. Listed company either in the registered office or any other place, but same city, town, village where the registered office is situated. Unlisted company can go to some other city in India also, but with the consent of all the members. Okay. Now with this much knowledge, come to the question. Sunshine Limited, it's an unlisted company, guys. It's an unlisted company registered in the state of Uttar Pradesh with 40 shareholders. It wants to organize AGM. So it's an unlisted company. We're talking about AGM. Meeting shall be held on 28th September, which happens to be Raksha Bandhan, a day declared as a holiday by UP government. Tell me, is this okay? Can I hold the meeting on 20th September? It's a day which is declared as a holiday by UP government, which means what kind of a holiday is it, guys? It is a state holiday. On a state holiday, can I hold the AGM on a state holiday? Yes. I cannot hold AGM only on a national holiday. On a state holiday, I can hold the AGM. Then look at the next point. What about the venue for the meeting? The venue of the meeting shall be Lonavala, a hill resort in Maharashtra. But where is the company's registered office? Uttar Pradesh. Is this okay? Unlisted company, where are you supposed to hold the AGM? Either at the registered office or at any other place, but same city, town, village where the registered office is situated. Here the company is holding in some other place, in some other state itself. Is this allowed? It is in India, guys. It is allowed with the consent of all the members. You need the consent of all members. Am I saying majority of members? No, I'm saying consent of all members. So out of 40 shareholders, 38 have given their consent in writing for conducting the meeting in Lonavala. Can the company hold the meeting in Lonavala now? No, because what is the problem? If you want to hold in any other city in India, you need the consent of all the members. Here you got consent of only 38 members. So therefore, no, you cannot hold the meeting in any other place. All clear? Can we write the answer for this, everybody? Yes, guys. Come on, guys. Let's do this. Give the heading. Question number 20. 20 only, no? Yeah. Question number 20. Under this, write down place and date of holding AGM. Place and date of holding AGM. Now, under this, write down the answer as I call out, please. How many subdivisions? 2 subdivisions. We will answer both the subdivisions one by one. So, answer to subdivision 1. The following are the applicable provisions of Companies Act 2013. The following are applicable provisions of Companies Act 2013 and corresponding rules. Under this, write down one by one. First point, write down. AGM should, guys, first point is about not place. First point is about date, about day, national holiday, state holiday, that point. Okay, don't forget. So AGM should be held during business hours. Guys, by the way, what do you mean by business hours? Write in brackets. 9 a.m. to 6 p.m. 9 a.m. to 6 p.m. on any day, which shall not be a dash holiday. National holiday means a day declared as holiday by dash. Fill in the blanks, which shall not be a national holiday. National holiday means a day declared as holiday by central government. That's it about the provisions about the first part. Now go to the facts of the case, write down. Here, Sunshine Limited's annual general meeting. Here, Sunshine Limited's annual general meeting was held on 20th September, which happens to be a day declared as a holiday by the UP government. This is it about the facts of the case. Then write down the analysis. Applying the above provisions. Next line, write down. September 20th being Raksha Bandhan, 20th September being Raksha Bandhan is not a national holiday. It is only a state holiday. Next line, write down. AGM can be held on any day which is not a national holiday. AGM can be held on any day which is not a national holiday. Thus, come to the question, see exactly what they're asking you. They're asking you, meeting shall be held on 20th September, which happens on Raksha Bandhan, state holiday. Advise the company on the feasibility of the above. So what will your answer be? What will your conclusion be? Advise the company on the feasibility of the above. Feasibility of the above with reference to provisions of Companies Act 2013. Feasibility of the above means what? Basically, whether the company has complied or not. So write down, thus, company has complied with the provisions of Companies Act 2013 in calling its AGM on 28th September. I hope you are not being lazy and just watching. I hope you're actually writing. Yes, don't give excuse, hand paining and all. If I am writing, you're also going to be writing. Alright, so that is it, guys. That's it about your first subdivision. Now come to the Second subdivision, everybody. So second subdivision is about the place. You remember we discussed you can hold the AGM. You're by the way, had the company been a listed company, can it hold the meeting in any other city? No, you are an unlisted company, so okay, fine, you can hold in any other city in India, but you need consent of all members. Here, 2 members did not give consent, therefore you can't hold meeting in Lonavala. So write down the answer to the second subdivision. I'll call out for you. Second subdivision. The following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, write down the first point. AGM of the company shall be held at, under this, write down. First point, the registered office. The registered office, comma, or next line, any other place, any other place in the same city, town or village where the registered office is situated. Next line, write down. Next point. However, if the company is an dash company, comma, in addition to the above, in addition to the above, AGM can also be held at any other place in dash with prior consent of dash members in dash or dash. Fill in all the blanks, please. The company is an unlisted company. In addition to the above, AGM can also be held in any other place in India with prior consent of all members in writing or electronically. That's it about the provision, guys. We've written about the place. Now write down the facts of the case. Here, Sunshine Limited, an unlisted company, with registered office in UP, wants to hold its AGM in Lonavala, in brackets write on Maharashtra. In Lonavala, Maharashtra. Next line, write down in the facts of the case. For this, 38 out of 40 members have given their consent. For this, 38 out of 40 members have given their consent. Guys, one small point, okay, before you continue writing, you agree, right? If the question was about EGM, your answer would have changed. If it is EGM, does company still require everybody's consent? If it is EGM, any kind of company, listed, unlisted, you can hold the meeting anywhere in India. You're holding the meeting in Lonavala, Maharashtra, which is in India. Nobody's permission required. You can easily hold the meeting. You're understanding? So basically, you should be having one small mental checkpoint that you will think about first whether it is AGM or EGM. Accordingly, you will give your answer. Answer will change. AGM, place where to hold the meeting, answer will change. EGM, place where to hold the meeting, answer will change. Okay? Come now. And EGM, did you notice? Listed, unlisted, that differentiation I'm not making. Okay? Continue writing. For this, 38 out of 40 members have given their consent. Now write the analysis with me. Applying the above provisions in the given case. Next line, write down. The company can hold its AGM in Lonavala only with the consent, in brackets write down, in writing or electronically. In writing or electronically, only with the consent of all 40 members. Next line, write down, as only 38 out of 40 members have consented and 2 have not consented for AGM in Lonavala, the AGM cannot be held in Lonavala. Thus, the company has not complied with Companies Act 2013 in conducting the AGM in Lonavala. That's all, guys. All right. So this was about the place and the time of holding the AGM. Know that if the same question was about EGM, your answer would have changed about the place. EGM you can hold in any place in India. You don't need anybody's permission. All right. Can we close this question? Can we go to the next question? Can we come to question number 21? Yes. So question number 21 is again a computation based question. If you remember, on day one, we have written one computation based question relating to bonus. Now we will be seeing one more computation related question, again from share capital chapter only, but this one is going to be relating to debentures. All right. I definitely wanted to write at least one question from debentures, because as important the share capital part is, equally important even the debentures part is. So I'll explain it to you. Listen to me, I'll explain the provision to you. This question which I'm showing you over here, it was a 6 marks question, guys, in the examination, November 2022 examination, if I'm not wrong. Now, when this question came in the examination, it was a compulsory question. The first question in the question paper was this question. It was a compulsory question, okay? And I remember so well, after this question, after this examination happened, everybody started saying that this was an out of syllabus question. All right, because this question talks about section 181C, and section 180 is actually a part of your CA final syllabus. However, the point which is involved in this question from section 181C, that small point which is involved, that one small point, one small sentence is there in your ICAI study material. So on that one sentence, they framed one 6 marks question and they gave it to the examiner, and they gave it to the students. You're getting my point, guys. So and then you know what happened, everybody started saying, like, even now if you see Instagram, Telegram and all, you get a lot of updates, right, about the examination, whether it was easy, whether it was difficult. So after this examination got over, everywhere on Instagram and Telegram it was written that, oh god, first question itself, out of syllabus question, it was written. Okay, then what happened is, one of my students, she messaged me after class saying that, ma'am, isn't it section 180C concept? I mean, we covered this in class. Isn't this that concept? Why is everybody saying it is out of syllabus? What did she do and come? She was one out of that very few students in the entire country who even identified what this concept is. Everybody was saying it is out of syllabus. Only a few students knew what this was. She was in that few students, but she wrote wrong section number and came. At that time, I told her, yes, yes, correct only, you are right, correct on, you gave the correct, I mean, basically, you identified the concept correctly. Yes, I told her this. And then what happened is, after the exams got over, she passed. She had a 57 out of 60. She had a 57 out of 100. She passed. But I asked her to get her certified copy, because I wanted to see that do they actually deduct marks for wrong section number or not. Because we keep saying, right, don't write wrong section number. If you write wrong section number, the whole, you won't get marks for the whole question. We always keep saying that. I wanted to check whether they actually deducted marks or not for writing the wrong section number. So I asked her to get a certified copy. Guys, they, what they did, where she had written this, they put an X over there and they gave 0 marks. She got 0 marks. Beautiful answer she had written, guys. Everything so nicely she had written. I'm going to make you write over here the way she had written. Okay, so nicely she had written the entire answer, but she got 0 for this question. Did it matter to her? But it didn't matter to her, because she passed. She cleared the group. She cleared her CA inter. She went to the next level. But however, 6 marks question, imagine she did not clear. Don't you think she would have lost an exemption? 6 marks, nicely she would have gotten 5 out of 6, guys, the kind of answer she had written. Had she not written the section number, had she not done this show off in the examination, she would have easily gotten another 5. She would have gotten 62 out of 100. And you guys, out of everybody else, you guys know very well the importance of half a mark, how it can make a huge difference. Here she lost 5 marks because of this silly mistake. All right, that's why since then I started telling students, if you know the section number, like, without any doubt, only then write. Even small doubt you have, don't play games in the examination hall. Don't be adventurous in the examination hall. Okay, come on, read the question with me, and then we'll do the answer. The question is about debentures. The question is about section 181C. This section, very two small points only, guys. We will see how much debentures the company wants to issue. So debentures to be issued plus what are the existing borrowings of the company. This will become the total borrowings of the company. No, debentures that the company is going to issue now. plus existing borrowings, everything put together should not exceed paid up share capital plus free reserves plus securities premium. That's all. Small point. When you're computing this limit, when you're doing this calculation, you should exclude short-term borrowings, you should exclude short-term loans, you should also exclude temporary loans. The balance borrowings only you should consider. The balance borrowings, everything put together should not exceed paid up share capital plus free reserves plus securities premium. This is the main point. Now, what if the company wants to exceed this limit? Company, if you want to exceed this limit, if you want to borrow more than this limit, you simply have to pass a special resolution. This is one part of the concept involved. Another part of the concept is that company, if you want to issue convertible debentures means what? These debentures are going to be converted into equity shares in the future. Company, if you want to issue convertible debentures, whether you are issuing within the limit, whether you are issuing more than the limit, I don't care. What do you have to pass? You have to pass a special resolution. That's all what the concept is about. Understanding, everybody? Section 181C, what's the concept? Company, if you want to borrow loans, you should be borrowing within paid up share capital plus free reserve plus securities premium limit. If you want to borrow more than this limit, you have to pass special resolution. And company, if you want to issue convertible debentures, whether within the limit, whether more than the limit, doesn't matter. Convertible debentures, anyways, you have to pass special resolution. Okay, keep this in mind and come to the question now. Look at what exactly has happened over here. The question says Board of Directors of SRD Limited, an unlisted public company engaged in the business of manufacturing of two-wheelers, intends to issue debentures in order to finance its project of electric scooter manufacturing. It intends to issue. It has not issued yet. It is going to issue. Company seeks your advice regarding the maximum amount of debentures it can issue. What's the maximum amount of debentures it can issue to raise the desired funds? Company has provided the following abstracts from financial statements ended on 31st March 22. They're asking you what's the maximum amount of debentures company can issue. So company is having 1 crore authorized share capital. I don't care about the authorized share capital number. Look at the remaining points. 40,000 equity shares of 100 rupees each fully paid up. This is the paid up share capital of the company. Securities premium of the company. General reserve. Balance in P&L account. Capital reserve. Company is already having 8% non-convertible debentures. Company is already having 9.5% term loan from XYZ Bank for purchase of plant and machinery. Repayment starts after 1 year moratorium period. Tell me, what is this? Have you ever seen this in the syllabus? No. So will this be relevant for you? No. So even if you ignore this, your answer will still be the same. Your understanding, examiner will try to do all these dirty tricks with you. Be careful. If you don't know the meaning of the word, it means that point is not even relevant for your question. Just for your information, what does moratorium period mean? During COVID time, this concept had come in. During COVID time, during COVID time, there was lockdown, right? So businesses were not running. But I borrowed a loan from the bank. My business is not running. I don't have money. But I still have to repay bank loans. How will I repay? Understanding the problem. So that is why government announced a moratorium period. In this moratorium period, we don't have to repay EMIs. It will keep it, the EMIs will stay outstanding only. We don't have to repay. But interest will keep accruing. They will not charge penalty for not paying the EMIs. We can pay the EMIs later once the lockdown is over, but interest will keep accruing. That is moratorium period. Then short-term cash credit loan from XYZ Bank, 50 lakh rupees. Referring to and analyzing the relevant provisions of the Companies Act, amount that can be advise the company presenting the necessary calculations, amount that can be raised by the company by issuing debentures, resolution, if any, required to be passed in the meeting in respect of the same. First, they're asking us how much can be raised, amount that can be raised. Then they're asking us what kind of resolution is required. Come on, tell me, what is the amount that can be raised? What's the maximum limit? Paid up share capital plus free reserves plus securities premium. Answer, everybody. To compute the maximum limit, will I consider the authorized share capital? No. Will I consider the paid up share capital? Yes. Will I consider share premium reserve? Yes. Will I consider general reserve? Yes. Will I consider balance in P&L account? Yes. Will I consider capital reserve? No, only my paid up share capital plus free reserves plus securities premium. So add up. What's the total limit now? 140 crores, 140 lakhs. 140 lakhs. Now, what is the existing borrowing? How much borrowing is the company already having? Will I consider 8% non-convertible debentures in existing borrowings? Yes, even debentures are borrowings. Will I consider this 9.5% term loan? Yes. Will I consider this short-term cash credit loan? No, I just now told you in the provisions part, short term loans and temporary loans I will exclude. Short term loans and temporary loans I will exclude. So what are the existing borrowings of the company? 50 lakhs. So now if the company wants to issue debentures, company can issue debentures for how much? Company can issue debentures for the balance 140 minus 50. For 90 lakhs, company can issue debentures. Understanding, guys? Maximum borrowings should not exceed 140 lakhs. Company is already having borrowings of 50 lakhs. Company, if you want to issue debentures, you can issue debentures only for the balance 90 lakhs. To issue 90 lakhs debentures, is any resolution required? No resolution is required. But if the company wants to exceed 90 lakhs, then is a resolution required? Yes, it is required. What is required if the company wants to exceed 90? Special resolution will be required, but only if the company wants to exceed 90. Then they're asking us, what will be your answer in case above company desired to issue debentures with an option to convert? If it is convertible debentures, whether optionally convertible, whether mandatorily convertible, I don't care. If it is convertible debentures, whatever be the amount, whether within the limit, whether more than the limit, doesn't matter. SR is anyways required. All right, can we start writing the answer to this question, everybody? Come on, let's begin. Give your heading. Here also there are two subdivisions, everybody, in the question. Two subdivisions. We will write both the subdivisions independently, one after the other. Write down the first subdivision. Give the heading. Question 21. Under this, give the heading. Maximum amount that can be raised by issue of debentures. Under this first subdivision we are writing, we'll do the provisions first. The following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this point number 1, first we'll define debentures. Debentures include debenture stock, comma, bonds or any other instrument of the company evidencing dash, comma, whether constituting a dash, whether constituting a dash on the company's assets or not. Fill in the blanks. Evidencing debt, whether constituting a charge on the company's assets or not. Then write down the next point. We'll write about the maximum limit now. Debentures to be issued and the dash borrowings of the company should not exceed dash. Fill in the blanks. Write the limit carefully. Existing borrowings should not exceed paid up share capital plus free reserves plus securities premium account. Then write down the next line. If the company desires to exceed the limit, comma, prior dash resolution shall be obtained from the members. Fill in the blanks. Prior what resolution? Prior special resolution shall be obtained from the members. All right. And last point, we will write about temporary loans and short-term loans. Write down, while computing existing borrowings, comma, dash loans and dash loans obtained from company's bankers in the ordinary course of business are not to be included. Fill in the blanks, please. While computing existing borrowings, temporary loans and short-term loans obtained from company's banker in the ordinary course of business are not to be included. All right. So these are all the provisions. Now, can we write facts of the case over here? Not really, because the computation and all will come under the analysis part only. So there's no facts of the case to be written, because all this I can't write in the facts of the case. So I'll straight away do the computation in the analysis part. Write down, I'll show you how. Applying the above provisions in the given case, write down under this. First, we'll show the maximum limit. Two computations we have to show, guys. The maximum limit computation is 140 lakh computation and existing borrowing 50 lakhs computation. So write down under this. One by one, we'll show the computations. Maximum limit up to which SRD Limited can borrow. Under this, show the calculation. Paid up share capital 40 lakhs. Share premium reserve, whatever terminology they have used in the question, same terminology I am using. Share premium reserve 50 lakhs. General reserve 30 lakhs. And lastly, balance in P&L account 20 lakhs. Which one did we exclude? Capital reserve we excluded. So write down capital reserve and write down not considered. So what's the total? 140 lakhs. This is the maximum limit. Now next line, write down existing borrowings of SRD Limited. Existing borrowings of SRD Limited. One by one we'll write. First is 8% non-convertible debentures. 8% non-convertible debentures. The amount is 30 lakhs. Then 9.5% term loan. The amount is 20 lakhs. And then your short-term cash credit loan, will you consider this? You know very well you will not. So write down not considered. Total is 50 lakhs. Then write down the next line. Maximum limit up to which SRD Limited can borrow is rupees 140 lakhs. It has already borrowed rupees 50 lakhs. Hence, the maximum amount that SRD Limited can now raise by issue of debentures is 90 lakhs. Show the calculation. 140 lakhs minus 50 lakhs. Then write down next point. We are still in the analysis. If the company desires to exceed the limit, then prior special resolution is required. Prior special resolution is required. All right. So this is it about your analysis part. Now come to the conclusion, everybody. Thus, again, you'll go and see what exactly is the examiner asking you. He's asking you what is the amount that can be raised, and he's asking you what kind of resolution is required. Two things he's asking you. So write down under this thus. First point, amount that can be raised by issue of debentures is equal to rupees 90 lakhs. Then write down next line. to raise beyond rupees 90 lakhs, special resolution is required. Alright, so this is it about your first subdivision. Now there's one more subdivision. What will be your answer in case a company desired to issue debentures with an option to convert them into shares? So we have to write about convertible debentures. If the company wants to issue convertible debentures, irrespective of the amount, special resolution is required. Right? So write down answer to the second subdivision. We'll straight away write it to the point. To issue convertible debentures, comma, irrespective of the amount, a prior special resolution is required. A prior special resolution is required. That's all, guys. All right. So this is it about this question, the debentures question. We've discussed a very important point over here, the maximum limit, how much debentures can be issued, section 181C. All right. So with this, I think we're good to close for now. All right. So let's begin. Let's go through the last few questions now. Let's take up the next set of questions. We've just finished with a big, huge question on debentures. Let's come to question number 22 now. Question 22 is a question from MOA AOA discussion. See, when it comes to MOA and AOA, there are three important questions. There are three important, top important concepts, okay? One is alteration of MOA AOA. Second is your, and you remember in AOA, you must have learned about entrenchment provisions you must have learned. And then your section 20, which talks about service of documents. These are the three most highly repetitive questions from MOH AOA chapter in your intermediate level. Now, I did not choose alteration for us to write and see because alteration is generally a theoretical question. I also did not pick up entrenchment provision because entrenchment provision generally students are well aware of it because you learn about it in CA foundation as well. But section 20, the last three sections in your MOA AOA chapter, section 20 which talks about service of documents, section 21 which talks about authentication of documents, section 22 which talks about appointing an attorney, these last three sections students don't learn them properly. So that is why one out of those three sections I've picked section number 20. Let me quickly tell you what is the concept involved in this question. Section number 20. This question talks about service of documents. If I want to send any document to the company or if I want to send any document to the officer of the company, I will send it to which address? I will send it to the RO address. See, if I want to send a letter to the director of the company, I will not send it to the director's house address. Are you understanding this? I will not send it to the director's address. I will still send it to the registered office address only. I'm hoping this is making sense to you because I'm sending it to the director in his capacity as a director of the company. So anything I want to send to the company, anything I want to send to an officer of the company, I will send it to the registered office address of the company. Now, in what mode will I send? I have 5 options. I can send by registered post, or I can send by speed post, or I can send through a private courier, or I can send it by hand, which means personally I can go and deliver it to the company, or I can send it electronically by email. The act itself has given me 5 methods. Can the company dictate on me that send me only by speed post? Can the company dictate like this that send me only by speed post? No. When the act itself has given me 5 options, I can use any of the 5 options and I can send through any of the 5 modes. However, if company has to send something to the member, can the member dictate to the company that company send me only by speed post? Can member instruct like that to the company? Yes. Are you listening, everybody? Member can instruct the company that send me only by speed post, like that member can instruct the company. But can the company instruct the member send me only by speed post? No. If we have to send anything to the company, we have 5 options and the company cannot take away these 5 options from us. Okay, keep this in your mind and have a look at the question, everybody. The Articles of Association of AB Limited provided that documents upon the company may be served only through speed post. Is this all right? Is this allowed? The question is saying AOA of AB Limited provided that documents upon the company may be served only through speed post. Is this allowed? This is not allowed. Tell me, can members tell the company send me only by speed post? Yes, that is allowed. But can the company tell the members in the AOA that send me only by speed post? No. And you tell me, can the AOA override the Companies Act, guys? No, AOA is stronger. Companies Act is stronger. Companies Act is the most important document for the company. Next important document is MOA. Next important document is AOA. Can the AOA override the Companies Act? No. But however, sometimes, listen everybody, try to understand in one explanation. There are some sections wherein in the section itself it is indicated that AOA is stronger. Like for example, section 46, which talks about voting rights. It tells us about the voting right of shareholders, but that section says that AOA can specify otherwise, which means section 46 is giving power to AOA. So in those kind of sections, okay, I can say AOA is stronger than Companies Act because Companies Act itself is telling that if something is written in AOA, you follow like that. But in section 20, is it written that if AOA says something, follow like that? It is not written. So for section 20, which is the strongest document? Companies Act. If AOA has written something which is against Companies Act, AOA will not apply, Companies Act will apply. Suresh sent a document to the company by courier. Is it all right? Is courier covered, guys? If anybody wants to send it to the company, can the company send by courier? Yes. The company did not accept the document on the ground that it is in violation of the articles. Company did not accept the document on the ground that it is in violation of the articles. Is the company right, guys? No, company, listen, section 20 is giving us power. 5 modes, section 20 is giving us power. You don't have the power to take away our power. Getting my point, everybody? Section 20 itself is giving us the power to send by 5 modes. You can't take that away from us. We can send in any mode. As a result, Suresh suffered a loss. Whether refusal of document by the company is valid, what will your answer be? No, it is not valid. Whether Suresh can claim damages for it, what will your answer be? Of course, yes, he can claim damages if the company is not accepting the letter. And because of this, if he suffered any damages, yes, of course, he can claim damages. Can we write down the answer, guys? A nice, perfect answer we will write for this question. Come on, give the heading. Answer to question number 22. Give the heading Service of Documents. Under this, write down the following are the applicable provisions of Companies Act and corresponding rules. The following are the applicable provisions of Companies Act 2013 and corresponding rules. Write down the first point. If a person wants to send a document to the company, or any officer of the company, it shall be addressed to the dash office of the company and sent by registered post. Next line, write down speed post, registered post or speed post or courier or personally leaving it at the registered office or by email. Shall be addressed to which office, guys? Shall be addressed to the registered office. Okay, next point, write down after this. Companies Act 2013 overrides the Articles of Association. These are the only two provisions involved in this question. Yes, this is the only provision which is involved over here, and we've written it fully. The provision, there are only two provisions. First provision is if we want to send to the company, to which address we will send and by what mode we will send. And the second point which is applicable, second provision which is involved over here is that Companies Act is stronger than AOA. All right, now come on everybody, come to the next part of the question. So this was the provisions. Now we'll write about the facts of the case. Here, AB Limited's AOA requires documents to be sent by speed post only. Suresh has sent the documents by courier. Next point, company refused to accept the same and Suresh suffered a loss. Company refused to accept the same and Suresh suffered a loss. So this is your facts of the case. Now come to the analysis, everybody. Write down. Applying the above provisions in the given case. Next line, write down. Point 1. Suresh sent the documents by courier which is a mode of service allowed by the Act. Allowed by the Act. Next line, write down. When the Act allows service of documents, when the Act allows service of documents to the company by 5 modes, comma, AOA cannot override the Act AOA cannot override the act and require that the documents be served by speed post only. That's it about the analysis. Two provisions we wrote. First provision was the 5 modes, and second provision was AOA cannot override Companies Act. Both the provisions we've applied over here. We identified courier is one of the modes of service allowed by the Act, and we also said that AOA cannot override the Act. So both the provisions we have applied. Now come to the conclusion. Thus, see what exactly is the question asking you. Whether the refusal of documents by the company is valid, what will you say? No, the refusal is not valid. So write down thus, no, the refusal by company is not valid. And then write down the next point. What is the second question? Whether Suresh can claim damages, write down yes. Suresh can claim damages. Suresh can claim damages from AB Limited for loss incurred by him because of AB Limited's fault of not accepting the documents. That's all, guys. All right, I'm hoping you're done writing. Let's go to the next question. This was question number 22. Question number 23 we've already completed in yesterday's session. Remember the last question that we wrote yesterday on Ejusdem Generis? We've already completed that. So straight away we'll come to question number 24. Question 24 is another question relating to CSR. Now, what is this question all about? Let me tell you the provision. The provision I've already explained to you yesterday when I was explaining the CSR provisions with you. I've already spoken about this provision also over there. You recall that if the company is spending money on CSR, how much the company has to spend? What's the minimum obligation? Minimum the company has to spend 2%. 2% of what? 2% of average net profits. Average net profit of how many years? Average net profits of 3 preceding financial years. But however, right now I am in the 3rd year, which means I have how many preceding financial years? I have only 2 preceding financial years. So in that case, how will you compute the average? You will take these 2 years average. That's all. You're getting my point? So if this is the 3rd year and I have only last 2 years, so in that case I will simply take the 2 preceding financial years average, and then tell me which net profit number are you going to consider. Are you going to consider net profit before tax, or are you going to consider net profit after tax? Even that we've discussed, guys. We're always supposed to consider net profit before tax. You remember net profit before tax, before setting off of losses, without considering dividend of those Indian companies which have already complied with CSR, and also without considering profits of overseas branches. We're supposed to take the balance net profit only. I hope you recall that discussion. So coming back to this question says Skip Limited Company was incorporated on 1st April 2019. The balances extracted from audited financial statements are given below. 1920, 2021, they've given net profit before tax and net profit after tax. Net profit after tax will not even be used. We will only be considering net profit before tax. Company proposes to allocate the minimum required amount for CSR to be undertaken during 21-22. Keyword, most important point of the question, if it is mandatory. Which means question is saying question will spend money on CSR only if it is mandatory in 21-22. So in this question, what is my current financial year? 21-22 is my current financial year, guys. Yes, so how many preceding financial years am I having? Company was incorporated only in 1920 financial year. Current financial year is 21-22. I have only two preceding financial years, 2021 and 1920. Only two preceding financial years I'm having. So I will spend, how much money I will spend on CSR? 2% of the average of these 2 years net profit. But don't you think I will spend money on CSR only if first of all CSR is even applicable to me? I already told you in the last session, is CSR applicable for every company? CSR is not applicable for every company. It is applicable only for those companies which fulfill at least one out of the three criteria which is applicable for CSR committee. Now, what are the three criteria? Tell me. Criteria number one, the net worth has to be at least 500 crores. Have they given us that number over here? They've not given us. Then turnover has to be at least 1000 crores. So have they given us a turnover number? No. Or the net profit has to be at least 5 crores. Is the net profit at least 5 crores? They did not give us 21-22 net profit, guys. They gave us only 2021 1920 net profit, guys. Now what to do? What to do? Assume it seems. Jai Surya, think again. I'm trying to confuse you. Don't get confused. You have to see all these numbers of which year. You have to see all these numbers of the preceding financial year. What is the preceding financial year? 2021. The net profit is 7 crores. Net profit is more than or equal to 5 crores, which means this condition is fulfilled, which means CSR will apply. Understood, everybody? Yes, guys. So, see, I'll give you one simple hint, okay? One simple hint. In CSR, is current year relevant for anything? For nothing, current year is relevant. The criteria also, preceding financial year. Calculation 2% also, three preceding financial years. Current year is irrelevant. Alright, so you are required to advise the company in this regard, compute the minimum amount if required. So what will most of the students do? They will simply compute the 2% number and give. But what are they saying again and again? If mandatory, if required. So what are they expecting us to do? First check whether CSR is even applicable. Then ask the company to spend money on CSR. Understanding. So come on, everybody, let's write down the answer. I hope everybody understood. You'll understand even better as we write down the answer. So answer to question number 24. Give the heading minimum CSR spending. We'll write the provisions first. The following are the applicable provisions of Companies Act 2013. The following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this first point, write down corporate social responsibility, in brackets write down CSR. Under section 135 is applicable to every company, which fulfills any of the following criteria: applicable for CSR committee. What are the three criteria? One by one, let's write. Net worth at least rupees 500 crores, or next line, turnover at least rupees 1000 crores, or next line, net profit at least rupees 5 crores. Then after this, next point, write down. So guys, in this question, there are only two provisions applicable. No, one is the criteria and the other is the 2% calculation. So we've written about the criteria. Now we'll write about the 2% calculation. Write down, such companies shall spend at least dash percentage of dash of the company of dash preceding financial years according to the dash policy of the company. Fill in the blanks, please. Company shall spend at least 2% of average net profits of the company of 3 preceding financial years according to the CSR policy of the company. Next line, write down. If the company has not completed three preceding financial years, since incorporation, average net profits will be computed of as many years as the company has completed. Average net profit will be computed of as many years as the company has completed. Guys, with this, we've nicely written all the 3 provisions involved. We've spoken about the limit, we've spoken about the 2% number, and we've also said that company existence in less than 3 years, then how many ever years company is existing, that many years I will take as that many years average I will take. But guys, I think over here, one more point in the provisions has to be written. Can you think about it? In this question, actually, there's one more concept that you're applying. Which concept is that? Can anybody think? We've written about the 3 criteria. We've written about the 2% number. We've written about less than 3 years. Don't you think we're supposed to write about the net profit before tax? The fact that we will not be considering net profit after tax. The fact that we're supposed to take net profit before tax, before setting off of losses. Don't you think that is also a relevant provision, guys, over here? Whatever concept you are applying in your answer, all those concepts we will write in the provisions. So write down over here, one more provision, write down net profit for such computation. Net profit for such computation is to be considered before tax. Now, what if we were in the second year, guys? If we were in the second year, how many preceding years are we having? Only 1 year. So that year's net profit we will take. What if we are in the first year? Do we have preceding financial years? No. If we are in the first year, CSR itself will not apply. Why? Because we don't have preceding financial year. Understanding. If you are in the first year, CSR itself will not apply. Okay. So this is it about the provisions, guys. Now let's write down the, I'll straight away go to the analysis. I will not write any facts of the case over here, because the only fact over here is how much net profit company has. No point of writing that. So let's come to the next point now. Come to the analysis part. Write down. Applying the above provisions in the given case, under the side on the first point, current financial year in the question is 2020, 21-22, is 21-22. Next line, write down. In the preceding financial year, that is 2021, comma, net profit before tax, underline that, net profit before tax of the company is rupees 7 crores, comma, which exceeds rupees 5 crores. Hence, yes, CSR obligation is applicable to the company in financial year 21-22. Is applicable to the company in financial year 21-22. Okay. Then write down the next point. So this was about whether CSR is applicable or not. Now that we've concluded that CSR is applicable, we will do the 2% calculation. So write down. One second. Yeah. Write down next line after this. As the company has been in existence for only 2 years, comma, minimum amount to be spent mandatorily on CSR shall be 2% of average net profits before tax, underline net profit before tax of preceding 2 years. That is, next line, write down 2% of, what is last 2 years numbers? 5 crores and 7 crores. 2% of 5 crore plus 7 crore divided by what? Divided by Last 2 years average only I'm doing. So this is going to be 2% of 6 crores, which is going to be rupees 12 lakhs. Okay. Now, can we talk about one small point? What if we have a loss over here? What if year 1 it was negative 5 crores? You will take the negative number. So negative 5 crore plus 7 crore will be what? 2 crore by 2. So what will the average net profit be? 2% of 1 crore. You're understanding? If one of the years it is a loss, then I will still consider that loss number also in my computation. So accordingly, my average profit will change. Did you listen to this? But what if it is 5 crore and what if it was like this? What if it was negative 15 crore and 7 crore then? What's the net number? Net number is negative 8 crore. So 8 if the net number is negative, then no CSR. Understood? Yes, guys. If 1 year, if we have a negative number, what will you do? Any year, if you have a negative number, you consider that negative number, it's okay. But can your net number be negative? No. Your net number should not be negative. If that is negative, then no CSR for that year. Okay, guys. So this is my minimum CSR requirement, 12 lakh. That's all. Go to the conclusion now. You are required to advise the company in this regard. Compute the minimum amount to be allocated. Write down thus. Point 1. Yes, it is mandatory for Skip Limited to comply with CSR. And next point, write down. Minimum amount to be spent on CSR in financial year 21-22 is rupees 12 lakhs. All right. That's all, guys. Simple question on CSR. With this, now I'm content, at least with respect to CSR, we've done a very good coverage. Yesterday we saw one question. Today we've seen one question. Can we close this discussion on CSR? Can I take you to the next question? Now we have 5 more questions. These 5 more questions, we have one question from LLP Act. We have 2 questions from companies incorporated outside India. And we have 2 questions from FEMA. Last 5 questions, guys. Let's take them up one by one. Listen to my next question first. The next question is from your LLP Act. Let me explain the concept to you. See, whenever we incorporate the LLP's name should not be identical or similar to the name of another company. It should not be identical or similar to the name of another LLP. It should also not be identical or similar to the name of another registered trademark. If it is similar to any of these, then the central government will ask the LLP to change the name within how much time? To change the name within 3 months' time. Alright, simple point that LLP's name should not be identical or similar to the name of a company, LLP or registered trademark. If it is similar, then the central government will ask the LLP to change the name within 3 months. And if it is similar to the name of a registered trademark, then central government will take action only if the proprietor of the trademark has complained to the central government within how many years? Within 3 years. Understanding? I'll repeat one last time. Whenever the company or whenever the LLP's name is identical or similar to the name of a registered trademark, the central government will take action only if the owner of the trademark complains to the central government within 3 years. Which means if the name is similar to the name of company or LLP, will the central government wait for anybody's application? No. Central government will take action suo motu on its own. But however, if the name is similar to the name of a registered trademark, can central government take action on its own? No. Central government can take action only if the owner of the trademark has filed an application with the central government within 3 years, then only central government can take action. Got it, guys? This is the point. Now read the question. Messrs. Vardhaman Steels LLP was incorporated on 1st September 2022. On 1st Jan 2023, one partner of a partnership firm named Messrs. Vardhaman Steels is registered with Indian Partnership Act since 1st Jan 2000, requested ROC that as the name of the company is as the name of the LLP is nearly resembling the name of the already registered partnership firm, the name of the LLP should be changed. Explain whether Messrs. Vardhaman Steels LLP is liable to change its name under the provisions of LLP Act. What do you think? The name of the LLP is identical or similar to the name of another partnership firm. Do they have to change the name? No. They will have to change the name only if the name is similar to the name of another company, LLP or registered trademark. Okay. Let's write the answer, guys. Come on, let's begin. Give the question number 26. Under this, write down. Give the heading. Name of LLP. Write the provisions first. The following are the applicable provisions of LLP Act 2008. Write down the points one by one now. First provision. The name of an LLP should not be, comma, in the opinion of central government, comma, undesirable or identical to or resemble the name of another existing company or LLP or dash. Next line, write down. If the LLP has been registered with such an identical name, comma, then the central government may direct such LLP to change its name within dash months from the date of issue of direction. Fill in the blanks, guys. Guys, what did you fill in over here? Did you write trademark or did you write registered trademark? It makes a difference. You should write registered trademark. Okay. And here, within how many months LLP has to change the name? Within 3 months. Guys, listen, I have a small question for you, okay? Let's see if you can answer this. Does an LLP, when this LLP is formed, that time the name of the LLP is not identical, it is not similar to the name of another company and all, it's a proper name only. Then later this LLP changes its name, guys. That name is identical. Now also will there be a problem? Will they ask LLP to change the name? Original name was proper. The new name that they changed, that new name is identical to the name of another company, identical to the name of another LLP, identical to the name of another registered trademark. Will they ask the LLP to change the name? Yes, guys. Yes, the same provision will apply to the original name of the LLP also, to the new name of the LLP also. When the LLP was incorporated, at that time it was incorporated with what name? To that name also this provision will apply. Later, if LLP changes the name to the changed name, to the new name also, the same provision will apply. Remember, okay. Continue writing now. That's it about the provision. We've written that the name should not be identical or similar to the name of another existing company or LLP or registered trademark. And we said if it is similar, then central government will direct the LLP to change the name within how much time? To change the name within 3 months' time. Now let's write down the facts of the case. Here, next line, write down. Messrs. Vardhaman Steels LLP, LLP's name resembles the name of another partnership firm, Messrs. What's the name of the partnership firm? Messrs. Vardhaman Steels. Messrs. Vardhaman Steels. Next point, write down. A partner of the partnership firm has requested ROC for ordering a change in LLP's name. Okay, this is the facts of the case. Let's write the analysis now. Applying the above provisions in the given case, write down one by one. Point 1. The LLP can be directed to change its name only if the name resembles the name of another LLP or company or registered trademark. Next line, write down. Here, as the name of the LLP only resembles the name of another partnership firm, Messrs. Vardhaman Steels LLP need not change its name. Then write down thus. Come to the question, see exactly what they're asking us. Explain whether Messrs. Vardhaman Steels LLP is liable to change its name. Answer to the point, thus no. Same language please use. No. Messrs. Vardhaman Steels LLP is not liable to change its name. Is not liable to change its name. Done, everybody? So this was it about question number 26, which is talking about LLP's name. All right, LLP's name should not be identical to the name of another LLP, company, or registered trademark. All right, so that's it with this part of our discussion. Now let's go to the next discussion, which is question number 27. Question 27 and 28 are relating to this concept on this chapter, companies incorporated outside India. We'll discuss both the questions. Just give me one moment. Yeah. Listen, let me begin. See, there's one small clarification I want to give you all. Yeah, listen to me. I'll explain it to you over here. There's a similar provision you remember learning in Companies Act as well. What we just now learned under LLP Act. Something similar is there in Companies Act also. But there are some differences. I want to point the differences out for you. See, for company, the name of the company should not be identical or similar to the name of what? To the name of another company, to the name of another registered trademark. Do you talk about LLP here? No. When we talk about LLP's name, however, the LLP's name should not be identical or similar to the name of another company, registered trademark, or LLP. Is this difference clear, first of all? Another difference, second difference. When you talk about company, if the name is similar to the name of another company, if the name of the company is similar to the name of another company, then in that case, the central government can take action suo moto. Suo moto means what? Central government can take action on its own if the name happens to be similar to the name of another company. Nobody's application is required. But if the company's name is similar to the name of another registered trademark, central government cannot take action on its own. What is required? Application is required, and that application has to be made within how much time? Within 3 years from the date of incorporation of the company. Till here, did you understand? Company's point of view. Guys, please answer. I'm trying to make one very important point over here. Now, can we shift our focus to LLP? In LLP, the name of the LLP should not be similar to the name of another company, registered trademark, or LLP. If it is similar to the name of a company, if it is similar to the name of an LLP, if it is similar to the name of registered trademark, can central government take action suo moto? In all the three, central government cannot take action suo moto. In all the three, what is required? Application is required. In all the three, application is required. Only then central government will take action. But where do you have the 3 years point? You have the 3 years point only for registered trademark. If the name of LLP is similar to the name of registered trademark, the owner of the trademark has to complain to central government within 3 years from the date of incorporation of LLP. Do you have the 3 years point in the first two places also? No. Small, tiny difference, guys. Not tested till now, but these kind of points better to be careful about. You got the point? In LLP, everywhere application is required. Everywhere suo moto is not possible. Everywhere application is required. But the point is that only for registered trademark alone, the application has to be made within 3 years. Application who will give? Who will give the application? This entity will give the application. To whom they will give the application? To ROC, to central government. To these people, the application will be given. To ROC. Alright. Once we give it to ROC, it's as if we have given it to the central government for this purpose. Now there's no confusion, right? I've tried to compare Section 16 of Companies Act for you with similar provision which is there in LLP Act. Alright, in the examination you will write application has to be made to whom? Application has to be made to central government. You will not write ROC. ROC is practically, but from the examination point of view, the bookish point of view, we will make application to whom? Application to central government. Whenever we make application in this regard, we make application to central government. Okay, so point number 1, the company's name should not be identical or similar to the name of another company. It should not be identical or similar to the name of another registered trademark. If it is similar, then the central government will ask the company to change the name. If it is similar to the name of another company, central government will suo moto ask the company to change the name without waiting for any application. But if the name is similar to the name of another registered trademark, then central government will not act suo moto. Instead, application has to be made to the central government by the owner of the trademark. Application has to be made within 3 years from the date of incorporation of the company. Then coming to LLP, in LLP, the LLP's name should not be identical or similar to the name of another company or trademark or LLP. 3 things. And if it is similar, central government cannot take action suo moto. Central government will take action only if this entity is making an application to the central government. They can make application whenever they want. Only for registered trademark, how much time limit we have? Only for registered trademark, 3 years time limit we have. Now, Pakka. Hari Krishna, clear? Everybody got the clarity? Yes, I've given you revision as well of this point. I hope I can take you forward to the next discussion now. Come to the next question, everybody. The next question is a question from companies incorporated outside India. What if LLP doesn't comply? Tell me, what happens? If the same provision in both, if company doesn't comply with the direction, central government itself will change its name. If the LLP doesn't comply with the obligation, same thing. Central government will itself change the name. Now that changed name, can this entity again ask for changing? That changed name, can they alter again? Yes, they can alter again by following the usual procedure given in the Companies Act. Same provision. In Companies Act, what provision you have? No. Same provision you have. That point is common between both. The point is that if the LLP is not changing its name within the 3 months' time, or if the company is not changing its name within the 3 months' time, then central government itself will change its name. And once central government changes the name, if you don't like that name, of course you will not like the name. If central government changes the name and if you don't like the name, if you want to alter your name again, you can alter. But now if you want to alter, the usual procedure which is given in the law, that procedure you have to follow. Following that procedure, you can again change your name into whatever you like. Okay, now come on everybody, come to the next question. Come to question number 32, everybody. 20, not 32, sorry, what am I saying? 27, question number 27. This question is from companies incorporated outside India. Fine publishers registered in Tokyo began operating in India during financial year 2009. The question then says the company has duly submitted all the necessary documents to the registrar within the specified due date. On 1st March 23, Fine Publishers has shifted its principal office in Tokyo. Is Fine Publishers required to undertake any steps due to change in address of principal office? Give your answer in reference to the provisions of Companies Act 2013. I'll explain the point to you guys. I'll explain it to you in very simplified form. One explanation itself, definitely you will understand. See, first of all, what do you mean by a foreign company, guys? Foreign company means you must be a company which is incorporated outside India, but you must be having some place of business in India. And from this place of business in India, you must be carrying on some business activity. Guys, does everybody agree? 3 conditions, guys, you must be knowing very well. From CA foundation time, you're learning this. Yes. So once again, tell me, what do you mean by a foreign company? Number 1, it is incorporated outside India. Number 2, it has a place of business in India. And number 3, from this place of business in India, it is doing business activity in India. And I hope you know that this place of business in India need not necessarily be a physical place. It can be digital presence. It can be electronic presence. It can be online presence also. Yes. And you also know that this place of business will also include the share transfer office. I hope you're aware of it. The place of business will also include the share transfer office, the share registration office, share transfer office, share registration office. All that also comes under place of business in India. Okay, guys. Now listen, look at this. And one more thing. If you're a foreign company, there are some sections which will apply to you. Section 380 tells you if you're a foreign company, you're having a place of business in India. No. As soon as you start this place of business in India, as soon as you establish this place of business in India, within 30 days, you have to file form number FC1. You have within 30 days, you have to file form number FC1 with the ROC. Which ROC? ROC Delhi. ROC Delhi, and you have to submit some details in FC1. What details? You remember yesterday in CSR discussion we learnt about authorized person in foreign company. That person who's a resident and he will receive the documents on behalf of the company. In CSR committee composition, I had spoken to you about it yesterday's class only. If it's a foreign company, in a foreign company CSR committee, who and all has to be there? Number one, we will have a nominee of the foreign company, and number two, we will have this authorized representative. He is going to be a resident and he is going to receive notices on behalf of the foreign company. Whatever is served to the foreign company, he will only receive. So this authorized representative, all his details will be there in FC1, guys. In India, where is your place of business? That details will be in FC1, guys. You've been incorporated outside India, no? So your main office though is outside India. Where is your main office situated outside India? That details will be written over here. So all these details will be written over here in FC1 and it will be submitted to ROC Delhi within 30 days of establishing the place of business in India. Now, don't you think FC1 may require changes? What if this authorized representative we are changing? What if the place of business in India we are changing? What if the main place outside India we are changing? So, if any change happens, that change also we have to inform ROC. Within 30 days, we have to inform ROC about the change in form number FC2. That's all, guys, what the provision is. You understood? FC1 we will file when we come to India. After coming here, any change happens, we have to inform that also to ROC Delhi in FC2. Okay, now read the question again. Fine publishers registered in Tokyo, which means it is incorporated outside India. Condition 1 fulfilled. It began operating in India. It means it has a place of business in India and it is doing business activity in India because it is operating in India. So, which means I can conclude that Fine Publishers is a foreign company. Everybody, yes or no? It's a foreign company. Company has submitted all the necessary documents to the registrar. To which registrar they would have submitted? To Delhi registrar they would have submitted. Within the specified due date, within how much time they would have submitted? Within 30 days they would have submitted. In what form they would have submitted? FC1 they would have submitted. Then what happened? On 1st March 23, Fine Publishers has shifted its principal office in Tokyo. Which office? Outside India incorporated. No, main office is outside India only. That principal office in Tokyo they shifted. So should they inform ROC? Yes, they should inform ROC. Within how much time? Within 30 days time. To which ROC? Delhi ROC. In which form? Form FC2. That's all. Is Fine Publishers required to undertake any steps due to change in address of principal office? Give your answer in reference to the provisions of Companies Act 2013. All right, everybody. Now you tell me what and all we should write in the answer. I will not straight away start writing about all this. I will first of all explain what is a foreign company. Then I will write about FC1. Then only I will write about FC2. Okay, come on. I'll show you the answer, guys. Give the heading. We'll write the perfect answer to this question. We'll write it very nicely right along with me. Question number 27. Give the heading. Change in principal office of foreign company. Change in principal office of foreign company. Under this, write down. The following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, write down point 1. First, we'll explain what a foreign company is. Write down a foreign company. A foreign company means any dash or dash incorporated dash India, which has a dash in India, whether by itself or through an agent, comma, physically or through electronic means, and conducts business activity and conducts business activity in India. Fill in the blanks. A foreign company means any company or body corporate incorporated outside India which has a place of business in India. Then write down the next provision. As per section 380, within dash days of establishing place of business in India, comma, the foreign company shall deliver specified documents for registration along with applicable fees to the ROC who has jurisdiction over dash inform dash. Fill in the blanks, please. As per section 380, within 30 days of establishing place of business in India, foreign company shall deliver specified documents for registration along with applicable fees to ROC who has jurisdiction over New Delhi in form FC1. Then write down the next point. The specified documents also include full address of the company's registered office, full address of the company's registered office or principal office outside India. Nice provisions we've written. We first explained who is a foreign company. Then we said that this foreign company within 30 days FC1 has to be filed. Then we said FC1 also includes principal office, registered office details. Then last provision, what will we write? Any change? Inform to ROC within 30 days FC2. Write down to alter any of the documents filed with ROC, comma, ROC shall be informed about the same within dash days within dash days by filing form dash and prescribed fees. Fill in the blanks. We should inform within 30 days by filing form FC2 and prescribed fees. If you don't know the form number, will you be worried? You will not be worried. You will simply write prescribed form. Okay? Don't unnecessarily pressurize yourself with unnecessary things. Don't know the section number, it's okay. Don't know the form number, it's okay. Just write prescribed form and keep moving on. Getting my point? Don't worry about all these little things. Okay? So this is it about my provisions part. I'll straight away go to the analysis in this question. Write down applying the above provisions in the given case, comma. First, we'll identify. See, I'll give you one small tip, okay? Whenever you get lost in the answer, how to write analysis, when you start wondering, you can straight away take guidance from your main answer. Provisions you've written, no, go in the same sequence. What is the first provision you wrote? That what is a foreign company? So, same thing in the analysis. We will try to understand, we'll try to identify that. Fine Publishers is a foreign company. I'll show you right down. For first point, Fine Publishers. Fine Publishers is a foreign company as it is incorporated outside India. In brackets, write down Tokyo and is operating in India. Then next point, what did we write in the provisions? We said that within 30 days, we will be filing documents, including the details of principal office. So about that, we'll write in the analysis. Write down, hence, the provisions outlined above relating to filing documents with ROC and also notifying ROC about changes therein shall apply to fine publishers. Then write down thus upon change in company's principal office in Tokyo, comma, yes, fine publishers shall notify ROC New Delhi within 30 days in FC2. In FC2. Done, everybody? So this was it about this foreign company question. I wanted to give you this question specifically because this question touches upon section 380. Section 380 is one of the most important sections in your foreign companies discussion. All right, you understood the whole point? When we establish the place of business in India, we inform ROC within 30 days, form FC1. Any change, again we have to inform ROC within 30 days, form FC2. And it's always which ROC? For foreign company, no seeing state ROC and all. For foreign company, it's always Delhi ROC only. Okay, so that is it with this question, guys. A good answer we've written. Let me take you to the next question now. Can we go to question number 28? Come, guys, come to question number 28. Last three questions. Let's not take a pause in between, please. Let's continue writing. Let's do this. Just last three questions. Come on, everybody. Question number 28. Companies incorporated outside India. Second question. Examine whether the following can be considered as foreign companies or not. A company incorporated outside India having share registration office at New Delhi. Can I call this as a foreign company? It is incorporated outside India. It has a place of business in India. Just now I told you, share registration office, share transfer office is considered as place of business in India. So it is incorporated outside India. It has a place of business in India. If it is carrying business activity in India, they haven't mentioned about that. So if it is carrying on business activity in India, then yes, I can consider it as a foreign company, guys. It is incorporated outside India. It has a place of business in India. If it is carrying on business activity, it will be considered as a foreign company. Then, company incorporated outside India having shareholders who are all Indian citizens. It is incorporated outside India, but tell me, does it have a place of business in India? Is it carrying on business activity in India? No. Who are the shareholders? I don't care about this. The fact that all shareholders are Indian citizens, that doesn't matter to me. Foreign company means what? It should be incorporated outside India, place of business in India, business activity in India. How many conditions? Three conditions. Do those three conditions include even who the shareholders are, citizens, non-citizens and all? No. Last point. Company incorporated in India, but all the shares are held by foreigners. Companies incorporated in India, you will be Indian company. You will not be a foreign company. Three subdivisions, guys. Come on, let's write down the answer. First, see what we'll do is, first we'll write a common answer that what is a foreign company. Then we'll write each of them separately. Otherwise, what is foreign company? Three times we will have to write. So instead, you understood what I'll do. I'll write a common answer first, what is a foreign company. Then I'll take each of these subdivisions one by one. Okay. So write down answer to question number 28. Give the heading foreign companies. Under this, write down the following are the applicable provisions of Companies Act 2013 and corresponding rules. Under this, write down the first point. A foreign company means any dash or dash incorporated dash India which has a place of business in India, whether by itself or through an dash, comma, physically or through dash means, and conducts dash in India. Fill in the blanks. A foreign company means any company or body corporate incorporated outside India, has a place of business in India, whether by itself or through an agent, physically or through electronic means, and conducts business activity in India. Then next point, write down place of business includes share transfer office and share registration office. So this was a common provision. Now we'll write the subdivisions one by one. Write down the first subdivision. First subdivision, it was incorporated outside India. It has a share registration office also in New Delhi. Write down as the company is incorporated outside India and has a share registration office in India, comma, it will be considered as a foreign company provided it conducts business activities in India. Provided it conducts business activity in India. Okay, this was your first subdivision. Now come to the second subdivision. In the second subdivision was pretty simple, guys. Incorporated outside India, shareholders are Indian citizens. I don't care about who the shareholders are. You are incorporated outside India. Only if your place of business is in India and if you have a business activity in India, only then I will consider you as a foreign company. So write down a company incorporated outside India will not be considered as a foreign company just because all shareholders are Indian citizens. That is citizenship. Now look at this. That is citizenship of shareholders is irrelevant. Citizenship of shareholders is irrelevant. Okay, this was the second subdivision. Now come to the last subdivision. Last subdivision, it is incorporated in India, guys. It's an Indian company. It's definitely not a foreign company. So write down the third subdivision. A company incorporated in India is an Indian company irrespective of who the shareholders are, it will not be considered as a foreign company. A company incorporated in India is an Indian company. Irrespective of who the shareholders are, it will not be considered as a foreign company. Alright, that is it with this question. Now, can I take you forward? Guys, foreign company, both the questions are clear, right? First question was about section 380. Second question is helping you identify when it is a foreign company. Remember the share registration office point and the share transfer office point. Okay. Come to the last two questions now. Both the questions are on FEMA. Can I give you a quick discussion first? All right. And then I'll give you the concept. Listen to me. First question is pretty simple. Second question requires LRS knowledge. I will explain that also to you. First, let me explain to you question number 29. Question says Miss Prabha, a classical dancer of Bharatanatyam, wants to go to the US for a performance. In this connection, she requires foreign exchange drawal of 50,000 US dollars. Explain to Miss Prabha the provision of FEMA in respect of permission required for such drawal of foreign exchange. Whose permission is required? Guys, when it comes to FEMA, your most important in your FEMA discussion, apart from residential status is of course important. Apart from residential status, your current account transactions, your capital account transactions is extremely important. You will definitely be having a question from there. You should know which transaction falls under which schedule and whose approval is required. This guys here, she wants money because she wants to go to US for a performance. So which concept comes into the picture over here? Cultural tour, guys. Cultural tours, you need whose permission. It comes under which schedule? It comes under schedule 2. So schedule 2, you need central government approval. Under central government approval, Ministry of Human Resources and Development, Department of Education and Culture, you require central government approval. Let's write that down. Answer to question number 29. Give the heading. Drawal of foreign exchange for a cultural tour. Under this, write down. According to the provisions of Foreign Exchange Management Act 1999, comma, read with schedule 2. Here it's schedule 2. You only told me central government approval, schedule 2. Schedule 2 of what? Schedule 2 of foreign exchange management. In brackets, write down current account, current account transactions, close brackets, rules 2000, comma, foreign exchange drawals for cultural tours, underline cultural tours, require prior approval of the central government, that is Ministry of Human Resources Development. In brackets, write down Department of Education and Culture, close brackets, comma, now called Ministry of Education. Next line, write down here. Miss Prabha can draw $50,000 for her cultural tour in US with prior approval of the above ministry. Then guys, listen to me. This next point, students are not writing only. This next point which I'm going to be giving to you over here, it's a common answer, guys. Common point. In every drawal point, current account transactions, drawing money for that. Capital account transactions, drawing money for that. In every transaction where you're writing that yes, you can draw. Wherever you're, like here also you're writing that yes, you can draw with central government approval, you can draw. So wherever you are allowing the drawal of foreign exchange, you have to write one common point. I'll put it for you over here. Remember to put it in every FEMA answer, okay? Write down. In all cases where remittance of foreign exchange is allowed, comma, the remitter shall obtain the foreign exchange, comma, from an authorized person only. Underline authorized person. What does this mean? We are saying that yes, you can take foreign exchange. Now, from whom should you take foreign exchange? You should take foreign exchange only from an authorized person. You got it? Yes, in all cases, wherever remittance of foreign exchange is allowed, the remitter shall obtain the foreign exchange from an authorized person only. Okay, that was it about this point. Now, let me go to the next question for you. The next question requires some knowledge on LRS. 2 minutes it will take us. Let me discuss that with you. Simple point. I'll explain it to you in very simple words. One explanation itself you will understand. I'm talking to you about liberalized remittance scheme, LRS. This liberalized remittance scheme, answer my question, was brought by whom? RBI or central government? Liberalized central scheme was brought in by RBI. Why? Because RBI got irritated. Small transactions, people are coming and asking for RBI approval. Even in current account transactions, you have RBI approval, guys. Even in capital account transactions, you have RBI approval. So small transactions, people are coming and asking RBI for approval. RBI's work got increased. So RBI, to make their work simpler, they brought the concept of liberalized remittance scheme. Liberalized means what? Freedom. You want foreign exchange, take. Freedom, full freedom, take how much ever you want, up to a certain limit. So what RBI said under liberalized remittance scheme is that, first of all, you must be an individual. And that too, you must be a person who is resident in India. You want to draw foreign exchange for current account transactions, which are mentioned in Schedule 3. Schedule 3 only is RBI approval, no? Or you want money for capital account transactions, which are mentioned in Schedule 1. So basically, wherever, one second. Yeah, so basically, wherever RBI approval is required, that only will come under LRS. Central government approval will not come under LRS. So wherever you require RBI approval, for these purposes, if you want to draw money, total put together, if you're drawing within $250,000, not rupees, $250,000 if you're withdrawing, then RBI approval and all is not required. So RBI is following through LRS what you learn in audit materiality. That is what RBI is doing. RBI is saying up to $250,000 if you are drawing foreign exchange, small amount, I don't care. More than $250,000 if you are drawing, then you tell me, I have to give you approval. Did you understand? Very simple, guys. You understood. That's all, guys. I am an individual and I'm a PRI. And I'm drawing foreign exchange either for current account transaction or capital account transaction, which requires RBI approval. What is RBI telling me? How much are you requiring? $250,000 only. No need RBI approval. Okay, but however, inside current account schedule 3, you have 3 special points, guys. Number 1, you're drawing money for medical treatment. Number 2, you're drawing money because you are emigrating. Emigrating means you're migrating to another country, from India to Canada, from India to France, from India to Germany. Or you are drawing money for studies abroad. For these 3 purposes, what are the 3 purposes you understood? Medical treatment, emigration, studies abroad. For these 3 purposes, even if you are drawing more than $250,000, but within the applicable estimate, which estimate? You're going to Singapore for medical treatment. Now you will go only after taking an estimate from the hospital, know that how much money you have to spend. Hospital will give you estimate of the expenditure, that estimate. If you're going to Germany, Germany will tell you that how much money you have to bring to Germany. So that estimate. If you're going to Oxford University to study, Oxford University will give you an estimate that how much fees you will have to pay. So if you're drawing foreign exchange more than $250,000, but within the estimate, then also RBI approval is not required. Generally, the limit is $250,000, but if you're drawing foreign exchange more than $250,000, but within the estimate, then RBI approval is not required. Tell me, everybody, did you understand this? Yes, guys. Point number 1, you have to be an individual who is a PRI. Point number 2, we will talk only about those transactions which require RBI approval. Total for those transactions, how much foreign exchange you're drawing? $250,000 you're drawing. Up to $250,000, any RBI approval required, RBI approval is not required. And however, current account transactions, 3 current account transactions I'm talking about: medical treatment, emigration, studies abroad. For these 3, even if you're drawing more than $250,000, but if it is within the estimate, then RBI approval is not required. Okay, guys, with this in your mind, come to this question. Mr. Pravesh, an Indian national, desires to obtain foreign exchange for the following purposes. $140,000 for studies abroad on the basis of estimate given by foreign university. Tell me whose approval he needs over here. Whose approval he will need over here, guys? Studies abroad is coming under which schedule? First of all, current account transaction. Always go step by step. Current account transaction or capital account transaction? It is a current account transaction. Inside current account transaction, is it schedule 1, schedule 2, schedule 3? It's a schedule 3 current account transaction. Schedule 3 means RBI approval, guys. RBI approval means now I will think about what? Now I will think about LRS. You're understanding the sequence of thinking. First, it's a capital account transaction or current account transaction. It's a current account transaction. Schedule 1, 2, 3, Schedule 3. Schedule 3 means RBI approval. Whenever I talk about RBI approval, simultaneously I will talk about LRS. Is it within $250,000? Yes. It is also within the estimate. It is also within $250,000. Hence, nobody's approval is required. What if it was $340,000? Then whose approval is required? What if it was $340,000? Then also no approval required because it is within the estimate. If it is within the estimate, whatever be the amount, nobody's approval is required. You understood, everybody? Yes, and what about the second transaction? 10,000 for remittance towards hiring charges of transponders. This point, current account transaction, capital account transaction, hiring charges of transponders. You must have seen this. You must have seen this in current account transaction. In current account schedule 1, 2, 3, it will come under schedule 2. Schedule 2 means central government approval. Can you apply LRS? Can you apply LRS? No. So schedule 2, in schedule 2, whose approval you require here? Ministry of Information and Broadcasting. Okay, let's write down the answer, guys. Last answer, let's write it nicely. Don't be lazy, write with me. Come on, answer to question number 30. give the heading drawal of foreign exchange. Two subdivisions, guys, two independent answers we will write. First point, guys, first point, LRS and all is applicable, so you have to write about LRS. So write down under liberalized remittance scheme of dash, comma, individuals who are persons resident in India, comma, can draw foreign exchange, comma, without RBI approval, for transactions mentioned in Schedule 3 of Foreign Exchange Management, in brackets write down current account transactions rules 2000 and Schedule 1 of Foreign Exchange Management, Schedule 1 of Foreign Exchange Management, permissible capital account transactions, regulations 2000. Guys, listen to me. For current account, we have Schedule 3 of Foreign Exchange Management, current account transactions rules. Are you noticing? For capital account, you have Foreign Exchange Management, permissible capital account transactions regulations 2000. You got to be careful. You can't mix them up. See, in current account transactions, Schedule 1 prohibited, Schedule 2 central government approval, Schedule 3 RBI approval. In capital account, Schedule 1 permitted, Schedule 2 is that those transactions on which we can't put any restrictions, and Schedule 3 is prohibited. So you should write the schedule number and the name, whether it is rules, whether it is regulations. So what I've highlighted for you over here, word to word has to be written rules for current account, regulations for capital account. Okay, then write down next line item, write down but RBI approval is required if aggregate of such transactions exceed how much? Exceed dollar dash, not rupees, guys, dollar 250,000. And fill in this blanks also. LRS is whose scheme? RBI scheme, central government scheme. LRS scheme of RBI. Then write down the next point. Also, if drawal of foreign exchange, is for studies abroad, comma, the individual may draw more than $250,000 also without RBI approval up to the estimate of concerned foreign university. Up to the estimate of concerned foreign university. Then comes the next point, the last point. In the given case, comma, Mr. Pravesh desires to draw $140,000 for studies abroad as per the estimates of the foreign university. Hence, RBI approval is not required. RBI approval is not required, which means he can draw money. So what's a common point you will write now? I won't be writing it once again, but you know what to write, isn't it? In all cases where drawal of foreign exchange is allowed, the remitter shall obtain the foreign exchange only through an authorized person. Okay, so that authorized person point has to be written. Okay, then comes the last part, the second part. The second part talks about your transponders. Here we said it's a current account transaction. Schedule 2, I need permission of central government, Ministry of Information and Broadcasting. So write down the second part. Mr. One second. Remittance for hiring transponders by TV channels and internet service providers falls under Schedule 2 of, tell me, current account transactions, rules or regulations? Rules. Schedule 2 of Foreign Exchange Management, in brackets write down current account transactions, rules 2000. For this, prior approval of central government, that is Ministry of Information and Broadcasting is required. Done, guys? That's it. So that's it with all our 30 questions. Okay, we've written them all, and here also, of course, we will write that common point. In all cases where remittance of foreign exchange is allowed, it will be only through a authorized person. Okay, so we've done all the questions. Now listen to me, everybody. Just 5 more minutes I will take off your time. Just 5 more minutes. Okay, don't write anything. I know your hands are tired. Don't write anything. Whatever I write for you this point onwards is all general things only. I will anyways be putting it for you in the classroom notes as well, this last part. Okay, this last part I will upload it for you. Don't write. Sit back and just listen to me. Okay, see, I told you, I promised you I will be telling you the sequence, right? The sequence in which you are supposed to be learning the day before your exam. Now, the sequence which I tell you might be very different from the sequence which other faculties generally say, but the sequence which I'm telling you is something which is tried and tested over the last few exams since May 2018. I'm saying the same sequence I tell students to follow, and it works every single time. It's a sort of a smart sequence, all right, wherein I'm not focusing on just the important chapters. I'm focusing on the high scoring chapters first, because that is what smart study is all about, where chapters I have less to study but get good number of marks, I do them really, really nicely. So therefore, I will always, like how I told you even yesterday, I will first start with those 4 chapters. Which 4 chapters? Deposits, charges, dividend, and your companies incorporated outside India. In this chunk itself, 18 to 20 marks of your question paper will get covered. If you've seen September 24 exam, there were around 10 marks from companies incorporated outside India. There were 3 questions from here. So this itself will cover 18 to 20 marks. Okay. Then after you finish this, you finish off your LLP Act, because LLP Act is a simple chapter, and you've learned it in your CA foundation as well. So here itself, you will get done with another 10 marks. Okay. After you finish LLP Act, now you come to FEMA and you come to General Clauses Act. These 2 chapters put together, you will be done with another 20 to 22 marks. You will be done. This is the part which you will be doing the bestest manner. You get my point, guys? How many marks are you done with? You're done with 50 marks. Half of your question paper you're done already. Have you completed half of your syllabus? No, you've not even completed learning half of your syllabus, but you've completed half of your question paper. This is the best part of this approach. Less to study, more number of marks covered. Once you finish, this is what I call as category A, most important chapters. Then you come to your prospectus chapter and your share capital chapter. This will be your 4th bucket. Prospectus chapter and your share capital chapter put together will be coming in the examination for around 13 to 15 marks. Okay. Then after this, you first finish in accounts of companies, finish off CSR and books of accounts. Books of accounts, the entire, whatever you have to study in books of accounts, I've put a video already. So you learn CSR and books of accounts, you finish this off. And in auditor's chapter, you finish off the disqualifications. I'm not saying finish full chapter. I'm saying just finish off these concepts. In accounts of companies, CSR and books of accounts, in auditor's chapter, disqualification, just finish this part. Okay. Then you come to MOA AOA chapter, finish that off. MOA AOA. In MOA AOA, I've already told you what is important. Section 20, Section 21, Section 22, alteration of MOA and entrenchment provisions. Then you come and finish off the leftover accounts of companies, finish over the leftover audit and auditors. Okay, this is your category B chapters. Then comes the last category, category H. Here you finish your basic concepts. In basic concepts, the most important points over here are your holding company, subsidiary company, associate company. Then you have a 1% company, you have Section 8 company, you have small company, and listed and unlisted company. This is really important. Finish this off. Then take the incorporation chapter. Then finish the doctrines. After doing all of this, then finish off interpretation of statutes, whatever you have to study. And last only come to management and administration. Okay, management and administration, guys, earlier in 2018, 2019 and all, they used to ask 20 marks and all from here. But of late, they don't ask more than 12 to 14 marks from here. The reason why, yes, no doubt, 12 to 14 marks is big. Even FEMA is 12 marks, but FEMA I'm making you do here itself, because FEMA much less to study for 12 marks. Management and administration for same 12 marks, you have a lot more to study. That is why I'm asking you to put it towards the end. I'm not saying it's not an important chapter. I'm saying this, what I'm trying to say is, because of this chapter, your preparation of all other chapters will get affected. If you've already written a CA Inter exam, you will agree with what I'm saying. When students do this chapter first, they do this chapter very nicely. But because of this chapter, the preparation for all the other chapter gets affected. Everything else you're doing hurry-burry. Instead of doing everything else hurry-burry and doing one chapter properly, what is better? But what is better is doing 80 marks properly, doing 20 marks hurry-burry. Don't you agree with me? So therefore, that is why I always tell students, do management and administration towards the end. And if you actually are listening to me, I'm very sure I'll be making good amount of sense to you. So this is the sequence in which I want you to follow. All right. Now, I want you to listen to some important points. I have also given already on my Telegram channel Signi 50 and Second 50. Now, what is this? This is the top 50 concepts and this is the next 50 concepts. Okay, so Parvana, you will find all that over here. In each chapter, what are the most important concepts I have put over here. So I'm not saying do only total how many concepts, total 100 concepts. I am not saying do only these concepts. I am saying do them better, do them nicely. So what I'm saying is do these 100 concepts really nicely. I'm not saying don't do everything else. I'm not saying skip everything else. I'm saying these 100 concepts do really nicely. And whatever concepts we've covered in our 30 questions, whatever questions we've done together, these are like the top 30 questions. I'm not saying these are top 30 questions only. These are top 30 concepts. All right, guys. Now, so this was one thing I promised you I will do for you. Then apart from this, I also told you I will be telling you the important penalties. Now, the important penalties, number one, annual return penalty. I've already discussed that with you. Then number two, your section 127, your dividend penalty. Even that I've already discussed with you. Then number three, there is a very important penalty relating to resignation of auditor. When the auditor resigns, how much penalty he has to pay. So resignation of auditor, if he doesn't, he's supposed to inform the company, he's supposed to inform the ROC. Doesn't inform on time, he has to pay penalty. That is important. Then number four, section 447 penalty. This is really important. Then apart from this, you have this penalty in section 10A. Section 10A you will find in the incorporation chapter in your syllabus. So section 10A incorporation chapter, here you will find an important penalty. Then apart from this, in your accounts of companies chapter, you will find a penalty that what if the books of accounts and all are not maintained properly. If they are not maintained properly, 4 people will be punished: managing director, CFO, whole-time director in charge of finance. So that penalty, what if the books of accounts are not maintained properly? So there you will see an important penalty. So these are the 6 I will say are important. And one more thing, be prepared. From LLP Act, they will ask a penalty. Okay, and you will not know it. Be prepared. Because LLP Act, there are too many penalties. Don't spend too much time. Be prepared to not know a penalty from LLP Act. Yes, they will ask a penalty from LLP Act, but it is not necessary that you will know it. There are too many penalties in LLP Act. So if possible, try to see them. Try to see it last just before entering your examination hall. Try seeing these LLP Act penalties once. All right. So these are what I would say are, the category A penalties. Don't miss these penalties. And one more thing, do not misinterpret this. This is not ABC analysis. You're listening to me? Just because I put it in 3 columns, these are not ABC analysis. There are no ABC analysis for chapters. There is ABC analysis only for concepts. Like, you're getting what I'm saying? Like exclusions of deposits, category A concept. The different types of companies here, holding, Section 8 company, category A concept. Then in interpretation of statutes, your primary rule, your literal construction is a category A concept. In prospectus chapter, private placement, it's a category A concept. You have category A concepts, you don't have category A chapters. Okay, so what have I put over here? I have put over here the sequence in which you will be studying these chapters. All right, everybody, I really hope you all got benefited in some way or the other through the writing practice. Should have understood how exactly to write some very important questions you've seen. I hope it's made some difference to you. So go out there, get nice exemptions, and come back. Bye bye, guys.